right, let's talk about what's happened in the United States, and it's a seesaw, if at all. The same set of investors who were very excited about NVIDIA results and saw the start of trade in a positive trend saw all of those trades reverse, with the NASDAQ the worst hit. So the US markets did tumble from highs in trade as the AI trade reversed sharply, 2% down on the NASDAQ at least. The NVIDIA stock itself, after better than expected numbers, after very positive commentary, also closed 3% down. It's not just, I would say, AI stocks. Delayed data for jobs which came out was a bit of a mixed bag. It showed 119,000 jobs added in September. That's versus an expectation of 50,000. So that's much better. But the unemployment rate for the month of September came in at 4.4%. That's the highest in 4 years. Bond yields moved lower on that data. The 10-year was at 4.09%. And of course, now there is more confusion and question marks over what the Fed will do in December. Bitcoin has also dropped to its lowest level in 6 months as that tech rally reverses. What's happening now is that cryptocurrencies and tech stocks seem to be moving in tandem, in direction. Last rate for cryptos was at 86,690. So you're about the 86,000 levels, I think the lowest in 6 months as far as Bitcoin is concerned. Oil prices are staying soft as US is pushing for a trade deal. Brent at $63 levels. And let's pull up Asia. Asia had opened mirroring what's happened in Wall Street. You had the SoftBank stock, for example, down 7-8% and continuing to be quite hit. The Nikkei down about 2%. Even though in Japan you've had great export data coming in, which has beaten expectations, but you've seen the Hang Seng and the Shanghai down. Meanwhile, if you look at the India implied, it seems to be moving to a flat start. This was worse, say, half an hour ago, but we look like we're moving to a bit of a muted start, 11 points down. So all of those hopes, guys, of an all-time high, because we're so close, right?
Yeah.
You're so close. And I don't know if it'll happen, it'll not happen, but it seems more difficult right now. Don't break out the party hats yet.
Yeah, but you know, the interesting thing is also because if anything is to be blamed for the all-time highs not happening this morning, it has to be what the NASDAQ did, right? And money seems to be betting against what Jensen Huang said yesterday, because the Bank of America's November Fund Manager Survey shows that the respondents overwhelmingly believe that the most crowded trade right now is long Mag 7 shares, and the biggest tail risk is an AI bubble. So you know that money, when it gets a chance, will pounce upon a short AI, short Mag 7 opportunity, and that will create a little bit of a pressure on world markets by and large. No reason for India to maybe start off lower, no reason for Japan to be so low, but because NASDAQ has done what it has done, you will see that downtick.
I think over the last few months, we moved progressively to this point where initially the conversations were talking about that 30% in the S&P 500 for the top 5 basket of stocks. And then now we're talking about any opportunity to short and move lower. So
at least money seems to be believing that.
We've
right?
reached that point now.
Yeah.
So and also the factor of heading into the end of the year and those holidays that come in, a lot of portfolio managers will look to defend their books. So you could see aggressive selling heading into that season. So what you're saying actually bears out.
That's a very good point, yes.
Bears out. All right, so let's talk about what happened in trade yesterday. And you had gains of about 0.5% that were aided by the benchmark heavyweights. And you saw foreign institutions that remained a net buyer for a second straight session. The benchmark, by the way, has gained in 8 out of the last 9 sessions. It may not have seemed that way because the gains have been very small and incremental. But take a look at this. The benchmark Nifty 50 gaining about 2.7% over those last 9 sessions. In that time frame, the Nifty Bank has actually underperformed just a tad bit, 2.5%. But the Nifty IT up about 5.5%, building on the gains from last week, where it gained about 3.6, 3.7% or thereabouts. On Thursday, the benchmark intraday high was just 30 points short of that all-time high. But that Sensex expiry added some volatility in the last hours of trade, and the broader market saw more selling. In fact, particularly towards the last 1 hour of trade, that market breadth worsened sharply in the last hour. In fact, if we can pull up the advanced decline ratio, you will see that in the last bit of trade, there was a gap that opened between the advances and declines, and quite a bit of this was happening at the broader end of the market. A lack of stock-specific news meant that there were no major winners or losers. I think Of course, we've gotten used to seeing 11-15% gains or the other way around for a few stocks during the earnings season. That did not take place yesterday. I guess it's okay to not be used to that.
Yeah, good to get some reality checks once in a while. But, I mean, we've been talking about this, the consistency about 26,000, which is helping the momentum in the market to come up, and the all-time highs are inside. I mean, Tamanna is absolutely right that don't break out the party hats yet, but I wouldn't be surprised if we hit the all-time highs today as well.
And then come off.
Yeah, we may come off. I mean, it remains to be seen. I think the position of the market is not so heavy that we necessarily need to come off, because if you look at the texture of the last 1 month, that the rallies, if anything, are widespread in the very short term, but large caps are leading. So for example, yesterday, 29 out of the 38 sectors which are formally classified as sectors rallied. 29 out of 38, even though you had mid caps and small caps not participating as much as large caps, right? And there are two pockets which are essentially leading this. One is banks. So 4 banks plus 8 banking ETFs are at 52-week highs. So banking as a sector is the one which has performed the most out of all the sectors, but just that sheer large cap bias. And why do I say this? Now you look at the Nifty 1 month chart, right? The Nifty over the last 1 month has gained 1.25%. But it is in that too, some of the underperforming names of the recent past have done well, because Reliance is the one which has gained over 5% in the last 1 month. In the same period, the talk of town, which is autos and the dispatches and the sales, etc., and the premier name, which is Mahindra and Mahindra, is up just 1%. So it's been a rally of the names which haven't been rallying thus far, which are doing this very large cap focus, fairly concentrated, and therefore there is no reason for the market to come off rapidly after hitting all-time highs, simply because it's not that everything has gone up ferociously. So that's the key point to keep in mind. Momentum is in favor, maybe US markets key monitorable, so certainly to keep that in mind. And well, a lone listing today, guys, but interesting, a software as a service company coming in, 52 times subscribed, should be interesting.
Yeah. In fact, that's something that we have on our IPO watch as well, Capillary Technologies. And, when we did the IPO report card a couple of days, it was also very obvious that it's not as bad as it seems. If you look at all of the data altogether, even OFSs are not that much as they have been in past, maybe in absolute terms, of course, because everything has gotten bigger in the markets, but in terms of percentage, OFSs are not that much. Offer for sale, that means it's not just promoters taking their money off the table, and the performance is 50-50. It's not that most IPOs are down in the dumps, but nevertheless, some of the factors that you should watch out for, you are going to see some impact. For RIL, this is a positive. If a heavyweight performs well, it's great for the Nifty. So watch out for what is the impact of the statement that Reliance has made last evening, where they've said they've stopped importing Russian crude oil into their SEZ refinery effective 20th November. From 1st December, all product exports from the SEZ refinery will be obtained from non-Russian crude oil. Is the statement that has been made. Now, this is significant for a number of reasons, and one of them, of course, this is more export facing, what they put out of this special economic zone or this SEZ, but this is important for a number of reasons. One is, and the largest, I would say, the indications this is giving us about what it means for an imminent India-US trade deal. The bone of contention from the United States was, why is India importing that much Russian oil? In fact, they want us to stop altogether. Now, wherever those negotiations are going, the fact that the largest private refiner is saying that at least in one part in the SEZ there's no more Russian oil is going to be significant. So watch out for RIL, watch out for all of those pack of companies and their subsidiaries which will react possibly. As far as the Nifty is concerned, so close yet so far that we're targeting the all-time high, but the global cues are not supportive. Nifty, of course, decisively broke the resistance of 26,100. And if you remember start of day yesterday where we talked about the 26,100 resistance, that has been smashed through quite well. Despite a weak breadth, technical indicators and options positioning point to a continuation of the bullish trend today. The rally does not mean market rally. Nifty was nearing all-time high, but mid and small cap indices were either flat or in red. So keep that in mind, because if you're expecting your portfolio to pop and sizzle as much as what the Nifty might look like today, that might not be the case. Select stocks, of course, led that rally. Reliance Industries, Bajaj Twins, HDFC Bank, Axis Bank. Immediate support now at 26,100, which was the previous resistance. Breakout zone, a clear breakout above 26,277. 26,350 and 26,500 are the levels you should watch out for. For the bank Nifty, a strong momentum, but RSI at 74. Immediate resistance at 59,440. Key resistance at 60,000. So those are some of the levels that you should watch for the Nifty and the bank Nifty. But since global cues are dominating our conversation this morning, we want to get a quick word in from Peter McGuire, CEO of AustraliaTrading.com. Peter, thank you so much for joining us this morning as we're trying to figure out, is it blow hot, blow cold? It's almost what the US markets are saying about NVIDIA, or vice versa. She loves me not. Which one is it? Are AI stocks overvalued, or are we looking at the biggest boom in time to come?
Well, Tamara, lovely to join you. I tell you what, it certainly is the Wall Street darling. We can't take our eyes off that. And I think it's mixed as far as sentiment. There is a large degree of the population that absolutely loves it. And why wouldn't they? Because that sweetheart darling has performed so incredibly well. And if you owned one stock, Nvidia was it in 2025, it just shot the lights out. So one can't say it hasn't performed, because it certainly has. The other side, of course, is people are saying it's toppy, it's frothy, and is there a time for some form of correction? I'm still going with market darling, because I think the overall momentum in the long run is going to be up from here, Tamana. So let's just hold on to our hats and ride it out.
But what are the signs that you might be looking for that, Peter, heading into the end of the year, and good morning, this is Alex here, that there might be money taken off the table, because you'll have fund managers across the world, the large ones, that will want to defend their profits heading into the end of the year. Would you be wary of that?
Well, yes, you would be. I mean, it's not. There's a wonderful saying, and good to see you, Alex. I'll tell you what, a wonderful saying: you never go broke taking a profit. And that line is so much embedded, I think, in every fund manager's mindset, considering we're now past that mid-November number, we're moving up to Thanksgiving. Is Santa Claus going to, I suppose, look after us with a Christmas rally? Or is it a time to actually exit? You've banked your profits for the year and you go skiing in Aspen. So I'm thinking possibly that could be the case. Watch the screens very carefully.
Yeah, most certainly. Pete, you track commodities so closely. I wonder if this, and we talk about crude all the time, but non-crude as well. Is there a thought on any of the other commodities which could be marked movers? Because we've seen crypto come off quite rapidly and completely different kettle of fish. But commodities per se, they're still seemingly in a secular upturn.
Well, they are, Niraj, good to see you. But when you're looking at the historical as far as crude oil, I'd say that that's more bearish than bullish. And I feel as though that deal that was, the relationship that they have as far as MBS and certainly President Trump, the way it's looking, that glut is going to appear in 2026. And I would say there's going to be excess capacity, which in turn is going to make cheaper prices. But then again, these sanctions coming into Russia could disrupt that from a geopolitical standpoint. I think you've got to keep a close eye on precious metals, keep a close eye naturally on some of those agricultural commodities, and don't take your eye off, those industrials either, because they've performed well. Copper's approaching that 11,000 a metric ton on the LME, so that's relatively strong.
Just very quickly on crude prices and India and what India could do next, where if we reduce significantly our Russian crude imports, what is the impact you see taking place on crude prices overall?
Well, I think first off, Tamana, you've got to get supply. You've got a big engine to fill as far as and to feed Indian oil consumption. So they'll look at Mid-East, as we understand, Mid-East oil. And that'll be the focus. And that could be where I would say the Saudis or someone could step into play to appease and to make sure that India isn't without its crude. Secondly, let's just see where this all rolls. But I think we're going to see into 26 a cheaper price point, and that's the general consensus. unless something was dramatic to happen. And, we can't tell the future on that one.
Thank you for that, Peter McGuire, for that quick take on all things global markets and global commodities as well. Why we have him here. Thank you so much for speaking with us live from Sydney. Okay, let's look at what the FNO setup is looking like. We're on that verge, perhaps, of all-time highs. What's the derivatives picture pointing to, Puneet?
Well, thanks so much for that, and good morning to all three of you. Very interesting session yesterday, because while we did come very, very close to that all-time high, wasn't so to be the case yesterday. Hopefully, we are expecting a better performance in the second half, because the implied open is currently indicating a downtake, while meager still indicating a start in the red for now. The very interesting aspect of foreign investor positions has been that it's largely been stable. We have seen that they've continued to maintain the shorts in the system, but not increasing it with increase and with strength, to say the least. So you have seen roughly 400 crores being bought in the futures market yesterday. Index longs continue to hover between 12.2 to 12.4%, and while it has recovered from about 11.5%, continues to be stable at that level. Very interesting what's happening with the put-call ratio, because while foreign investors are keeping it at 1.2 with higher favors for the puts, for the Nifty, largely across the board, it continues to be at 1.4. which indicates that foreign investors have lesser puts, at least compared to the broader markets. But it is something that we continue to observe, that yesterday also in the open interest distribution, and that's the final plate, we highlighted that 26,000 actually had a higher number of puts compared to the calls. But now that the difference between the two is quite stark. It's almost double the number of open interest at 26,000 for the puts compared to the calls. So yesterday we have seen actually the longs being pulled back at that key level, and 26,500 is similar to what we saw yesterday. So compared to yesterday, the calls have actually been reined in, while puts have actually increased their level, or at least maintained it at 26,000. Hopefully some near-term support at that level, and hopefully also that the Nifty Bank's strength gets some transfer to the Nifty 50 as well for hitting their all-time high again.
Okay, the implied open shrunk to about 13 points down, but we'll wait and see how we really open eventually. Thank you for that, Puneet. All right, stocks on our watch list, and today's a day of anticipation. So the first stock on my watch list is also an anticipation story in that sense. I'm talking about Groww. After those wild swings, I mean, think about it, blockbuster listing, crazy moves, nearly double in the first 4 trading sessions, and then sees 2 days of pain. Why am I talking about Groww today in the watch list? Is because they will be declaring their quarterly numbers. So after IPO, Groww is now facing the earnings test, and this is where things tend to get real for companies that list, because before that it's all about promise, now it's about performance. So Groww will report its Q2 earnings today. What happened to the stock? Shares fell 20% from record levels, eroded more than 22,000 crore of market cap in the last 2 sessions. Valuation concerns and profit bookings, booking, of course, were some of the reasons you saw this happening. Nevertheless, it's still above and well above its issue price. So from that perspective, that's an important indicator to watch. What would you want to see in the results today? What's happening to their broking segment revenue? Will a fall continue YOY because of a high base? Is there any impact of derivatives squeeze at all, or what the regulatory restrictions have been on derivative trading? What is happening really with their numbers? Market share, will their market share increase? It's likely to, as per October data. Are there any one-off items that could impact the PAT? Will EBITDA margins remain above the 50% plus levels? These are some of the things we'll watch out for. We'll have a more detailed piece for you later in the day, but that's why this stock on my watch list. Jefferies on Lodha is the other one that I'm looking at. It's a note, and real estate has had a bit of a mixed kind of a mood. If I look at it on a year-to-date basis or even over year, real estate has done fairly well, but in the last few sessions it's not been the favorite. Having said that, and Lodha has in fact been about 11-12% down this year. Jefferies has maintained a buy with a target price of 1,625. They're saying firming up of data center development business is likely in early 2026, can provide a large recurring income, and shows a valuation upside over time. Palava should see infra triggers in the next few months, raising monetization pace. Now, this is a project of this particular company in a catchment area which has been around for a while but has not necessarily moved at the pace they would have liked. So what Jefferies is saying that there is a lot of infra triggers, that's usually more connectivity, roads, etc., stations being built around, which could raise monetization pace. 20% pre-sales growth target for FY26 estimate remains on track as Mumbai launches revive. That's another reason they're bullish. And Lodha is set to capture the large residential opportunity. So, which is why that's one of the stocks on the watch list. Leela Palace is the other one. Morgan Stanley, of course, has its Asia Pacific conference. So, you'll hear a lot about Morgan Stanley and their views on companies today. But on Leela Palace, they've maintained an overweight with a target price of 562. Maintained its mid to high teens EBITDA growth target for FY26. RevPAR outperformed luxury industry by 3x. I thought this was interesting. This is revenue per room, and it's an important metric for this segment. They're saying it outperformed the luxury industry by 3 times, guided for continued improvement in this particular indicator, RevPAR that is. It's a pure play luxury positioning, which is helping in maintaining price leadership. So that's the third one on my watch list, which could see some action today, because it's all about stock picking and not necessarily for today.
Yeah, absolutely. You said it, in fact, because in terms of fundamental changes that have been announced or developments that have been announced, there are few and far between. The one that I've selected at the top is simply an update, and don't expect there to be a major reaction. It's only about 4,000 odd crore market capitalization company, Bharat Rasayan. The company is set December 12th as the record date for both a stock split as well as a bonus issue. So if it reacts in trade, you know why that is. The second is actually Interglobe Aviation, and this is on the back of a brokerage note, and Morgan Stanley has maintained an overweight rating with a target price of 6,698, pretty sharp upside indicated from the current levels. What have they said though? They've reiterated the high teens growth in capacity for the second half, and that is on the back of expectations of improving demand trends and also the visibility on market opportunities. Of course, this company remains the single largest operator in India with a market share of close to 2/3 or maybe even more than that in some months. On the cost side, Morgan Stanley expects that the ex-fuel, ex-forex cost per available seat kilometer is set to grow only in the low single digits. So that's a positive development. Also remember that oil prices have been relatively benign, and this accounts for what, 40% on an average of an airline's operating costs, and so that's a significant tailwind. And the last aspect is that the passenger revenue per available seat kilometer is expected to remain flat. So that might just be a bit of a dampener in the third quarter, which is why they've retained their rating. But things are looking up for this company. Watch out for the stock. Morgan Stanley has also put out a note on Maruti Suzuki. They maintained an overweight, and I think a lot of people have been wondering about the post-festive demand. Well, Morgan Stanley certainly believes that those trends are holding well. They also say that operating leverage and net pricing will be the key drivers of margins in coming quarters, and that margin number is absolutely critical to watch for Maruti Suzuki. It has been a reason why the street has been disappointed about the results in past quarters, so watch out for that. The important point from the perspective of margins is, and in terms of Maruti Suzuki's numbers, is that discounts seem to have peaked in the second quarter. So could that mean a healthy growth, and also combined with a healthy growth in exports, could that mean a better third quarter compared with what you've seen in the first half, particularly aided by those festive trends? And beyond that, the demand trends continuing even beyond festive is an important thing to watch out for.
Most certainly. 3 stocks, and none of them might have a reaction, but they are all newsy in some fashion, so I just thought I'll sign them off. The first one is TCS. Well, they've signed a pact with TPG Terabyte Bitco to invest up to 18,000 crores in Hypervolt. Now, this could be interesting. It could have repercussions for the broader data center ecosystem as well. They are going to create AI-ready data centers with capacity in excess of multiple gigawatts. And they've secured about $1 billion worth of investment from TPG out of that 18,000 crores. Now, this is a large bellwether getting into that ecosystem, which means 2 things: that either that one, that the data center opportunity is out there alive, kicking, but can TCS and TPG come up with data center capabilities which are really top notch, and could it give a run for the money for some of the smaller players? Because there are a lot of fringe players a lot of them in the listed ecosystem as well, which are into this data center ecosystem. So keep that in mind. This is a large player, one more large player coming into this space in a big way. So that is the first one. Jammu and Kashmir Bank, board will meet on November 26 to consider capital raising. Now if this turns out to be an equity raise as well, typically an equity raise is considered to be very positive for financials, right? Because the book value gets a leg up, price to book therefore comes off, and then there is a bit of a re-rating that can happen ideally. So keep an eye out for J&K Bank. That's the second one on my list. And VIP Industries, there's nothing dramatic about this announcement, but it is a company which has had some really tough times in the last few quarters, going out and saying that we are selling off a prime asset in order to raise capital. My presumption out here is that the capital will be used to fix some of the ailing business issues that they have. Remember, the last quarter, September quarter, was the worst quarter for them in at least the last 13 quarters on the EBITDA and the PAT front. So they have had issues. Is this the first sign? And now there's a different management, right? Because the promoter said, let me get out of this and let me get in somebody else who can manage this better. Is this the first sign of steps being taken, bold steps being taken to unlock value wherever it's possible in order to help the business? All a presumption, all a conjecture on my part, but seems to be a safe conjecture. Maybe it helps the stock.
The inventory issues needed to be sorted out. So maybe an infusion of capital helps doing that.
I mean, I don't know what 40 crores is going to do to move the needle, but phase one of cleanup. Maybe. At least they're starting on it. So, okay, watch out for those. Some interesting stories on the watch list. I think primary market action will also be key to see. We were talking about Capillary Technologies. It's a leading Indian SaaS company, that's software as a service, that specializes in customer loyalty and engagement solutions. The company's shares will, of course, list this morning. At 10 o'clock is when you'll see the listing. Now, it was subscribed nearly 53 times on the last day, and QIs, that's Qualified Institutional Investors, led that entire pack 57 times, non-institutional investors 69 times, and retail investors 16 times. 577 is the issue price. So watch out for that. I think just looking at the subscription numbers, it would be interesting to see if you're actually going to see a listing pop or not. Now, will there be a pop in the heavyweight RIL is the other question. Why are we saying that? The company has officially stopped importing Russian oil into its special economic zone refinery well ahead of the mandated deadline. What does this mean for operations, margins, and global exports? Soumya Sarkar joining in for more this morning. Good morning, Soumya.
Reliance Industries has come out with this big announcement where they are saying that they have stopped importing Russian crude from November 20th, and this is the Russian crude that will be going into the export-oriented unit, that is the SEZ unit, SEZ refinery. And they're also saying that from the 1st of December, all products which will get exported from the SEZ refinery will be obtained from non-Russian crude. Now, what the company has done here is they have completed this transition ahead of the schedule to ensure full compliance, and the deadline was January 21st, 2026. Now, what does this actually mean? Now, if you look at the SEZ unit, this is largely an export-oriented unit, and this will not process the Russian crude. But the DTF, this is the domestic unit, which caters to the domestic market largely, will continue to process Russian crude. So this does not mean that Reliance Industries is completely stopping the use of Russian crude. They will use it, but only towards a domestic purpose. Now, if you look at RIL's capacity, it has a capacity of processing 1.4 million barrels of crude every day, and this is largely evenly spread between the SEZ and the domestic unit. Now, if you look at, they use around 40% of Russian crude. So this largely was going into the SEZ unit, which could now move to the domestic unit. So the Russian crude still comes in, but only towards the domestic unit and not towards the export-oriented unit. Now, what would be the impact of this on Reliance Industries? Now, even if you look at current juncture, the Russian crude discounts have slipped to just $1 to $1.5 per barrel. So not much of an impact that is coming into the books of Reliance Industries. And if Reliance Industries continues to export the refined products globally, the refining margins are globally at a 2-year high. In fact, the Singapore gross refining margin yesterday was nearly at around $10 per barrel, which is the highest level that we have seen since September 2023. And if they continue these exports, then they will be better off and their financials will gain much more than exporting these products, because the discounts are too less and the price of these refined products in the global market are much more. So they will gain out of this much more than what they will lose out by not getting Russian crude into the export-oriented unit.
Interesting. Just a very quick point. I'm wondering whether this is the middle ground, because India has very clearly stated that its domestic needs are more important than anything else. But at the same time, I think the angst in the US and Europe was that products were getting refined with Russian oil and being sold in the export market. So some parts of those sanctions were getting defeated.
But you know something, this is the best position ever, where you can make a compromise that doesn't actually hurt you.
Yeah.
Because you look at how crude prices have come off, there is enough supply and oversupply in the world, so it's not really going to pinch us. Even the price differential between Russian, and this is something that the ministry and the government has been saying very clearly, the price differential between Russian crude and crude available elsewhere has squeezed down to I think $1.50 a barrel. So it's not making that much of a difference. This one we can do.
Yeah, and one that Reliance can do per se, right? I mean, so sure the numbers might get a bit impacted here and there, but I guess overall, if this is setting the stage for and both sides coming together to try and see what are the points of contentions, if you will, and trying to resolve at both ends.
Let me put it this way, better this than some kind of concessions on agriculture, which will be more harmful. So this will be an easier one, I suppose, to negotiate. But having said that, before we get into the break, you guys have packed in your Black Friday shopping cart lists?
No.
I've actually been scouting for a few things, but I've bought a little too much tech this year.
Okay.
Have you?
Yeah.
Have you?
For me, Black Friday is through the year. All my shopping carts are full. Whether I clear them and buy is a different story. So that's a shopping habit. Now, why are we talking about Black Friday sales? Black Friday sales have kicked off in India on e-commerce sites globally as well. But is there an opportunity for a Black Friday sales in the markets? We're going to talk about that on the other side of the break. Stay tuned.
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's number
Welcome back. You're watching India Market Open, and the signs are of a little bit of a downtick at the start. But let's get you the clearer details on the basis of the technical indicators. And we're joined this morning by Aditya Agarwala, who is the Head of Research and Investments at Invest for Edu. And of course, we've also got Parag Thakkar, Head Fund Manager at Fort Capital. Parag bhai, we're missing you in the studio, but I think this is the best, next best thing. Let me start with Aditya though. Aditya, let me ask you about yesterday's move and what you anticipate for today, because yesterday for the benchmark you had a few of the heavyweights that led the rally or led the up move, but that absolute strength in the broader space was missing. So is there a possibility of us touching those record highs today, and will we come off very sharply from that point?
Morning, Alex. Thanks for having the show. May not be today, could be more of a consolidation day if we're talking about hitting a new all-time high on the Nifty. But my sense is it's a matter of time before we'll actually scale past those levels and hit a new all-time high on the Nifty and look for a target of 26,500 to about 27,500 on the upside. Because of the fact that there is a bit of a hiccup in the broader markets, there could be a bit of a consolidation, or so to say, a bit of selling pressure as well on the Nifty as well, because we've seen a rally as well preceding to this breaking out of an all-time high territory. And it will take some time for markets to do that. But overall, I believe the trend will remain strong, intact. There could be possibility of a minor correction or consolidation. On the downside, 26,100 will now act as an immediate support. If that is broken, 26,050 will act as the next support. So I'm not too much disturbed by the fact that yesterday we saw a bit of a cool off in the broader markets. Could be same in trade today. Next week onwards, maybe we'll be looking at a new all-time high on the Nifty.
What about the Bank Nifty?
Bank Nifty has already been going very strong. So my sense is that will continue to remain strong, and 60,000 is something that I'm looking on the Bank Nifty. And again, so far PSU banks have been participating, but we are seeing large cap private sector banks make a comeback. Names like Kotak, Axis, ICICI, HDFC too, the big boy. So my sense is all these large cap private sector banks should be the focus point now, and that will take the Bank Nifty to this 60,000 mark that we've been looking at for some time now.
60,000 for the Bank Nifty. Aditya, very quickly, all-time high today, yes or no?
Unlikely.
So no. Come on, stick your neck out. What is unlikely, yes or no?
No.
Okay. You get to say I told you so at the end of the day. So you should take a call. Okay.
That was a very nervous no.
No, says Aditya, because aaj ko bharosa nahi.
No, not at all. That's not a very nervous no. It's a confident no that very unlikely that we'll test a new all-time high today on the Nifty.
Okay, I know Parag bhai wants to answer that question, but before I come to him and give him a few minutes to prepare, I'm going to ask Aditya about his top stocks and top picks this morning.
So a couple of them. The first one is Policy Bazaar looks a good stock to go for a long trade, a consolidation and a fresh breakout for a target of 2,000 on the upside. The stop was at 1780 on the downside. Second is Berger Paints. This is also one stock which is looking quite interesting. The entire paint stocks now have come out of that lull phase and making higher highs, higher lows. So Berger Paint for a target of 610 on the upside with a stop loss at 580 on the downside. That's the second recommendation.
Okay, Parag bhai with us this morning. Parag bhai, we have to start with the all-time high question. First of all, does it matter that we reach the all-time high from a market sentiment?
No, I think we'll hit the all-time highs over next 10 to 15 days. Today, it looks difficult just because the probability of US rate cut has reduced to 39%. So, and there was a sharp reversal in NVIDIA stock also yesterday, 8% from the highs. So today the sentiments are not looking that great, but I would say that I would use this consolidation or any big dip in the market to buy, and especially buy IT stocks, which are the most affected ones.
Okay, and independent of whether that all-time high comes in the next 1 or 2 days or the next 15 days, does your portfolio strategy materially changing, Parag bhai? Because of late we've seen it's only large caps which are gaining, right? The most common meme floating around is of that market throwing up the kid in the pool, which is the Nifty, but the other kid is drowning, which is the portfolio. So what are you doing with your portfolio?
So, by God's grace, Neeraj, luckily, I was of the view, I have shared this with you on the show also, that my first call was that FIs will have to cover their shorts, given what government and RBI has done. And so I was 60 to 65% invested in large caps. And so stocks like Reliance or HDFC Bank or SBI and L&Ts of the world. So I would say that this has played out, and hopefully it will play out in the way I envisaged. Let's see now. See, in broader markets also, I'm not saying that, for example, I have stocks like Federal Bank, where I feel that those companies are in for a very long-term structural up move, led by the fantastic leaders like Mr. Manian and all. So I would say that yes, my first call was that, see, the FIs have sold for 3 lakh crores. 75% of the FIs are underweight India versus the MSCI weight also. So I would say that given the fact that government has given so much of stimulus in terms of rate cut and income tax slab increase and GST cut, and now earnings have started to recover, at least in auto for sure. In financials, it will recover for sure as the margins recover. So I would say that when the earning momentum comes back, and see, one thing which Mr. Ray Dalio was telling yesterday, which that if AI is a bubble, you don't sell everything, but you diversify. Now, if you diversify, India is a diversification, right? India is, as people call it, anti-AI play. So there is a good chance, I would say, that the money can come back to India.
Yeah,
because we have already underperformed and they are underweight India.
Yeah, it sounds very obvious and logical. The question is, when does that occur? Okay, I would invite both of you to look at this next piece because it's quite interesting. And of course, viewers, you're going to benefit from this as well. It is an interesting concept, right? What are the few stocks where there is a consensus buy call across brokers, but which have done horribly or relatively horribly in 2025 so far? To tell you about those and why potentially they're behaving the way that they are, I'm joined by Varsha this morning. Varsha, what are these stocks and what have they done so far?
Yeah, so I'm going to talk about 3 stocks wherein the analysts are super bullish, but the stocks have not given any, rather they've given negative returns till now. Let me start with all the 3 stocks, starting with Team Lease, 5-star Business and Suntech Realty. All the 3 stocks, if you see, analysts are super bullish, have on the Team Lease, if you see, they have 12 buy ratings. On the 5-star, they have 11 buy ratings, and on the Suntech, they have 14 buy ratings, but all 3 of them have given negative returns. And let's deep dive what went wrong for this company and what's the outlook going ahead. Starting with the Team Lease. Why the underperformance? Because of lean hiring trends from sectors like IT and BFSI. And what's the outlook when it comes to this company? So they are increasing hiring when it comes to GCC countries, which is a positive pivot for this company. And also the gradual revival is taking shape in H2. So maybe H2 will be super strong for this company. And also there are early signs of demand recovery in general staffing, and the company may see higher margin because of the specialized staffing business that they are entering into. Talking about 5-star Business Finance, let's see why the underperformance for this company. If you see, they've seen a soft Q2 quarter. Also, the growth remains subdued with disbursal declining. Let's see what's the outlook and why analysts are bullish on this stock, because they see visibility improving on AUM growth and asset quality, that is in H2, and also gradual improvement is expected in Q3 and strong recovery is expected in Q4. That means H2 will be strong for this company as well. Talking about Suntech Realty, why the underperformance? Because of the moderation in MMR region, which remains a concern for investors and analysts, but they've maintained their pre-sale guidance of around 30 to 35% for FY26 and also have a healthy launch pipeline when it comes to Suntech. So overall, these are the 3 stocks wherein analysts are super bullish because of the positive outlook, H2 being strong for these companies. Let's see how this will perform, for next 1 to 2 years.
Okay, Varsha, thanks so much for that, and very interesting piece there. Any view on some of these stocks, Parag Bhai? Because there are fundamental reasons why brokers, why analysts are positive on these stocks, but equally, Varsha has highlighted the reasons why they might have underperformed. Would you be positive on any one of these three?
See, I would say that TeamLease is one where I have a interest. We also have a very, very small weight in that. And of course, the stock has corrected. The corporate governance of the company, balance sheet of the company is absolutely top class. It is just because of IT hiring, lateral hiring in IT has collapsed, right? Due to all this AI and all those things. So I would say that it is a business problem. It is not a company problem at all, I would say.
No, so actually the question then, Parag Bhai, is not the company, it's the people who are doing the analysis and giving those buy calls. Because sometimes, we report on those buy calls all of the time. And then what happens in reality is not necessarily the same. I mean, should there be some extent of responsibility there as well?
No, Tamanna, I would like to say that the sell side people are doing a wonderful job. They are working 24/7. You ask any sell side analyst on Saturdays when banks declare results. This time there were 10 banking results, right, on the Saturday. So I think they are doing a lot of hard work. I will give full credit to them. I will not take away just because of 1 or 2 or 5, maybe 10 stocks which have not done well according to their estimates. I would not blame them at all. All are my very good friends, and I am really thankful to them.
They are our friends also, Parag Bhai, and we are also working Saturdays, by the way.
Yeah. I'm saying
we're asking, it's a little bit of a theoretical question. We'll get back to stocks in a second. It's a bit of a theoretical question on what's happening in the markets right now. Aditya, you have a view? I saw you smiling there.
Tamanna, basically, see, you do hold responsibility without a doubt because people do invest on our recommendations. So collectively, yeah, I agree, we do hold responsibility. But at the same time, like Parag Bhai said, you miss some, you hit some. It's ultimately the game of how many hits and misses. If your hits are more than your misses, you are eventually making money.
Ultimately, you limit your downside, right? Or you limit your losses and you are successful eventually. So, but the limited point, and just to close out this conversation, Parag Bhai, of course, all of these are theses. And so therefore, you don't go in with your eyes closed if you are following somebody's recommendation.
Absolutely.
You do your own research.
It is a choice of buyer or a fund manager, right?
Yeah. Yeah, so important point. Okay, let's head back into the market. And the question, Aditya, I would ask you is, specifically on those private banks, which seemed to be buzzing again yesterday, would you initiate at any point? Because you've seen HDFC Bank, you've seen ICICI Bank, Axis Bank. There were a couple of interesting notes that came through specifically on Axis Bank as well. A UBS note stands out where they've raised their target price to 1,500. The question is, how do you catch that upside from this point?
Absolutely, Alex. In fact, my sense is, like I mentioned, private sector banks are due for a comeback and they will make a comeback. They're already showing the early signs of making a comeback. Names like HDFC Bank, Axis Bank, Kotak Mahindra Bank, all of them are looking interesting. And if you've been invested in the PSU space and you're sitting on decent gains, there's no harm in booking out partial profits in the PSU space and then shift that money to a private sector bank. And look at these three names that I mentioned: Axis, ICICI, Kotak, and HDFC. All four banks, for that matter, look interesting to me. And HDFC could be the leader in the pack this time around because we are witnessing a good consolidation. And yesterday's move shows that a good up move is due in the stock.
Okay, let's go across to Samit Sarkar. That time in the morning when we talk about all the chatter on D Street and what he's hearing from the dealing room. Samit Sarkar, what are you tracking this morning?
Well, when it comes to stock-specific ideas, firstly, Sansera Engineering is something that has been buzzing in the dealing room. There are buy flows on DI desk and dealers are indicating that the third quarter financially could be very strong for Sansera Engineering, and hence some buy flows have already started in this counter. When it comes to Ultratech, there are buy flows on institutional desks. Both foreign and domestic institutions have been buying this counter in trade, and even the delivery volumes were on the higher side. When it comes to Emphasis, there are some buy flows on large HNI desks, and this is largely because dealers are indicating that Emphasis could see an increase in the weightage in MSCI that could lead to some passive inflows and hence some positional buy trades when it comes to Emphasis. When it comes to Astral, selling seems to be over. That counter has been under pressure of late owing to the price cuts that we have been seeing in the PVC segment. But dealers are now indicating that the selling is largely over in this counter, and Astral could bounce from current levels as what dealers have indicated. And lastly, a paired trade that dealers have indicated on PNB and Canara Bank, that is Punjab National Bank and Canara Bank, and this is completely based on technical charts. They are asking, multiple dealing rooms in fact are asking their clients to go long on Punjab National Bank and sell Canara Bank.
Let me take that last piece then, Soumit, and ask Aditya what he thinks about that and what levels he would watch out for on this pair trade. Aditya, do you see value in that as well?
Oh, yes. I think PNB makes, because of its underperformance, PNB Bank can be bought, and then Canara Bank, because it's been one of the top performing PSU banks, can be looked at profit taking, because there is a little bit of an overbought territory that I'm seeing on Canara Bank. So not a bad trade to take, actually. Book out profits in Canara Bank and go long on PNB Bank, or maybe a pair trade of short Canara Bank and long PNB Bank.
Okay. And the other piece was Ultratech Cement. Parag bhai, I know that you have reduced your holding of cement over the course of the last couple of months, if I'm not mistaken. But specifically on Ultratech, do you think that there is a reason to believe that there could be considerable upside on the fundamentals from this point based on the pricing trends that I'm sure that you're keeping one eye on?
Yeah, so Ultratech remains one of the best cement companies from operating efficiency, from capacity expansion at a lower cost perspective. So I would say that, yeah, at some point it will make sense. But right now, I'm not very keen because I have not seen any big pricing action. And in the commodities, as I always tell you, it is the price of that commodity which determines the stock price. The cement prices have to move up for cement stocks to move up. With the call which I took in December, played out beautifully. Luckily that in December the cement prices were at rock bottom, and every player wanted to increase profits, as was evident in Sri Cement's speech also and con calls also, and so that played out. But now I'm waiting for that thing to happen again. By the way, just I would just like to say that hearing yesterday it was a Mahindra day, and I think the Tech Mahindra CEO said 2 or 3 very good things. One is about their own margin recovery going back to 15% next year. That was a margin recovery phase. And then growing supersonic after that till 2030. The other thing which he mentioned was very important, that AI was considered as a headwind earlier. Now the narrative will turn and AI will become actually a tailwind for the IT industry. So I would say that, and both this Infosys and TechM are right now trading at, I would say, 4% dividend plus buyback yield. Because if I see EPS of Tech Mahindra, for example, going up to 70 next year and Infosys 78, and TechM has said that 85% of the free cash flow will be distributed as dividend, and Infosys already distributes more than 90%. Plus, other thing which I would like to say is Infosys buyback, which is in too much of news. I would say that, company feels that this is a 1850, which is their buyback price. I think the company strongly believes that the intrinsic value of the company is much higher, which I think market will realize once this entire discussion around AI affecting IT fizzles out and some sort of discretionary spending comes back in IT by US companies. Yesterday, remember, Walmart has raised its guidance on revenues and earnings. All banks have reported good numbers. I would say that the market is going too much about this December rate cut.
Yes.
And if IT stocks correct due to that December rate cut getting delayed, it will be a great opportunity. Sure. We are underweight IT right now, but we would love to increase the weights.
Okay, interesting. The reason why I love to speak to you, Parag bhai, is that you give me bonus answers. Thank you so much for that. Do stay with us though, both of you. We'll be back on the other side to talk about more stocks and the pre-open rates.
NDTV Profit is in beautiful Israel. Currently, we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
We are at one of the facilities of Merck in Bangalore. Well, we are here at R&D facility or Research and Development facility of Merck. Now there you go. Ooh. Merck actually develops those life-saving drugs.
All right, going to be a bit of a tough day. I mean, at the end of the day, you can't escape what's happening in global markets, and especially what happened with NVIDIA last night or in the US trading day was astonishing. A huge peak and a trough. I mean, if you look at that one NVIDIA chart, you will see how it pretty much lost all its gains in a matter of a few minutes, and that gloom sort of pervading over Asian markets and will have some impact on India as well. So maybe you're some speed away or some distance away from an all-time high on the Nifty. But nevertheless, watch out for what the heavyweights are also doing, what's happening with Russian crude imports and the impact that has on all OMCs. So these are some of the stocks that you should see. But I reckon that not just the Nifty, it's going to be a lot of individual plays which will be in focus.
Yeah, as we highlight every single day, right? One interesting one out of the 9 stocks that we mentioned, and there were a few brokerage notes, but VIP is one interesting one because the transaction that has happened, and I'm guessing Parag Thakkar would have a view here, but the transaction that has happened is that Kemp & Company is going to acquire VIP House. It's a building, it's a property in the Prabhadevi area of Mumbai for a sum of about 40 crores. Now the transaction is a related party transaction. It does require shareholder approval. So the question that people are asking is that will such a transaction get the shareholder approval, because the promoter entity is buying a whole building in the prestigious Prabhadevi area of Mumbai for a sum of 40 crores, which doesn't seem the right value according to a few people. Now, Parag Thakkar, you may have looked at it, you may not have. You may have seen VIP House at some point of time in your last 15-20 years, you may not have. But a 40 crore transaction which is being sold to a promoter entity, does it make you feel that it will not get the shareholder approval? What could it do to the stock in the interim, of course, because it's been a business that is reeling under pressure, and naturally the stock has followed suit in the last few quarters.
So I have been to VIP house many times. So, so when you said 40 crores, I also felt it is a little bit less, to frankly speaking. Because it's a good building in Prabhadevi, as you rightly said. But my point is that, see, VIP is now controlled by so PE funds like multiple ventures and all. So I think they will have to build up on this journey. The brand is good. But they lost momentum in last 3-4 years, and actually Safari and Samsonite did very well. So I would say that it's a long journey for a shareholder of VIP because PE funds will have, I would say, 4 to 5 years, and they'll take time to execute. They'll hire right people to run the show, and so it's a repair and then grow kind of a journey. So you have to be really patient with it.
Okay, so you're seeing the first rates coming in, and I want to pull up what Groww is doing in the pre-open session. Remember, this is the pre-open session. That's about 8 minutes of trade before markets open at 9:15, where only larger buyers can come in. So it's only indicative of what you may see, and these tend to be very volatile rates setting in. We're going to talk a bit about the newest listing, which is Groww. Groww is set to post its Q2 results today, and why it becomes a big point to watch is because this new listing has had a stupendous journey. First 4 days of a big boom in the stock price, and then profit booking for the last 2 days. But what should you be watching out for? What will the street watch out for when it comes to Groww? Sharad Dubey joining in for more.
Kamana, there is a lot of interest in this counter, especially over the last 2 trading sessions. So 22,000 crore of market cap has been eroded, and if you see, your stock is down 18% as well. Of course, valuation concerns and profit booking are definitely there in the stock, and stock is still above its listing price of 114. But the key important event today would be the Q2 earnings coming in, and especially the impact in the broking segment. That also, if you look at the year-on-year basis, there was a high base in that quarter, so we might see some cooling off in these numbers as well. Market share is likely to increase because already the October data is out, and if any one-off item comes in the PAT numbers, that will be something which is a key monitorable going ahead. Also, the question remains is, will the EBITDA margin, the operational margins, that's an important parameter to track, will that be 50% plus or not? We did a peer analysis also earlier during the recently concluded IPO, and the 3-year CAGR numbers, look at these numbers, the revenue as well as the net profit margins. Will they sustain or not? And if these numbers, these high double-digit numbers don't sustain, then market might take it negatively also. But there's one more test which Groww has to go through, and that is the share lock-in expiry test that's happening on December 10th. Roughly 2% of equity will be coming in the markets. So there are a couple of tests for Groww going ahead, but net markets will be looking at these numbers and also the commentary going ahead for the new business segments.
Okay. I wonder whether, thanks so much, Sharad, for that, by the way. And Aditya, I wonder whether you would be looking at any of the other capital market plays. And this is a question we've been asking over the last few days, which is that if Groww has such a stupendous response, then is there a reason to believe that the other capital market plays, allied or peers, might actually also see an up move on account of that?
Absolutely. In fact, I have been liking a couple of stocks in this space. One is Angel One, which has been doing well for itself, and yet to see that kind of a run up, so to say, Alex. So I think it's a good time to look at Angel One and then add in the portfolio. Look for a target of somewhere around 3,600. Hold it for at least 6 months to maybe a year as well. And you will see that kind of a run up in Angel One. And then second one is Nuvama. This is also looking quite interesting to me. And then I would want to play out the capital market space, not just through wealth management space, but through exchanges, through ancillaries, CDSL, NSDL. I think this entire bucket of companies are looking interesting and should be part of your portfolio. From a wealth management perspective, I think Angel One and Nuvama definitely makes the cut and should be part of your portfolio.
Okay. Aditya, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. And in moments from now, we'll get in Amar Dev Singh, Senior Vice President Research at Angel One, on the show as well. In fact, I'm told Amar is here. Amar, great having you. Thanks for joining in. Now, yesterday we were all talking about reaching all-time high levels for the Nifty 50, a record high after, 14 months. We are likely to start off slightly lower today. But is the trend positive, Amar? And would you use the dip to buy or create a long position on the Nifty itself?
Yeah, very good morning, and thank you for having me on the show. So basically, we have been bullish on Nifty despite any corrections, because there's not much of a reason to be bearish given the facts that market overall we are seeing a broad-based rally across sectors. And yes, there's a pause because generally what happens is that if you look at the all-time highs, which was in September, close to the 26,300 levels. So clearly market does respect such levels because they are very important, crucial. But the interesting thing is that Bank Nifty had taken out its all-time highs quite some time back. So that clearly shows that there is definitely a lot of interest, and financials have definitely been leading that. If you look at the fundamental macros also, overall there's positive there, and talks of the India-US tariff talks are also on the positive side. When it materializes, a different thing, but markets have definitely factored in. So given that, I would say that yes, any dip is a buying opportunity till the time we don't see Nifty consistently trading below the 25,400, 500 zone, because now that's going to act as a very crucial zone of support for Nifty, whereas on the upside 26,200, 300 is an immediate zone of resistance. But it's only a question of time when we'll see that taken out.
Okay. Let's go on to our big brokerage call of the morning. Morgan Stanley is overweight on M&M Finance, and that's what we're talking about. Sharad joining in with more details.
Interesting investor day presentation coming out for the M&M group, but I have chosen this broking house report because they have stated a very important point, and they have stated that there is a turnaround expected in the company, and the company is maintaining equal weight rating with a target price set at 300 odd rupees. Also, the return on assets that needs to improve materially, and the brokerage is bullish on that, and they're expecting to see the credit costs in this sector as well. Now, overall, the company has given its medium-term loan growth, credit cost and return on assets targets, and the loan growth and these targets appear more like aspirations over the medium to long-term basis. Broking house has also stated that over the next 2 odd years, this is significantly below this. That means the company is giving lower targets, and that's why there can be a beat going ahead as well. But net, it's a positive view coming in from the broking house.
Okay. Not a positive view from the street right now, at least in the pre-open session. So very quickly, Amar, let's get your picks in as we see how the pre-open session is closing. What's on your radar this morning?
Yeah, I would say the first one, which you just talked about, M&M Finance. So M&M Finance, if you look at the stock has been on a tear. It has really performed exceedingly well, and financials have performed exceedingly well. So M&M is a buy, I would say, from a short-term perspective. So buying at the current levels or dips towards the 340 levels with a stop loss of 317 and an upside target of 373. Because what we are seeing in M&M is that the structure is very strong on the long-term charts, and some of the indicators on the long-term charts have turned bullish. So after a long time, so sustaining above these levels are something which is very crucial. We could witness a very sharp up move from here. Yes, there could be some consolidation, but the trend is very strong in favor of M&M Finance. The other stock to look at is more from a perspective wherein the stock had corrected. That's Natco Pharma. What we've seen is that this stock has witnessed significant correction of almost 50%. Is trying to consolidate. We've seen the stock consolidate and bounce back from almost the 800 levels to 850, 860 odd levels. We've seen some significant volumes also happening in this particular stock. So Natco Pharma is one stock one can look at a buying opportunity from a shorter term perspective with an upside target of 973 and a stop loss of 803.
All right, so points well made. By the way, it seems like you're going to have to store those party hats just for a while. The indications are that we're not going to start at all-time highs. If anything, it might take a little while. 26,277.3. Remember that number. That is the all-time high for the Nifty 50, and we're quite a distance away. Parag, you were talking about IT, right? And Nifty IT, and you said that at this point you are underweight. So the question to you right now is, where do you see that opportunity, particularly because the basket as a whole, the IT index as a whole, as of today over the last 9 sessions is up 5.5%.
No, so that is why I was saying that because this probability of US rate cut has reduced to 39%, and plus Nvidia fell 8% yesterday, I feel that IT can open lower or trade lower today. And that is where I will use this opportunity to accumulate and be equal weight at least in IT. And my two topics are Infosys and Tech Mahindra, which I already have in the portfolio, but I would love to increase the weights. As I said, Tech Mahindra CEO, and everybody is right now talking about Mahindra Day yesterday, but nobody is actually highlighting Tech Mahindra. The good thing is that they want to maintain 30% ROCE. The other good thing is that 85% of the free cash flow will be paid back to shareholders. Stock is very attractive. I think the EPS will be 70 next year because they are saying that this current 12.2% margin will go to 15%. And after that, then they look for growth, driven mainly by AI and so in spaces like engineering and all. So I would say that I believe in management. It is a Mahindra Group management and CEO Mohit Joshi has also a great track record. So I would love to buy that stock with 4.5% dividend yield. And he has also said that growth after FY27 will be fantastic. And he has also said that AI will be a tailwind and not a headwind for the sector. Infosys clearly, again, same EPS for next year, I think will be 75 to 80 rupees. They will also pay back 90%. So I would say that there also you are getting 4.5% dividend yield. And seeing the results of Walmart's and Indian or US banks, I feel that discretionary spending will come back. So I feel that Infosys is also a great buy again at 20 times only on any dip. And I clearly feel the buyback, which is completely discounted by the market, has a lot of indirect messaging. And that message to me is that company feels the intrinsic value of the stock is much higher.
Got it. Okay. So IT is something that Parag Thakkar is constructive on. You can argue it's a contra buy for a lot of people. It's an anti-AI trade as well for a lot of people. At some point of time when the AI balloon cools off, maybe Indian IT, Indian markets and all of that starts doing well. So let's wait and watch if that were to happen. Parag bhai, one set of stocks which have done very well are these oil refiners because Singapore GRMs have gone up. So Chennai Petro did very well. Some of the others have done really well. Is it time to book profits? Because they are usually cyclical plays, right? They go up and they come down later on. Yeah. Would you book profits if you had positions into a Chennai Petro, MRPL, etc.?
So we have BPCL and IOC in our portfolio. And we bought it on the day when the oil and gas minister said that they want to create huge market caps and these companies have tremendous value in them. So we are still riding on. Let's see. And see, as Tamanna was highlighting, the difference between Russian oil and the normal oil which you buy is not too much. It is $1.5 to $2 now. Even for Reliance, it hardly makes any difference now. So I would say that this stopping of buying from Russia does not actually change the thesis. I feel, and I always go by the intent. So government's clear intent is to create value in PSUs. These are undervalued PSUs. So I would like to go with them. We have very small weights. We'll continue with it.
Not too many very big movers in the pre-open rates, but one that stands out perhaps, and you should watch for it when the market opens, is Hindalco, because news out that Novelis has seen its second biggest fire in a very short period of time, this time at the aluminium unit, and there could be negative effects of this. Parag bhai, if you've analyzed the implications of the first fire and this one as well, if you put both those two together, in fact, there were few Indian companies that stood to benefit from that. In fact, I remember speaking to Nalco management and they think that things will look up for them. What do you think about Hindalco though?
No, Hindalco, so basically we book profits at around 830, 850. Right now we don't own the stock. But this is also always a stock under consideration. If it falls to say 750, 760 levels, we will be a buyer. Because I feel that it is just a matter of time that Novelis will start showing EBITDA per ton increase, not because of the new capacity coming in, that is going to come, say, next year in the second half, but the renewed contracts with beverage can customers. I think they will start to get renewed and they'll start to get higher margins from Q4 gradually. So I feel that, in fact, there was a note from HSBC, right, day before yesterday or something, that the worries around Novelis will fade away in FY27. I believe in that. So this is, and this fire and all issues are, temporary issues.
Temporary
I
issues.
think
Okay,
Parag
Bhai, hold that thought because the markets are about to start. But his verdict is that these are temporary issues. We will get to that. Hindalco might show some reactions. We'll mark that as well. But this is how the markets are doing this Friday morning in the red. So, well, we are a few 150, 160 points away from all-time highs. Well, yesterday everybody was thinking that maybe we'll hit it on open. Not quite. Banks 0.46% lower. I wonder if IT has cracked. No, about 0.4%. Nothing too dramatic. Mid caps and small caps, which didn't party as much as the large caps did yesterday. A third of a percent lower for the mid cap 150. The small cap 250, 0.28% lower. Almost in line, you could argue. Let's get the heat map up on the screen. More red than green, I'm sure. So we'll mark the winners first. TCS, well, 18,000 crore data center play. TCS has gotten into it with TPG, and maybe that is what is helping the stock a little bit. Mahindra and Mahindra up about 0.5%. Asian Paints, HUL, NTPC. Few and far in between really, not too many winners. What about the losers? Shriram Finance, the one in which there is a deal imminent as per various market sources. That stock is down 1.6%. Tata Steel down about 1%. HCL Tech amongst the IT names in the red. And then some of the banking names like Kotak and ICICI Bank are in the red. Reliance is in the red as well, 0.5%. And remember, Reliance has rallied about 5% in the last 1 month. So it's gained quite a bit, but it's down today. So, well, but that's about it. Maybe a bit more green now, but the markets are still a third of a percent lower. Not too much tamanna, but for a TCS, a third of a percent. And Shriram Finance down about 1.5%.
Yeah, and your VIX is elevated as well. Your volatility index up in the green, which means there is some uncertainty coming in. And you would look at this mostly as an impact of what has happened overnight globally more than anything else, because fundamentally nothing has really changed. Definitely a muted start of the day, but I wouldn't say a very negative start because your biggest loser is less than 1.5% or maybe 2% down right now. M&M after its investor day is in focus, but about 0.5% up. Of course, what happens in an investor day typically is commentary from all of the leadership of those companies and those group of companies, and that has been largely positive as expected. Asian Paints up could also be softening crude prices, which is helping out Asian Paints this morning. But I want to pull up, first of all, the distance to the all-time high, because that's what everyone's eye is on, right? And you are at least 85 points away. Can you traverse that distance in a day for the Nifty is going to be the big question. Let's also pull up Nifty contributors. Okay, you're 157 points away from the all-time high. Let's pull up your Nifty contributors as well, if we can, very quickly. And it's the banks, once again, it's all of the heavyweights and the banks which are pulling down the Nifty this morning. ICICI Bank, HDFC, and even RIL contributing to that. Hindalco, clearly because of that Novelis fire, seeing that pain coming in at this point. Okay, let's look at specific stocks as well. Before we do that, let's get to the broader markets. We have the small cap and the mid cap indices, 0.5% down on the mid cap 150, the small cap 250, also about 0.5% down. So the broader markets cracking even more, which is never really a good sign. The sectoral heat map will give you an idea of where the pain points lie, and it's across the board. I mean, this is an entirely red screen. The only saving grace, if at all, is that the depth of the plunge is not that much. So you have Nifty metals down about 1%. Auto is relatively doing okay, but that's likely the M&M effect more than anything else. India Defense and Nifty Realty also seeing some pain this morning. Let's look at individual stocks very quickly and look at what's happening there. Pulling up Adani Wilmar, there's a block deal today, and some of those blocks may be well absorbed, but nevertheless selling pressure coming in, 0.5% down on that. Godrej Properties has been in focus. They've surpassed their FY26 expectations and guidance on new properties. That stock mildly up in the green. NetWeb, expect pain here. For some reason, and maybe rightly so, NetWeb has become a proxy for the AI play. So you're seeing it mirror what is happening across the board. And when Nvidia was in focus yesterday, NetWeb was up. Today, the reverse has happened clearly, so 2.5% down on NetWeb. Groww is something that we've been tracking very, very closely. Q2 results will be up today. Look at the recovery already, 4% up after 2 days of hammering ahead of Grow's Q2 numbers, which will be announced. RIL, we wanted to focus on. They've stopped Russian oil imports. and completely flat on that heavyweight. VIP, their property transaction is in focus. Is it kosher? Is it not? Will it help the company or not? So that's one stock that you should keep an eye out. And of course, we talked about Hindalco. Let's pull up Hindalco and look at the impact of the Novelis fire, about 2.5% down. So this is Novelis is basically their subsidiary and internationally, and they've had a large fire for second time in a row, and they are a big contributor to the top line for Hindalco, which is why you're seeing the pain point there.
Absolutely. All right. So, and in fact, I would hazard to guess that you've covered most of the big news makers, or if not all of them. At this juncture, about 150 points away from all-time highs. That's the number that you should keep on your radar, 26,277. And of course, we've come off the low point of the day already. Now cuts of about 0.2% for the benchmark Nifty 50. I wonder whether that changes over the course of the day. There's no reason to expect that it won't, because it has in the last couple of trading sessions. The second half, and particularly the last hour of trade, hour and a half of trade, has been one to watch, where there's a dramatic shift either one way or the other. A few more stocks from the broader markets that are moving. You have RITES that is up and about today, about 3.1% higher or thereabouts. TBO Tech is up about 2.6%, 2.7%. Aegis Vopak is up about 2.2% or so. Credit Access Grameen, interesting one to look at right now, is up about 1.6%. But really, if you look at the Nifty 500, there are much more declines than gainers at this point, and that might just be the scenario, the texture for the broader markets as well. I want to ask Parag Bhai what he thinks about something like a Credit Access Grameen, if not necessarily this one, then what he thinks about the health of the microfinance lenders or the lenders to small and MSMEs. Would you say that the worst might just be over, things are looking up?
So basically, see, microfinance, I have decided that I'll not invest because it is a very, very volatile segment, high yielding but volatile. So I have played it through Piramal, as you know. I have played it through various other companies where microfinance is the exposure. But in Piramal, for example, 80,000 crore loan book, 1,000 crore was Piramal Finance. So I was referring to Piramal Finance, which we discussed at around 1100 on your show. Of course, we have also booked some profits over there. But I would say that, I would not play standalone MFI space. I would like to play through a lender who lends to various other secured segments more. There might be little portion of microfinance, because that microfinance pain is also, I would say, by every day it is getting reduced. But where it will come back, you don't know. So that is why I don't invest in standalone microfinance companies generally. So that is why it is a space which I'll avoid. But I have overweight on financials, you know. I have SBI, Axis, HDFC Bank, ICICI Bank, Federal Bank, and so on and so forth. So financial space is something which I love, but considering the economic growth which I'm envisaging, but not standalone MFIs.
Okay. Amar, thank you so much for joining us. Parag Bhai, always a pleasure to have you on the show. We're off to a bit of a rocky start, but let's get the big picture in. Mihir Vora, CIO of Trust Mutual Fund, joining in now. Mihir, great to have you on as always. Well, it's not quite TGIF or party time for the markets, but then, slow and steady wins the race at the end of it. I think that we're staying above 26,150, not seeing some big selling pressure is also good. What do you think are the factors that are going to move the needle for the Indian markets right now?
Hi, good morning. I think the biggest factor, of course, is the trade deal going through. So that's one event that everybody's waiting for. Second is the fact that some of the AI plays are losing sheen in the US, and that's what was sucking money away from all other markets, including India, etc., into the US. So if that AI frenzy reduces a bit, then we might be in for some more money coming into the country, in India, China, etc., from the FIIs, because that was just taking away too much attention. There was too much momentum on that side for global fund managers to ignore. So when a big sector is moving so fast, you can't just ignore it. You have to be there. So if that momentum is broken, then probably we should see money coming back to the country. And the third factor is results, of course. We do expect the second half to sustain the momentum in consumption as well as government investment, as well as private sector investment, which should ultimately lead to credit growth. So if that happens, then we should see the banking sector, which is the largest sector in the markets as far as the index weight is concerned, that could lead the way. So these are some of the developments that one should look forward in the next half.
Mihir, hi, Alex here. On the second point, with regard to overseas investors coming in, I have a counter argument to make, because of course, when we look at our own home, we're happiest, and we praise our home as far as possible. But others looking in may not have the same opinion, particularly considering that we're at or very near all-time highs for the benchmark, and valuations have not come off very materially. So while relatively speaking, compared with other markets, we may have underperformed, valuations are not necessarily extremely attractive from the outside in. Would you agree?
No, Alex. First of all, India always trades at an absolute premium to most of the markets, and that's because of the superior structural higher growth story that we have. And that's not the case now. It's been the case for the last 20 years. We've always traded at a premium to emerging markets in general, and even to at par with our premium to the US markets also, because our earnings growth has been superior. So that's one point. Relatively speaking, we have underperformed the US markets in the last 12 to 15 months. So the premium of India compared to most other markets in the last 12 to 18 months has actually shrunk. So if we expect that historical growth rate of India will continue to be higher than the rest of the world, then the India premium should also come back to historical levels. So I think it's always about relative valuations, relative premiums, rather than absolute premiums, because in absolute terms, we've always been at a premium.
Okay, right now, Mihir, it seems like markets are not really taking into account anymore what we've seen in Q2 and all of the commentary of a better second half. Do you see a situation where once the US-India trade deal is in place, or even if there is some direction towards this, then that kicks in, or has it already been priced in?
I think markets are reacting well to results. For example, while the Nifty is more or less close to the highs, the mid-cap index has actually broken through the previous highs. So it's not like the markets are not reacting to the expectations of a better second half. They are reacting to good existing results, as well as I think there is a little bit of optimism priced in for the second half. I don't think it's overpriced. So if we continue to deliver, then there is a case for the markets to re-rate even further from these levels.
Mihir, good morning. Neeraj here. The interesting piece has been that the last couple of months has been very concentrated towards the large caps, if you will, and also large caps which haven't performed thus far are doing well, because the obvious differentiation that we saw was that M&M hasn't performed in the last 1 month, but Reliance has. In some sense, there is a bit of a rotation happening there. What, based on the Q2 numbers, the commentary, and the portfolio positioning that you may have in your portfolios, what do you think takes the market higher, or what would be the best performing pieces if the indices were to rally from here on?
Oh, absolutely. So, as you correctly mentioned, there are sector rotations happening. The biggest sector rotation that can drive the market further from these levels is the financial, and within financials, the banking sector, both private sector banks as well as public sector banks. If you look at the last 2 years, the banking sector in general has been the slowest performer within the large cap as well as the mid cap, small cap space. So that's one big segment which actually has not contributed to the Nifty, even when the Nifty has reached almost at its previous high. So to that extent, the second half credit growth is a factor of great importance. And in the Nifty 50, banking sector is almost a third of the weightage. And if that performs, then that should be the big driver. Second is IT. Again, Indian IT has been neglected, and with good reason, I would say. But the underperformance is quite stark now. And that's also because of the anti-AI play, or India not having a big AI play. So as we just discussed, if the AI hype reduces, then you might see a bit of a leg up for the second largest sector in the index, which is the IT services index in the Nifty 50. So I think these two large segments have not yet contributed to the Nifty, and these can actually lead the index to newer highs in the second half.
Okay, thank you so much, Mihir, for speaking with us. Always a pleasure to have you on. Mihir Vora, CIO of Trust Mutual Fund. There on the outlook for markets, I think we'll have to pause and hold our breaths a little bit for an all-time high because you're sliding quite in the opposite direction. Not massively though. Look at the recovery in the markets. If you look at it intraday, there has been a fair bit of recovery in the markets. Let's look at the contributors of the Nifty which are helping out with that recovery coming through at this point. And yeah, you have now RIL and M&M both swinging into the positive. I want to pull up the TCS and RIL intraday chart very quickly before we get to our next corporate conversation, which will tell you what the mood there is. TCS lifting off nicely, about 0.75% up. RIL also now lifting up in the green. But let's talk a bit about PG. Electroplast posted a weak Q2 with profits falling sharply and margins nearly halving amid a tough demand environment. Before we get to our conversation with the management, Puneet joining in to set that up.
Well, thank you for that. It's definitely, as you rightly said, a difficult and a weak quarter for the company. Revenue profit is down 86%. Some of the key aspects, was that the inventory post quarter one was quite elevated, and some update on that will be key. But also the other factor that the company has largely maintained its guidance post quarter two earnings. Street was anticipating that this could be under pressure given the weak Q1 performance, but company largely expecting 5,800 crores of revenue in this year with 300 crores of profits. I think that's something that has led to strength, at least despite weak quarter results of performance largely being stable. So those are some of the key aspects from the conversation, as well as what the management expects as well, amongst other factors, because the industry is expected to be a flat growth for this year for the AC business, and you've seen that impact on the likes of PG, on the likes of Amber, EPAC, amongst others, and that will be something that we'll continue to monitor in quarter 3 and quarter 4 as well.
Thanks for that. Let's get in Vikas Gupta. He's the MD at PG Electroplast, and he joins in right now to talk about what could happen in H2 after what has been a peculiar quarter two. Remember, PG hasn't quite cut the guidance too much. But Vikas, thanks so much for joining in. And let's start with the RAC segment weakness, right? Early monsoons, whatever. What specific measures are you implementing to accelerate inventory clearance and support growth?
Basically, for us at PG Electroplast, the order book that we have and the kind of ramp up we have seen in the months of October and November, the kind of pickup that we are seeing, we are quite confident that the inventory should normalize by end of December for us. When we talk about the normalization of inventory, it means an inventory level of almost around 1 month of production, 1 month of the sale. So we expect to reach that level of inventory by end of December. We are quite confident on that.
Oh, okay, no, Vikas, that's interesting. Simply because we were speaking to Blue Star yesterday, who said that the inventory levels for them are higher than normal, and for the industry, they are higher than Blue Star as well. Do you differ from what Blue Star is talking about inventory?
For us, the sense that we have from our clients, I will repeat that, we are very confident that we should be able to normalize inventory, because please understand, December end, there will be a changeover to a new rating label. So we will be shifting to a new rating label from January 2026, new rating table. Okay. So we have to clear out a lot of inventory, and a lot of brands will be picking up the inventory by end of December, because there is a big cost up in at least 2 different categories of products. One is in the 5-star inverter category and the 3-star fixed speed category. There is a bomb increase of almost around 15%. So the brands will be picking up a lot of inventory before the switch over to the new rating energy label in 2026. So we expect a good pickup going forward.
Okay. Now, your business guidance was revised downwards marginally, but the overall revenue targets still remain, I believe. How do you anticipate the non-room air conditioning segments like washing machines and refrigerator production ramp up to offset the RAC degrowth?
We are quite confident by the end of this year of FY26, we will end RAC also with a growth of around 15 to 20%. On the back of the industry degrowth of almost 10%. So we are very confident of that. It is based on the order book and the forecast that we have till the FY26, the March ending of 26, we have that kind of order book with us. In addition to that, all our other product categories like washing machines are doing extremely well. We are quite confident that in first half we have grown more than 50% in the washing machine business. We are confident to maintain similar momentum in the second half as well. And in our plastic molding business, in our electronics category business, we are seeing a robust growth. So that is also pitching in with some numbers, and we are confident that we will be able to recover some kind of a loss of revenue that we are seeing on the AC part.
Okay, now Vikas, a slight, I want your view here. Trent, when they gave out the release, said that people are going for the premium products right now because of the GST cut, and it has not quite come into the lower end. What you are saying in part reflects that, but I would love to know whether October, mid-November, etc. has shown signs of that across product categories.
We are confident in Q3 also, we should be able to deliver some kind of a growth in our numbers as compared to the Q3 of FY25. We are quite confident on that. So we are confident to grow our numbers for the Q3 of FY26 as compared to Q3 of FY25. We are confident on that. It is based on the multiple product categories that we handle, like we handle washing machines, as I told you earlier. So we are seeing a very strong momentum. In RAC also, as I told you, because of the change of the energy table, there will be a pickup that we anticipate and we expect. And based on the confirmation that we have from our clients, we will be seeing a lot of pickup of the inventory before the end of December. So we are confident that we should be able to maintain a good momentum.
Okay, with a healthy order book and the anchor customers for the refrigerator business, would you expect this to, kind of start production in Q3 FY27? And what would be the project contribution margins as well as the revenue potential from this vertical over the medium term?
So for refrigerator, our plant should be up and running by Q3 or Q4 of FY27. We are in process of very advanced discussions with one anchor customer, which will take up almost around 30 to 40% of the installed capacity. And the ramp up will also take some time. I think by second or third year of our operations in refrigerator business, we should be able to realize a revenue of almost around 700 to 800 crores from there. So that is the kind of potential of the revenue that can come from the refrigerator business going forward in the next 2 to 3 years.
Your capex guidance, though, I believe you've maintained at 700, 750 crores. But it's a challenging Q2. Could you tell us where is it that the monies would get used? Because I'm guessing RAC segment being low, you probably don't need to expand too much there.
We are sticking to our capex guidance of around 700 to 750 crores. That is the capex that we are already undertaking for FY26. And that the broad allocation will be almost around 250 to 300 crores will go into the expansion of our capacities in our AC business. And there is a new facility which is coming up in Bhiwadi as well, which should be up and running. Then the around 250 to 300 crores are being allocated for the our refrigerator business. And I think major part of that capex should be realized by before the end of FY26. And I think the balance will be going to the further product development and the investment in our washing machine category. So in washing machine also, we are further increasing our capacity to take it to more than almost around 2.5 million kind of washing machines capacity that we are creating now. So that will be the broad breakup of the capex.
And Vikas, last question. You maintain your FY26 net profit guidance at 310 crores. Following a Q2 miss, I'm trying to think what will happen in FY27 where you don't have any of these issues, a better base as well. And what are the risks, of course, to meeting this number as well?
So Neeraj, for FY27, I cannot give you any comment right now. We are going to come out with the numbers for FY27 towards the end of March of FY26 because we have a sense and more clarity. Please mind it, till March FY26, the numbers, why I'm showing you the confidence, because a lot of pre-build, the manufacturing will happen, the primary sale will happen. It's only when the actual summers will hit and when the sale will start happening the tertiary sale will happen, the second sale will happen, then only we can make out how the Q1 of FY27 will play out. That is when we can give you the better clarity how the FY27 will look like. But we are keeping our fingers crossed. Neeraj, please understand, we have to look at this as a long-term view. We cannot look at a quarterly basis. We have to look at how in next 2-3 years we can harness this. The opportunity is going to be very large. Maybe 1 or 2 quarters here and there, 1 or 2 weathers here and there, but we should be ready to see whenever there is an opportunity, we should be able to have a capacity available for that. That's why we are still sticking to our CapEx guidance.
Got it. Okay, Vikas, well, wishing you all the best with all that confidence and all that delivery. Thank you so much for taking the time out and being with us. And that's PG Electroplast. Remember, one player, EMS player, which hasn't quite gone ahead and cut the guidance despite an iffy Q2. And look at that confidence that the market has in that commentary. The stock has gained as the management was talking to us, 1.45% higher at the high point of the day. Clearly something that the management said struck well with the audience. And guys, just that one thing that came out, that all the other, Blue Star yesterday was a completely contrasting commentary to what PG Electroplast has said today, because Blue Star was saying that we'll be lucky if we meet the volumes of last time.
Rained out match.
All of it. Exactly, right?
For the next one.
Yeah, so far before interval, it's been a dull.
This guy is saying, boss, we are in the game right now.
Yeah.
Interesting.
Wow.
So maybe it'll take time for the end user, the last end of it.
Yeah.
Right?
I don't know if the inventory is being there in the system, which Blue Star alluded to, even PG should get impacted, but they are saying they won't.
Yeah, so management commentary, but the thing is that, is the management optimistic because that's the nature, or are they being,
you know, stuck to the guidance, with the numbers?
They have stuck to the guidance, no doubt. I just want to pull up the intraday of PG Electroplast while that conversation was on with us here at NDTV Profit and with Neeraj. Look at that spike over there.
It's going even further.
Just saying, not saying anything here or there, but then, this is where you need to tune in if you want to really hear good conversations, quality conversations with the management. And of course, it's very clear that the market's tuning in as well. Well, we're tuning into what's happening in Israel right now. India-Israel FTA talks are gathering pace as Commerce Minister Piyush Goyal kicks off a high-level meeting with top leaders, CEOs and innovators across strategic sectors. Yesterday in conversation, he also hinted that an India-US trade deal could be on the horizon. But even as we wait for those details, Rishabh Bhatnagar tracking all of those global developments this morning again from Tel Aviv. Rishabh, apart from what's happening at the conversations here during this particular meeting, what are you picking up on trade deal and where are you today? Yesterday you were talking to us live from the beach. Where are you today in Tel Aviv?
I'm at a street near the beach, and a lot of I thought of showing a different part of the morning activity here in Tel Aviv today. A part of what we're seeing with respect to a trade deal, I think yesterday what Piyush Goyal hinted at in his opening remarks here in Tel Aviv was very interesting. He was referring to the GDP forecast revisions for India, and he said that those were revised downwards by certain forecasters because they thought that the US deal wasn't happening. So I think it's a clear indication of the fact that it's completely out of the question whether or not a deal is happening. Now it's a matter of time, it's a matter of when it will happen now, and all indications point to a finish of the first tranche of the deal before the end of November. And I think all sorts of commentary has been very bullish towards it from both ends of this deal. And the first tranche, we've gotten some clarity that it will address all kinds of tariffs as well. So it could very well see a potential reduction from the current 50% tariffs that India is facing to a much lower, definitely lower than the 25% tariffs that were earlier slapped on India. So we're seeing a very meaningful reduction on that. Apart from the US deal, what we're seeing is the Israel deal. The TORs have been finalized in terms of reference, and that is always the first step whenever it comes to a trade deal being signed. So I think the hard news part of the Tel Aviv leg is over now. We'll be headed to something called the Paris Innovation Center very shortly. And that is where all of Israeli innovation, all the high-tech technology is on display there. And that is something that we're looking forward to currently. We'll also be heading to Jerusalem very, very shortly, which is the sort of cultural part of this event. A lot of Indian community there also waiting to meet Piyush Goyal. So that is something that we're looking forward to on day 2
I'm
of
sure
Piyush
you
Goyal's
are,
Israel
Rishabh. We're looking forward to seeing your reports from Jerusalem and to have NDTV Profit there at Jerusalem and understanding those not just cultural ties, but of course business ties. And of course, Rishabh will be tracking what's happening with the India-US deal. He's right there with the Commerce Minister's contingent. All right. Talking about Hindalco this morning, another fire incident was reported at Novelis' Oswego unit. This is the second such incident after a fire at the New York plant in September. Sharad Dubey joining in with more details. The stock a bit under pressure, Sharad, but what do we know about the extent of the fire and the impact it could have?
Interestingly, it could impact the EBITDA numbers going ahead, and largely just to give the entire perspective, this is the second fire coming in from Novelis. It's the US arm, and Novelis is also a key supplier for aluminium sheets to Ford Motor. And yesterday in the trading session, even Ford Motors cracked almost 4% Q3, the impact is expected to have a significant hit in the EBITDA numbers. Largely, the FY26 EBITDA impact hit could be $100 to $150 million. Cash flow impact could range between $550 to $650 million for the second half of FY26. Now, going ahead, two important things to watch out for. What will be the company's commentary on this second instance of fire? And interestingly, any revision of guidance would be there when it comes to restarting the production of the facility by December 2025. And lastly, the company, after the previous fire in September, guided that the facility will resume production by December 2025. So key timelines for the factory opening will be a key trigger to watch.
All right, and negative, of course, but off the low point of the day. Pull up the intraday chart for Novelis. It's just a tad bit off the low point of the day. Now it cuts of about 1.9%. Now, let's also look at Genus Power, and we will bring the management in to talk about both the second quarter as well as the path forward. But to lay the context for that chat, the stock is trading at about 1.2% lower. The second quarter was actually pretty strong, and that was on the back of an aggressive smart meter deployment and also a sharply expanding order book. Where does that order book stand? What is the potential and what has worked so far and what's lined up ahead? Anushi joining in to talk about the key numbers before we speak to the management. Anushi?
Hi, morning Alex.
Morning.
So it's a couple of strong quarters that we've seen for Genus Power, and this is mainly on the execution of smart meters now taking in effect. We are looking at a revenue growth of around 136%, and this is with margins inching upwards to 20% in comparison with 16.7%. Net profit also saw about a 72% growth. Considering a particularly strong H1, the company also raised its guidance to 4,500 crore for revenue versus a 4,000 crore which was earlier given, and this was with an expectation that the margins would be somewhere in the range of 20% versus 18% stated earlier. In terms of installations also, they installed about 3.6 million smart meters at the end of H1. So that is what is the picture in terms of where the results are. But of course, the main focus remains on the order book, which stood at about 28,758 crore, which again showcases a revenue visibility for over next 2 years. In fact, if you just take a check in terms of how the order book has grown so far, from a 4,000 crore of an order book in FY23, now the company at the end of FY25 had about a 30,000 crore of an order book. Their book to bill increasing from 5x to 12x. So that is a significant up move that we are looking at. But focus would be on how after the installation part of these smart meters which are there, how many of them will get that go live status, which would determine the trajectory of the business as well. In terms of what should be monitored, however, is something like the net working capital days because of increasing receivables and inventory days, which has led to some bit of that pressure. But the management remains optimistic on reducing that number also by the end of FY27. That would also determine the debt picture also for the business going ahead. So this is the overall picture that we have for Genus Power so far.
Interesting. All right. Thanks so much, Anushi, for laying the context for us. We're joined this morning by J.K. Agarwal, who is a joint managing director of the company. Mr. Agarwal, thank you so much for taking the time. And I think my research analyst has laid the context perfectly. So let me start with that augmented revenue guidance. what is giving you the confidence? Is it the rate at which you're adding smart meters and the visibility on revenue that provides that is giving you the confidence? And will you at any point have to revise that even further, or are you comfortable that this is where you will end up?
Yeah, good morning. And it is always a pleasure coming to your show. So we are more than confident, and generally you have seen historically also as Genus management, we have been more conservative. So whatever the guidance we have given, like 4,500 crores with 20% of EBITDA margin, we are very confident of achieving this guidance. And even for the next financial year, the guidance what we have given of around 5,500 crores. But these are backed with these are not tenders. These are fixed orders what we have received. And everything what we are talking about when it comes to guidance, we are talking with the confirmed orders. And that way the execution scale has gone up in the last 2 quarters, it is clearly visible that these are very much doable numbers.
So Groww, I'm just trying to understand the product life cycle of this, and please explain to me as if I don't understand this. When you get a smart meter order, what is the trajectory of of revenue booking from installation to go live to the life cycle of that smart meter, and what does that mean in the context of your current order book and what you need to execute from here on out?
Okay, so just to give you a proper perspective of it, let's take a ballpark figure of Genus as an order book of around 30,000 crores as on date. Of these 30,000 crores, around 27,000 crores comes from the RDSS scheme, which is a 10-year projects under all the SPVs. These 10-year projects is we have to supply the meter, install the meter, do the billing integration, all the software systems has to be set up, operation go live, and then maintain them from 8 to 10 years. And the revenue of this will be, of this 27,000 crores, almost 50% of the revenue will be from supply, installation and integration of system, which will be for next 3 years, I would say, and remaining 50% of this 27,000 crores is O&M, which will happen month on month for next 8 years. So this is how you can see the revenue of the company from these orders. I am talking of only the RDSS orders. Beyond these, there are more than 2,000 crore business which company is doing as a supplier, which we have been supplying meters to the AMISPs, to the utilities which are still buying non-AMI meters, to our export business. Some numbers are added with our water meter and gas meter business. So this is how you can clearly see the revenue of the Genus as on date with the current order book.
Then, and I'm glad that you've given us that perspective. So just to follow up on that, in that you have currently installed what, 8 million, if I'm not mistaken, smart meters? Right?
Yes.
So, and what is the vintage of those 8 million smart meters? Over what period did you install them?
So these 8 million smart meters, you will see the first contract happened almost 2 years back. But these are number of contracts that has happened over the period of time. So as on date, Genus has an order book of 3.62 crore meters which has to be installed beyond our supply orders. So out of these 3.62 crore meters, 80 lakh meters has been installed, and further you can say 2.8 crore meters has to be installed in next 2 to 3 years. So this is the trajectory, and all these numbers have started coming because all these projects have been decided in the last 12 to 18 months.
Sorry, Mr. Agarwal, I just want to complete my point, otherwise I lose my train of thought. And these numbers are great. The reason I'm asking you about those is that since you've explained that 50% of that order book will be booked in the operation and maintenance phase on a month-on-month basis, you're talking about 4,500 crore revenue in this year, right? I'm just wondering what the implication is when now you're saying that over the last 2 years you've done 80 lakh and you will do a further 2.8 crore over the next 2 years. So the trajectory, right? So the trajectory of the revenue is going to absolutely take off 2 years from now, would you say? And so therefore, what I'm trying to understand is, as of FY 27-28, what is the kind of projection that you have about the whole revenue book and where does it go?
So currently we are giving the guidance for next financial year. Though the numbers are very easily mathematics can be done and numbers can be talked about, but we are not speaking these numbers because it's almost 16, 17 months before we enter to the next 28 financial year. That is the reason we are not speaking about any numbers of 28 financial year. But we can see a very, very comfortable growth. Definitely, financial year 27 will be better than 26. Definitely, financial year 28 will be better than 27. We see no reasons of not having better numbers in these financial years. But putting any specific number, I'm not doing it.
Just ballpark. I'm not asking you to, I'm not holding a gun to your head. I'm just trying to paint a picture for us. What is the potential in your opinion?
It will be better than the guidance what we have given for 27. Definitely, there's no question about
it. And you're confident of that 20% EBITDA margin?
Yeah, definitely. Yes, we are confident.
FY27, let me push you a little bit. FY27, what is the execution on smart meters that you will do?
So FY27, I expect we will do at least 10 million smart meters installation.
Okay, so thanks so much for taking the time, and I think a lot of my viewers will now leave this conversation knowing better how you do your business if they didn't know earlier. We'll talk to you soon.
Thank you.
All right, we'll slip into a very quick break, but on the other side, we've got an exciting chat lined up for you. It's going to be the Citi think tank talking about the Q2 that was, which was better than a lot of expectations, and the path ahead. Does that trajectory continue? Stay tuned for what's going to be a riveting conversation.
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
We are at one of the facilities of Merck in Bangalore. Well, we are here at R&D facility or Research and Development facility of Merck. Now there you go. Ooh. Merck actually develops those life-saving drugs which are used in cancer and MS. The business model of Merck is stable. A drug faces competition, the life science segment or the semiconductor segment chips in. So basically what they're doing is they're curing you, they're enabling science, and they're lightening up the world all at once.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
Thanks for tuning in to Profit Insights. I'm Neeraj Shah, and over the next 25 minutes, we'll talk to the top think tank at Citi India about what they feel is in store for the rest of FY26. If it's possible to look that far out in such a in a world wherein weeks are as long as decades, maybe sometimes. But let me introduce the team here with me in our studio. Surendra Goyal, Head of India Research at Citi. Arvind Sharma, Head of India Autos and Transportation. Kunal Shah, Head of India Banks and Financials, and Vijit Jain, Director, India Internet at Citi. Gentlemen, all of you, thank you so much for taking the time out. And Surendra, now it's been 6 or 7 Truth Social posts and some reverts from our side as well, which are saying a trade deal is imminent. My question to you is that sufficient condition? We know it's a necessary condition. Is it a sufficient condition for the next leg of a market rally as we are close to all-time highs, or do we need more?
Yeah, so first of all, thanks for having us on the show. So I think the trade deal, okay, the contours of that, the details. I think all of that will be important to watch out for. And what we have been writing in our notes for the last couple of months, that it is one of the key things on which clarity is required and positive, which kind of firstly, if you think about what has happened this year, right, to put this in context, India has underperformed emerging markets by 25% odd for a few reasons. The first is obviously there was a view, say 6 months back, that India will be one of the biggest beneficiaries of a trade deal with US. From there, we came to a point where our effective tariffs were on the higher side. Okay, so that is definitely for foreign institutional investors, which is where the outflows are from, a big issue. And second has been the AI trade, which has benefited other countries in EM a lot more than India. Now, one of those issues gets resolved if we get clarity and favorable clarity, and to that extent, it is going to be one of the big catalysts for the market. And the other thing which has already happened is the GST benefits, which are starting to come in. We already saw numbers being better. Festive season was much better. So in our note, we put out these 2-3 things. And to that extent, yes, clarity on the trade deal is an important overhang. And that should help the market as we go forward. And the other things are in place, right? The setup is right. There is a huge underperformance. Earnings, at least after a year plus of downgrades, we saw stability in the last couple of months.
I read your note, yes.
Yeah, this earnings season, EBITDA growth and profit growth for top 100 companies was 12%, which was better than expected. There is a big underweight among EM investors. It's close to 20-year highs, the degree of underweight. So I think a lot of the conditions are in place. And to that extent, I think as clarity emerges, it should help the market.
Got it. But so the trade deal by itself doesn't help earnings, right? I mean, largely because the sector's impacted, not a very high market cap. So is it a trigger for FI flows, and which is why it's positive for markets?
See, typically two things, right? One is, if you go back, markets don't like overhangs, right? They like clarity. So it will bring clarity, okay? And so that's the first thing. And secondly, yes, as I said, if you look at the underperformance, if you look at the outflow, and when we talk to foreign investors, it has been a very dominant theme in discussions. So to that extent, I think clarity, particularly if it's favorable, automatically will change the course of the discussion and narrative. And when you are sitting on so much underperformance, that should help reverse at least some of the underperformance.
Okay. And I know, Surendra, you will tell me that it depends on the contours of the deal, as it should, right? But I'm just trying to understand that if we reach a trade deal which is decent, right? We don't know what is decent, but let's assume decent is anything 25 or sub 25. If it's 15, then it's really great or whatever. But you will see the contours. Yeah. But broadly speaking, when I read your note that came out, you are constructive than before, not overtly bullish. At least that's the tone that I sensed from your note. Yeah. If the trade deal were to happen, can the tone change in your note that the next morning?
Yeah. So, see,
will the targets change?
So if you think about what I said just now, right? Markets like clarity. So firstly, you need clarity, and then obviously if it's more favorable than what the market thinks, that's an additional positive compared to where we are today.
Got it.
So that's how I would
So your targets might change depending on the
I can't comment on that obviously, but yes, it is an important variable which we are looking at.
Okay, fine. And it will have a direct impact maybe on a lot of themes, but one of the themes, Kunal, that will benefit per se, right, with all clarity is BFSI, because a large presence of foreign institutional investors. So from a flow perspective, and any which is with all that's happened to consumption as well, which we'll talk about, banks are indirect beneficiaries in a big way, right? What is your sense of how is the earnings picture and the sentiment picture for your sector looking currently?
So we have already seen Bank Nifty outperforming the overall Nifty by almost like 6% year to date. And today when we look at the overall setup, even for the banks, it's favorable because margins have almost bottomed out in the second quarter. Growth, there were a lot of apprehensions earlier. The street was expecting closer to like 10-11%. We were of the view that we could be closer to like 12% growth at the industry level. I think now this 11+% print, which is coming through in the fortnightly numbers, that is giving much more confidence that we can get towards 12-13% credit growth as well. And asset quality, I think that gets maybe if with the lower tariff, I think some of the concerns which were there with respect respect to export-oriented industries, that also, I would say, that gets led to an extent, and that could help the overall asset quality outlook. And for the first time, we have seen some kind of a stability in the earnings, and for few of the banks, we in fact even saw the earnings upgrade after a long time. It's been like last 6 odd quarters wherein we have continuously seen kind of earnings downgrade in banking sector. For the first time, we started to see the stability and earnings upgrade. So that's also the good sign for the overall banking industry. And that's where we believe maybe if growth is favorable, asset quality, there are no issues, maybe no new segments showing any stress, and maybe margins bottoming out, earnings outlook should be positive for banking system.
Very good. And therefore, what brings to the next question is that how do you play this, right? Because, much as you think of top franchises and you want to buy, I was just coincidentally just doing this check, 5-year journey of a Bajaj Finance versus an SBI, and who would have thought back then, but Bajaj Finance has underperformed SBI massively, like 1:3 or thereabouts, right? How do you play this credit growth up cycle? Do you use PSU banks? Do you use private banks? Do you use this apparent consumption boom and use NBFCs? What do you do and how do you play it?
So interesting one, and I think one of the variable which will be keenly monitored is going to be growth. Because I think now margins, looking at the deposit and the loan profile, everyone is expecting how the behavior on the margins could be. And I don't think there will be too much of deviation, maybe in terms of the actuals which will get reported over next couple of quarters versus the expectation. Asset quality, I think everyone has been doing quite well. And wherever there was pain, be it in the personal loans, credit card, or maybe even MFI, I think that has also bottomed out. So asset quality is also favorable. So I think the key variable which is going to be looked upon is growth. And whosoever has the liability franchise, has the capital, maybe who have invested in terms of technology, distribution, and who can participate in the growth, we are seeing a lot of re-rating happening in those stocks. So as you mentioned, maybe compared to that of large caps, we are seeing more interest coming in for the mid-sized banks, because there they can deliver, there are expectations that now they can deliver more than 20-25% growth as well. As you indicated, maybe Bajaj, it has always continued to be like more than 25% average CAGR. And when you look at PSUs, it's more of a cyclical. And when you look at it last quarter, everyone was looking forward to on PSUs, whether they are able to sustain 1% ROA trajectory or no, because there were expectations that the treasury gains are going to be limited. And most of the PSU banks, when you look at it, they delivered more than 1% ROA, even with limited treasury gain. And that's where we saw, be it SBI, almost maybe post the QIP, it has delivered more than 20% return. And most of the PSU banks have outperformed. If you look at it like last 3-6 months, they have outperformed by more than 10%, 15%
Exactly.
to Bank Nifty. So I think that's why the trade has been that sustenance of the ROA was critical in case of PSU banks, and that's happening.
Okay, so I'll come to the non-lending part in a bit, but very quickly, the mid-size piece that you spoke about, what is your pecking order at Citi?
So we like RBL and AU Small Finance Bank.
Okay, those are the two, and in that order?
In that order.
Perfect. Okay, thanks so much for that. Vijit, welcome to the show, and thank you so much for coming here to our studios as well. I'm looking forward to this conversation because it's a hot space, right? and the one thing that you might not be able to defend is valuations, because it's always easy to take pot shots at those valuations. Right? How do you look at the space currently, especially after the last couple of quarters and the small changes that have happened in the numbers?
Yeah, sure. So, the internet space, the platform companies, it's always been a story about competition coming in waves, and companies choosing growth over, say, margins and higher EBITDA in the near term. And I think in the last, we've seen a whole episode of this through the course of this year. Initially, in the middle of this year, you thought that companies are prioritizing margins over growth, and so you saw earnings upgrades across most of the companies that we cover. And more recently, I think we are back to a phase where companies are choosing to go for growth. So you see that across quick commerce, you see that in food delivery, you see that in e-commerce as well. I think a combination of customer acquisition costs coming down to a point where companies want to go for growth, go for market share, is in vogue right now. I think for our companies, the way we look at it is, if over time your marketing efficiencies are great, if your growth investments are actually yielding new customers, good quality customers, then these companies are investing rightly for future growth. And we prefer to back those kinds of companies. We like those kinds of companies.
Just trying to understand, because it becomes difficult for an average viewer to understand this, right? When you look at all of these metrics, where is it that you find a confluence of some of the elements that you spoke about within that universe? And also, is just part 2 of my question, would large imminent fundraisers in any of those businesses and large equity dilutions be a point of concern, or do you digest that because of the nature of the business?
Yeah, I think it depends, right? So, see, fundraisers obviously raise concerns, especially if companies are raising funds to kind of compete with each other. And if you think about it as a zero-sum game, where my gains are going to come from at your cost directly, then it's obviously concern. Then it means that you're just burning cash while not expanding the pie. But in categories like quick commerce, for example, you could argue that decent chunk of the fundraisers will also help these companies kind of grow a little bit better. Expand the universe and ambit of quick commerce, for example, a bit more. And so it's a trade-off. It depends on execution, a whole bunch of other things. But yeah, as long as you're deploying that capital effectively, I think you can look at it more constructively, which is to say that a number of other things also matter. But it's always been the case with internet companies that adequate amount of funds in your balance sheet is an important factor, because it gives you the confidence to deploy capital over a period of time, rather than worry about if the market turns and capital raising becomes difficult in the future, that you're caught in a hard space.
Okay, so Vijit, just last follow-up. I mean, you might have coverage on some, you might not have coverage on some, but within that universe, and it could be the consumption tech or otherwise, where is it that you find favor and why? What names do you like on your list?
So, we do like the consumption tech. We do think that within that, the quick commerce space especially, we like the OTA space. E-commerce has been a bit of a mixed bag for the kind of companies we cover. Essentially, you would like to see better growth there for some companies. And yeah, so those are the 2 top preferences for us.
So both fintech, Eternal and Swiggy fit in that list. I'm just trying to understand, how does it work?
Yeah, so Eternal is our top pick.
Okay,
Make My Trip has been a top pick. And then, we do have fintech coverage as well, a little bit of that. It's showing signs of improving profitability.
Got it.
Hopefully it gets there as well in terms of, coming up in terms of the pecking order for investors as well.
Okay, fine. And just before I come to a sector that I really want to know a lot about, because everybody is dissecting what's happening in October and November, but there's a tail in out here to the internet point, which I want Surendra, you to come in. Traditionally, all tech in India was classified under one roof, whether it's IT services or tech or whatever. Now there is a clear differentiation. If I were to ask you, as somebody who looks at the research piece as a whole, but also looks at IT closely, right? Do you have a view on consumer tech versus IT services per se? Because I know you're largely been not so constructive Indian IT services businesses.
Yeah. So of course, just to qualify, obviously it depends on a lot of factors at any given point of time. Valuations, the starting point of valuations is an important part of that framework. But if you look at, say, as of today, we do have a consumer tech name in my top picks, but I don't have an IT services name in my top picks. So that will tell you, and we have had a underweight on IT services for a long time. Okay, so I think you need to be in growth. India, obviously, the market focus is always on growth. But as long as you are in growth at okay valuation, and valuations are generally high in consumer internet, but okay valuation, and particularly if a company is really strong and you believe it's a medium-term winner, I think you can still kind of continue to hold it. So we like consumer tech. IT services, my concern has been around the trajectory of growth. So we have generally been underweight. So as of now, I don't have a single top pick from IT services.
Yeah, it's almost become easy for me because whenever there is some bit of an exuberance in IT, I wait for Surendra's notes because that note comes and it's like, change kya hua hai bhai? So last time tha abhi bhi wahi hai, and yet people are getting exuberant. So it's been very interesting that way. Okay, autos. I want to start off with that because almost, I was looking at the trend commentary, for example, and it seemed to suggest that they are saying that people have gone in for the higher ticket items purchased first, and trends seem to believe that people will then come in for the low ticket items, the staples, etc. Did you sense from the quarterly numbers, from the commentary that came in, that things are gonna look hunky-dory for Indian autos, two-wheelers, four-wheelers, tractors, etc., because of this GST cut? And will Q3 be a remarkably good quarter? I'm trying to understand. And will it set the stage for further quarters?
Sure. So if you go back before the GST cuts, also the change in the tax slabs, generally better rate environment, and then the GST came in on 15th of August. So naturally, things were setting right. All stars were aligning for a good growth. Between 15th August and 21st September, we weren't buying because we think things are getting cheaper. On 22nd September onwards, things really came up, and if you look at those 42-day period, we're up almost mid 20% across all sectors, across all subsectors, passenger vehicles, two-wheelers, tractors, etc. Since we're talking about the quarterly numbers, companies were still a bit cautious. That's why you see most of them talked about second half growth of mid to high single digit. None of them was extremely exuberant saying we're going to go up 10-12%. No. But what we've seen now that we are towards the end of, almost end of November, things are holding on. The retail data does show a fairly steady number in both entry-level bikes, entry-level cars, as well as even some of the premium bikes and cars as well. So it seems to be across the spectrum that we are seeing good growth. Now, what remains to be seen is November the month when everything subsides, or do we go on further? Our sense is some of these changes are more structural. Thanks to GST, prices have been cut. When you look at the price cuts, actually companies have gone over and beyond what GST mandated. Beyond that 8.5-10%, we've seen companies cutting prices by 18-20% on specific models, right? So if that goes on for some time, and thankfully rural India is doing good, we see that in numbers, in tractor numbers, which is very visible. So we believe that there should be an uptick in broader demand across segments. Naturally, small cars or small or entry-level bikes which have been weak for so long. Last time small cars were doing good was probably 3-4 years, 5 years back. So you have a base that helps them, right? But even accounting for that, on a broader passenger vehicles and two-wheeler space, we should see a decent growth in second half. Tractor is something which has surprised us literally every month. You see commentaries getting more positive almost on a monthly basis. So there also I think we should see a good second half.
Okay. Can I just tie this in? I mean, vehicle financiers, is their commentary looking that constructive as well?
So in terms of outlook for the second half, everyone has been quite positive, be it with respect to growth as well as the credit cost coming off. So on the growth side, in terms of the targets, everyone is saying like by second half it should improve compared to what we saw in the first half.
Okay, so that is great. Okay, now if I can dissect and peel that layer just a bit, I heard you, I mean, you gave your hand when you said that tractors have surprised positively. Conversations with M&M and others as escorts, etc., also point towards that. What's the valuation versus growth parameter telling you about entry points for any of these autos? Because we saw that pattern that a lot of pre-buying happened in the stocks in anticipation of a very good thing, and then the stocks have cooled off a little bit. The last 1 month, I don't think there's been too much of a rara move into any of the auto names. So is this an opportunity into any of the auto segments to log in? And what? I mean, is it passenger vehicles? Is it premium bikes? Is it entry-level cars? What do you like?
True. I think just when the GST sort of was unraveling itself, there was a big uptick across all auto names, and things have not been as exuberant as they were in the first half of the period.
Exactly.
But partly it's also because the commentary, as I said, was a bit cautious. I think what investors would look now is does the volume sustain? If you look at carefully of what the managements were saying, they were obviously cautious, but they said we have to wait for November to ensure there's a trend that goes on rather than a mere blip. I think so this where we are right now, as I said, the fundamentals look good in terms of volumes where we are. So we still like the passenger vehicle names more. Our topics are passenger vehicle names.
Both M&M, Maruti.
Both Maruti is a topic and followed by M&M. We also find that some of the bike makers now are doing quite well versus what was expected earlier. That's how we would position ourselves.
Okay, I think Hero saw some upgrades recently, and I believe you guys also maybe wrote on it, right?
So we were positive on Hero going into GST as well, because they benefit the most relatively from a push in the entry level bike segment, and they have been doing their job in terms of going into EVs and scooters and premium bikes.
Got it. Okay. Yeah. Okay, great. Now, so that is great to also know. Surendra, what about the sectors which we haven't covered thus far? And when one scans the numbers, I think one or two obvious winners, aside of the ones that we've spoken about, cement, for example, blockbuster first half, if you will, at least in terms of reported numbers. Is there merit in trying to think about that sector? What else stood out for you guys as a house after Q2 for the next 2 quarters, next 4 quarters?
Sure. So firstly, answering the question on cement. Cement is a sector we have been overweight since the start of this year.
Okay.
Okay, and the rationale even then was that last year obviously was quite muted because there was a prolonged period where capex was weak and so on. And the entry point valuations again were pretty decent. Now what we have seen that play out is things kind of normalizing, numbers starting to improve, and that is what we continue to like. Of course, we are selective. We like a few names, but we continue to like the cement space. It's still an overweight in our sectoral allocation. Other than that, telecom is something which we have continued to like. It's been a consistent overweight for us. So that's, again, the numbers are strong, right? The drivers are all there. Okay, and to that extent, we still expect very strong EBITDA compounding to continue in telecom. Similarly, hospitals is a space we like. Again, good EBITDA compounding just continues. Again, these sectors may sound a little boring because they have been doing well for a while, but I think the EBITDA compounding is what continues to look quite attractive to us. So I would say those are the spaces. The industrials part, we have a more neutral kind of a view as far as sector allocation, and again, very specific picks looking at the portfolio, who is more indexed to data centers, for example, right? Some themes we are trying to play, but overall in those segments we are more neutral.
Yeah, a slightly boring question to end this conversation, but the typical debate that comes up, the most common meme floating around is of this guy or the lady who's throwing the kid up in the air in the pool, and that's the Nifty, and the other kid is drowning, and that's the portfolio of people, because large caps have done very well, mid caps, small caps haven't quite done well. Do you reckon that if indeed this trade deal were to happen, FPI flows, etc., were to come in, that will favor the large cap space a lot more versus the mid caps and the small caps?
See, the way, and again, I've been saying this for many quarters now, that we have tried to be more market cap agnostic. We have been saying that it's more stock specific rather than trying to say, okay, large cap will do
change in 2026?
It can change, but if the market becomes very euphoric, right, people become very positive. But in my view, that really needs to, typically it is accompanied by a lot of earnings upgrades. Okay, so if that comes through, then you could get to that scenario where people are indiscriminate in what they are buying, and you could have that kind of a rally. Right now, the good thing has been that it's been a tough market, and which is why people have started being a bit more disciplined in terms of looking at a lot of metrics and thinking about it before. And I'm talking of the retail investor behavior. You can see that in stocks and sectors. So if it gets euphoric, then obviously things can change. We have come out of that. There was a period where you saw everything do well, right, irrespective of earnings, irrespective of outlook. So that is what is required in my view for that change to happen.
Well, great. Gentlemen, thank you so much, all of you, for joining in today. Lovely talking to you as always. Vijit, great talking to you the first time. Didn't feel like that, but look forward to talking to you more.
Thank you.
And viewers, thanks for tuning in to this very special conversation of Profit Insights with the top think tank at Citi.
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
We are at one of the facilities of Merck in Bangalore. Well, we are here at R&D facility or Research and Development facility of Merck. Look, there you go. Ooh. Merck actually develops those life-saving drugs which are used in cancer and MS. The business model of Merck is stable. A drug faces competition, the life science segment or the semiconductor segment chips in. So basically what they're doing is they're curing you, they're enabling science, and they're lightening up the world all at once.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Thank you very much. You're starting golf. We want to thank you. That's very sweet of you. Thank you. I think that's very, very important.
The NDTV Profit has
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharjani and with me is Puneet Zaveri. On your screens is flashing Grow's earnings. We did see how it flew in trade post its listing and also did of course come back and see a lower circuit as well, but up 5% as we speak on the back of its earnings. Overall total income is up 13%, net profit up 25% and we have Sharad joining us to give us some more perspective. Sharad, it's the first time after their listing they're posting their earnings. What is the fine print saying right now?
Mahima, it's a very interesting update coming in and it seems like Groww has passed the earnings test. Overall, the Q2 numbers, we see the sequential numbers have been good, and you're looking at the numbers. Initially, the revenue has jumped up 13%, coming up on a sequential basis at almost 1,071 odd crore rupees. Even net profit, that's a significant uptick coming in with a growth of 25% and the number is 471 odd crore rupees. Now we are comparing these numbers on a sequential basis and that has actually shown an operationally strong quarter as well. We will be tracking the company especially on what their press release is likely to come up with, and at 4 o'clock today will be company's con call as well at what would be their guidance going ahead. Initially, Mahima, we had discovered that the October data we had seen market share gains coming for Groww. They have roughly 26% market share in the industry, while Zerodha is the nearest competitor that's having a 15.5 odd %. But after 2 days of sell-off, now we are seeing interest back in this counter and the stock is up almost 5 odd % after a better than operational earnings coming on a sequential basis.
Absolutely, Sharad, and that's reflected in the counter as well. I mean, last two sessions we saw almost 20% downstick in the counter, almost 22,000 odd crore of market cap was washed off for something like a Groww. But of course, that's a valuation correction role also playing its part, plus the volumes also playing its part. But we have Aditya Shah, founder of Hercules Advisors, joining us now. Aditya, hi. Thank you so much for joining us, and a very good morning to you. Your first take on Groww posting its earnings for the first time post its listing.
Yeah, I'm just seeing the results as I speak. So the result seems pretty okay. The revenue has fallen down a tad bit, and the profitability has also grown by about, let's say, 10 to 15%. So from my perspective, it is fairly okay. Mind you, most of the brokers have seen a little bit of erosion in volume as the market continues to remain sideways, and people choosing to stay away from trading. So from my perspective, steady results, nothing to complain about as such. Of course, the valuation is really very aggressive on Groww, and as the locked in investors will come into the market, we could see some bit of time correction or a price correction as well, but nothing relating to the results.
Aditya, very good morning. It's Puneet this side as well. What should actually, from the fundamental side, we should watch out for Groww going forward? Because you rightly mentioned that post a stellar listing, the extended run, we are starting to see some cool off. You might also see some time correction, as you rightly highlighted. We have the conference call today at 4 o'clock as well. Apart from growth momentum, what else will you be watching out for specifically for Groww in this particular quarter?
So basically, for a broker, volumes is something that I watch out for. Average volume turnovers that the broker does will at some point translate into some revenue. So from my perspective, the volumes per se, what is going to happen there, and the future strategies as to how are they going to wade off competition and maintain market share is something that I will look forward to in this phone call per se. Net, the result is particularly in line with other brokers as well, who have reported fall in volumes, as well as BSE. BSE is the only listed space. NSE is not listed. In fact, both BSE and NSE also reported a slowdown in volumes. So from my perspective, I want to understand the volume story as well as what their strategy is going forward with respect to competition.
Right.
Those are some things that I will watch out.
Got it. Aditya, Groww's FY25 revenue ended over 4,000 odd crores. Last two quarters, quarter one and quarter two, if we take a look at the numbers, overall revenue has been around 2,000 crores. Do you think that the 3-year revenue CAGR of 125% will be maintained, because they've just been able to do that 2,000 crore in first two quarters? We'll have to see as to how the other two quarters are in terms of revenue growth. Where do you think the revenue growth will come at the end of FY26?
Particularly for a broker, the revenue growth will depend on how the market is really behaving. In a sideways market where stocks are not doing too much, you will find the revenues stagnate or revenues come down as well, because the FNO volumes tend to stagnate. So from my perspective, what is important to watch is how the market behaves, how the volumes ramp up, and also if SEBI is willing to curb on the options expiry, or SEBI is willing to put some extended curbs on retail investor participation in FNO. SEBI has, it is difficult to curb retail investor participation. If somebody comes and does so, that is a real negative for a broker per se. So these are 3-4 things: regulatory action, market momentum, and FNO volumes. These are something to watch out for. I think revenue growth will depend solely on that. 3-year CAGR of 125%, I don't think that will sustain over a period of next 2 to 3 years. Of course, brokers will do exceptionally well as the capital markets continue to grow, but I don't think that sort of growth momentum will continue to sustain.
Absolutely, that makes sense, Aditya. All right, thank you so much, Aditya, for giving us those insights. Let's try to pull up the stock and see as to how it's doing. Cooled off a tad bit, of course, but still up almost 5% as we speak. But the other counter that is in focus is Capillary Technologies. Got listed today. Let's take a look at how it's been doing right now. Is scaling up, of course, with cloud and R&D investments, while operating leverage has improved as acquisition costs have fallen, up 9% as we speak. But we also are going to speak with the MD and CEO, Anish Reddy Bodu, and CFO and CEO, Anand Chaube, on the road ahead. Anant, you're using IPO proceeds primarily for cloud infrastructure and your R&D. What is the kind of revenue growth potential that you're seeing post these investments, and when do you start to see these investments unlock in the coming years?
Yeah, so if you look at over the last few years, the business has been having a good growth as well as increase in our EBITDAs. If you look at H1 this year, and we have filed numbers for the September quarter, versus H1 last year, there's a 25% top line growth and about 300 basis point improvements on EBITDA, as well as the business generated about 55 crores of cash in H1, which is equal to what the business generated in the last 2 years. So we feel that business is on a good trajectory, and these are the same underlying principles that are continuing for the growth ahead.
All right. How does the declining customer acquisition cost strengthen operating leverage? Because, overall, that's going to support in the long-term margin expansion as well. Is the downward trend going to continue, or do you see, that reversing?
Right. So in terms of new customer acquisition, we target the Fortune 500 or the Fortune 2000, the very large businesses around the world. So a lot of our leads or prospective conversations come from analysts like Forrester or system integrators or consultants, and that number has stayed pretty at the same number for the last few years now. And our teams are scaled to kind of deal with that volume of inquiries, right? So going forward, you will see our sales and marketing costs grow a little bit more inflationary and probably what you've seen between last year to this year. But as a percentage of revenue, it should stay where it is today or see a similar trend, which is a declining trend, as you can see in the last few years.
Got it. Anish, one last question. With improving profitability and expanding your new annual contract value, what is the long-term growth outlook in the automation and customer engagement space that you're looking at?
Right. So if you look at loyalty and customer engagement as a space, the space has been growing at roughly about 10% year on year. If you look at our growth over the last few years, we've grown at 25%. Plus, half over half or year over year in that sense. A large part of our growth, like you pointed out, comes from existing customers growing with us, what we call as net retention rate. So our existing customers grow about 15 to 20% annually with us, and that helps with the growing contract values as well. So I think we'll continue to, between this and the new customer acquisition and M&A, which is a good growth vector for us, we'll continue to deliver similar growth as we've delivered in the last year and a half.
All right, Anish, thank you so much for giving us those details to both of you and to the entire team. All the best. We'll of course look forward to speak with you once your Q2 numbers are out. But thank you so much for taking out the time and speaking with us at NDTV Profit. So that's with regards to where the new listing is concerned, that is Capillary. But the markets, Puneet, I think they're just testing our patience. I feel still 200 points away. I mean, we did open on a high note and we saw almost 150, 170 odd points uptick in the benchmarks. But right now, still 200 points away from the life high.
And it's definitely, so close yet so far yesterday. Yes. Almost just 40 points is what we were away on the benchmark. And then that momentum just faded away post that. And while the Nifty Bank, we can pull that up very quickly. That momentum was, just so strong yesterday, hitting a life high again and seeing some selling today. It's been the strength of the markets. When you look at the Nifty 50 heat map very quickly, you will see a couple of key names that are still trying to give that positive impetus to the Nifty. Mahindra & Mahindra post its investor day yesterday is up almost 1.18%. We've had a slew of brokerages across companies, having coverage on Mahindra Finance, Tech Mahindra as well, amongst others. That's the top Nifty gainer. Maruti, Eicher also up in trade today. Maruti has had a difficult time over the last 2 to 3 days. Maybe a better Friday for the company. When you look at the advanced decline ratio, it will give you exactly the perspective that you're seeing similarly on the Nifty right now, that the advances have just collapsed over the last hour or so and continue to be downtrend. just 450 advances to almost 1900 declines as of now. And the mid cap and small cap yesterday, we've been highlighting this at length, that there is a lack of participation in this up move that we are seeing towards the Nifty from the mid cap and the small cap players, and it will be something, so you will see a lot of individual retail investors who have a higher exposure to mid and small caps not having that kind of a great day over the last few days, while the Nifty 50 has been continuing its momentum as well. But talk more about all of this as well as start taking the queries as well. I'm now being joined by Sameer Dalal, he's of Natwarlal and Sons Stockbrokers, as well as Gaurav Bissa, he's the Senior Vice President at Incred Equities. Gentlemen, thanks so much for joining in and giving us perspective and your time today. Let's straight go to the question. We have a first caller for today from Gurugram. Manav is dialing in for a stock query. Manav, very good morning to you and welcome to Ask Profit. What's your query?
Yeah, hi, good morning to everyone.
Good morning,
so
Manav.
Today I have a query on Hindustan Copper.
Okay.
So maybe this, this stock has given like 40-45 odd% return in the last 6 or 7 months or so. But it has, I have been noticing it is like showing a little downtrend for the past 3 or 4 odd sessions. So I had this on my radar for quite some time, but couldn't invest earlier on. So just wanted to know, like, overall the view on the copper industry, the copper perspective for the long term, like 3-4 years. And will this be a good time to enter into a counter like Hindustan Copper?
Got it, Manav, and fair point that it did see some gains and since then has starting to see flattish trend. I think so. Sameer, let me come across to you very quickly on this one. Hindustan Copper, post announcing their long-term target till FY30, the stock saw a stellar rally, has cooled off a bit. Would you buy into this sideways momentum right now on this counter?
Unfortunately, no, I wouldn't buy into this counter at this point of time for the simple reason that they have a lot of expansions. They want to increase their mining. They want to increase their copper production. All of these are great things. But this is a very cyclical business. Now, right now, we know that the wiring industry is doing extremely well, and because of which the copper demand remains robust. But I get a feeling that over the next 2 years, you are going to see some amount of pricing pressure that comes in copper as the supply increases because of these high prices. And then what's going to happen is with increased supply, you're going to see prices coming off, which means that directly affects profitability. So you're paying top dollar to buy something that may go through a slight negative cycle over the next 2 years. And all the positives, like you rightly said, that they've given the announcement till 2030. So all of those positives to a large extent have been priced in. So I would avoid this stock for the time being. If it comes closer to 250 odd levels, I'm talking of 70 rupees down. So you're talking of about 20% down. Then I would probably relook, of course, at everything and think of buying the stock. Not any time now.
That's Sameer's view on something like a Hindustan Copper, and there you go, the last 3-month returns at 33%. So hopefully, Manav, that answers the question. We have another query on WhatsApp now coming on something like a Nestle India. And, our viewer has bought it at roughly about 1,300 rupees per share. 100 shares bought for the last 2 years. So he's, of course, bought it pre the split. Can I book a loss and buy HUL? Is that the right move for a 1-year view? So, Sameer, let me come back to you. Would you recommend that trade?
So, he's asking to sell one counter which is expensive and buy another counter which is expensive. So if I had to pick between the two, I think I'd continue to stick with Nestle for the simple reason that the new product launches that they're going to be doing, expanding their portfolio basket, will lead to traction and growth in volumes. I think, yes, both are expensive. You've unfortunately bought it 2 years ago when the stock had seen a huge run up and you paid even higher premium than what you're paying today. But as growth picks up, and we believe consumerism growth will pick up, Nestle will see uptick in volumes and profitability. And then, probably, I won't say a re-rating, but even if the company is able to grow their profitability by about 12 to 13%, that's the kind of return you can expect on a compounded basis. Since you're asking specifically about HUL, I prefer Nestle over HUL. But if you want, I still find FMCG still highly valued. I prefer consumer discretionary. My advice would be to, if you can, sell Nestle and buy consumer discretionary. But if it's between Nestle and HUL, stick to Nestle.
All right. So that's with regards to where these two FMCG names are concerned. But we've got our next caller. Chandu is calling us from Hyderabad. Chandu, hi. A very good morning to you. How can we help you today?
Yeah, very good morning. Yeah, so I had a Shriram Finance, quantity around 800.
Okay.
Average price of 678.
Okay.
So shall I took some profits or shall I hold some more days? I want to know actually. I'm a long-term investor, but no problem.
Okay, all right, Chandu. Got your question. Then I'll take this up with Samir. Samir is already sitting on profits of around over 1 lakh rupees, in fact. Would you suggest him to continue to hold or would you recommend him to book some profits?
So we do like Shriram Finance and we do like all NBFCs from a long-term perspective. He can continue to hold on to Shriram Finance. According to me, I think it's a company that's doing extremely well, growing its book in a very calibrated way. Yes, compared to other NBFCs trading at some premium, but also then if you compare him to the likes of Bajaj Finance and Tata Capital and some of those others, then the valuation premium is not there. So I say continue to hold. It's a great counter. If you have a long-term view of 2-3 years, you'll make decent returns.
Got it. That's Samir's view on Shriram Finance. But let's go across to our next query on WhatsApp. Kishore is writing to us from Hyderabad on a counter called Siemens. They have bought it at 4,458. So currently sitting at a loss of over 30,000 on this particular counter and asking if he should invest more 50,000 rupees in this counter. Gaurav, would you recommend that trade of investing more at a time where he's already sitting on a loss? What do you see the trajectory for Siemens?
If you look at the overall setup in Siemens, it's been in the range-bound mode. It had a good correction. So there was a price correction for a few months, and then we have seen time correction in the last 4-5 months. In my opinion, I don't think this is a time where one should be averaging the stock out, let it come out of consolidation. Probably then we can look at it. But for now, I think the only good aspect that I can see in Siemens is on weekly charts, the range is narrowing. For the major part of 2025, the stock has been a very, very tight range. Let it come out of the range, probably then we can look to either add for getting the average price down. But at the current juncture, let it be, don't add more at the current levels.
Okay, all right. So that's with regards to where Siemens is concerned. We've got our next caller. Anvesh is calling us from Karnataka. Anvesh, hi, a very good morning to you. How can we help you today?
Hi. I have a query of, I had 6 solar industry India Private Limited stocks. I have bought it 12,000 rupees.
Okay.
So what is the view for next 1 year for this particular share? Meanwhile, I have HL also. 10 shares I have.
So Anvesh, I'll be able to take only one query. So you'll have to select between Solar Industries and HL.
Okay. View of this solar industries for next 1 year. If in case it is a bad sector, then which sector is the better option for next 2 years?
Okay, all right. Got your question, Anvesh. I'll take this up with Samir then. Samir, what's the view like for Solar Industries? And if not this counter or this sector, would you recommend him to book his profits and move to something else?
So I don't have a view on solar. I would request you to give Gaurav the option to give a technical view.
Sure. So for 1 year, Gaurav, what's the view like on the charts for Solar Industries, slightly long term?
So overall, if you see the setup has been good, it has been forming higher tops, higher bottoms. So on the side, no expensive, but currently what it is doing is retesting the previous swing high breakout area. In my opinion, if the current level is sustained, or if 13,000 or 12,500 rather, if that is sustained, it can go comfortably beyond 18,000, 18,200. So in my opinion, one can hold. This momentum is strong. What we are seeing is more of a time correction. And overall, if you see, we just had one bad month where the stock corrected significantly, 20%. After that, the prices have not seen major correction as such. So I think let it settle down. And for 1 year, one can hold it.
Gaurav, but viewers, it's time for our first round of the rapid fire in this edition of Ask Profit. Samir as well as Gaurav, you know the drill. Keep your answers as short as possible on buy, sell or hold so that we can take as many queries as possible. The first one is from Chanukya from Hyderabad. He has been holding Eon Exchange, 2,000 shares bought at 660 and asking a view for the next 3 months. Gaurav?
Exit.
MobiKwik is the next one. Tom Verghese is holding 300 shares at the levels of 283. Wants to know if he can hold for the next 12 months. Samir, your view?
Exit also.
The next one's Bata India, bought at 1,030 rupees. View for the next 1 year, Samir?
Add more, buy. It's a buy for me.
Okay, Kotak Mahindra Bank is the next one. The person bought four shares at 17.15 a piece. Wants to know if he can hold for 2 years. Samir, your view?
Absolutely, hold on.
The next one's on something like Balmer Lorry. We don't discuss that too often, but Arun from Vellore is asking if it's the right time to enter, Gaurav.
Avoid.
Okay, the next one is on BEL. Sankar Narayanan wants to know if he can continue to hold BEL. 340 shares is what he's got at the levels of 68. Your view? Gaurav, on the charts?
Hold.
TCI Express is the other one. Our viewer bought it at, Prakash bought it at 1,303, holding since January of 2024. So he's currently sitting on a loss. Gaurav, would you recommend getting out or wait for a pullback?
Hold, wait for a pullback, but exit the overall setup is weak.
Okay, Suzlon Energy is the next one. Jaswant has bought 1.5 lakh shares and wants to know if we can continue to hold or square off at the moment. Your view on this, Gaurav?
Hold.
Max Health or Fortis is what Satish is asking for the next few years. Samir, your pick?
Max Health over Fortis.
Okay, Reliance Industries is the next one. Dr. Mayur wants to know from a long-term perspective, can he hold the 100 shares that he has at an average price of 1,120? Samir, your view?
Hold on, buy more. Very good long term.
A final one, Lodha Developers. Anand from Karnataka is asking if he can hold for the next few years. Samir?
Avoid Lodha for the time being. Look at Keystone Reality in the same market.
Got it. That's the wrap on this edition of the rapid fire of the first round. But let's quickly cut across to SEBI Chairman Tuhin Kanta Pandey, who is addressing the National Conclave on REITs as well as InvITs. Let's get that quick view before we move on the show.
Constraint. Securing reliable long-term capital will be central to supporting growth and improving quality of life of our citizens. Public finance, public-private partnerships, and bank credit have laid the foundation, but the next phase of India's infrastructure story must be driven by the dynamism of the markets. And within markets, by instruments like REITs and InvITs that connect everybody's everyday savings with long-term national assets. Why capital markets? First, capital markets uniquely host investors across all three investment horizons: long, medium, and short. Capital markets channel the savings of long-term investors and of millions of retail investors into infrastructure projects which have a long gestation period. Second, they diversify risk, reducing dependence on banks or the exchequer. Capital market instruments spread the risk across many investors and reduce concentration on any one balance sheet. Third, markets enforce transparency and governance through continuous disclosures, independent audits, and investor scrutiny. SEBI's role is to strengthen the bridge between infrastructure and markets. On the primary market side, we'll continue to simplify capital raising through IPOs, rights issues, QIPs, and bonds. I'll now today focus on the REITs and InvITs, since this ecosystem provides India a unique opportunity to finance its infrastructure needs. We have now around 5 listed REITs and 24 listed InvITs, spanning roads, power, transmission, renewables, telecom, warehousing, and commercial real estate. As of October 2025, the combined AUM of REITs, InvITs, and SM REITs is estimated around 9.25 trillion rupees, around 7 trillion rupees in InvITs, and 2.25 trillion rupees and REITs and SM REITs.
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
I believed that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now. Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, कि यार India में अच्छी bread नहीं मिलती. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business.
Yes, yes. So a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete or are you going to get acquired?
Startup like ours has its own DNA. For us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. And profit किधर है?
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
We are at one of the facilities of Merck in Bangalore. Well, we are here at R&D facility or research and development facility of Merck. So there you go. Ooh. Merck actually develops those life-saving drugs which are used in cancer and MS. The business model of Merck is stable. A drug faces competition, the life science segment or the semiconductor segment chips in. So basically what they're doing is they're curing you. They're
Welcome back. You're watching Ask Profit here at NDTV Profit. Now it's time to dive into the FNO market setup and the cues that are shaping up for trade today. Let's bring in Sharad for a snapshot of what trade is looking like today. Sharad?
Mahima, two important reasons are there. Global cues are on the weaker side and profit booking is coming, and that's why we are seeing Sensex in the red. Also, we can see largely the support is coming from the auto names M&M and Maruti, but a sea of red coming in. That means the favor is going towards the bears. Now let's look at the active options, how things are panning out, and I would like to show you that the call writing that has become significant, and because of that the put call ratio that has exceeded and it's at a multi-month high level. So that is something which we will be looking out for, and there suggests more downtick coming in the day's trade as well. Let's get the BankX. The situation remains the same and largely no major support coming in from HDFC Bank. Of course, there is a reverse trade in IndusInd Bank and also SBI. That's also in the red. Yes, here it is, and that is why the BankX is also seeing a pressure. Looking at the contracts over here, largely call writing is also significant here. And technically we can see some more selling pressure coming in, but stock specific also the markets are moving in. Let's actually get these numbers in. M&M long build up and GMR Airports, we are seeing a strong long build up happening. And if you see the short covering, there are certain stocks in this list. Sammaan Capital recently coming out of the FNO ban, and PG Electroplast, the management did give their important guidance in at NDTV Profit today at Indian Market Open. Long unwinding going on for both JSW Energy and Mazgaon Dock. And lastly, the short covering, I mean to say the short build up happening in these two counters, Coforge and Tube Investments. So a lot of options data suggesting that a bearish sentiment is there in the market today.
Okay, Sharad, thank you so much for bringing us those details. But on this side of the show, we are also joined by Rajesh Bhosle, Equity Technical and Derivative Analyst at Angel One, joining us now. Rajesh, I'll take up the first question with you. This is from K Guru, who's writing us from Chennai and wants to know if this is a right time to make an entry into something like a Lemon Tree Hotels. What's the view like?
So yes, it has significantly corrected from the higher levels and it's approaching its key long-term average of 200 DMA. So somewhere around, if we get sort of buying around 145, 150 zone, so that is a strong zone. And in the past as well, we had seen a rally when stock retested levels are of around 145. So as of now, wait, but if it comes around 145, that would be an ideal level to buy. On the higher side, 170, 172 would be the immediate resistance.
Well, got the view, Rajesh. We have another query now from Pramit from Pune. He's writing into us for Happiest Minds, holds 30 shares at 715, asking if we should hold on or buy more given the price is now sub 500 rupees. Samir, in the mid-cap space, is it something that you would recommend or buy anything else in a similar space in the IT sector?
Yeah, so we've not been too positive on the overall IT space, given the fact that we think the earnings growth is going to be tepid for the near future. Now, if we look at Happiest Minds, it's a very small company that way, but is decently growing. It's just that the last 1 or 2 quarters, there've been a few hiccups. But even after all of that, the company continues to still, I think, trade at around, if I'm not mistaken, above 40 times earnings or 38 to 40 times earnings, which is a little bit on the expensive side for me. So for me at the moment, I will maybe hold on to it, but I will definitely not add on to it. And I continue to have my slight negative stance towards this overall space. So from that perspective, I mean, I'm not even recommending anything else for the time being.
Okay. All right. The next one is from Harsha, who's writing us from Vijayawada and asking about Radico Khaitan. He wants to know if this is the right time at the current price. Can he make an entry from short to long-term perspective? So, Rajesh, slightly long-term perspective on the charts. Do you think this is the right time to make an entry?
So from the mid-cap space, this counter has been an outperformer, continuously moving in a hard top, hard bottom. Yesterday as well, there was a significant traction. I would suggest to buy, but I would suggest to buy on dip somewhere around 3200. The stock is taking support on all count of dip towards 20 EMA. So 3200 would be the ideal level to buy. On the high side, 3800 to 4000 levels would be the immediate resistance on the Radico Khaitan.
Got it. Rajesh, we have another query now on WhatsApp, and viewers, you can send a lot more on the number that's flashing on the top of the screen. Also call us on the number that's flashing on the bottom of the screen right now. Next one's coming on Amber Enterprises. Jose from Kochi is writing into us. He's bought 10 shares at 5,850. So he's sitting on a considerable profit and asking if he should hold on or exit close to 8,000 rupees in the next 1 year. Samir, your quick view on something like an Amber Enterprises, been focused because of weak Q2 earnings, but do you feel that momentum should continue given the electronic business, other factors?
Part of the electronic business continues to do well, but also the AC segment has taken a big hit in the current financial year, right? Now that is given that we've had a very good winter start this year. I think the AC business in Q3 is also going to be a bit of a problem pain point, and because of which you're seeing actually the stock correcting. For me, any rally towards 7,500 should ideally be a point to sell because valuations are rich. And it's not rich only for Amber, it's rich across the board for all these players, EMS players. We are factoring in too much growth with no hiccups along the way, with no competition really affecting them in any which way. I think this is a wrong way to go about valuing companies. I see reports where people say buy Dixon or buy Amber with 80 times earnings and 90 times earning target multiple, which is ridiculous if you ask me. So for me, any rally would be a selling opportunity.
Strong opinion from Samir on the EMS space. High valuation, definitely a concern with the growth that they have been promising as well. But the next query actually is coming in from Hyderabad. Shelja is dialing in for a stock query to us right now. Shelja, very good morning to you and welcome to Ask Profit. What's your query?
Yeah, good morning. Today I have query on Tata Motors PV.
Right.
Actually, I hold 69 shares right from before demerger.
Right.
So after demerger, it's showing around 12,000 loss in PV.
Correct.
And showing 5,000 profit in CV, commercial vehicles.
That's right.
So I want view from Samir sir regarding this. Shall I book profit in commercial vehicle and average in passenger vehicle?
Right. Got it. And this is a fair question. We've been getting it on a lot of queries, Samir. So largely because of the discovery price, Shelja, there is that discrepancy that you are seeing. Because PV listed at a premium compared to the CV business, you are seeing a higher price for the passenger vehicle in your portfolio. But Samir, what would you recommend viewers for the passenger vehicle as well as the commercial vehicle for Tata Motors who've been holding it pre-demerger? Should they buy into both of them, hold them, or switch out between them? What would you recommend?
Okay, so let's address one point at a time. The first point that we address is why did Tata Motor PV list at a premium? Because the bulk of the profits of Tata Motors used to come from Jaguar Land Rover, which is part of the PV business. Plus the holdings of Tata Tech and the other listed entities remain with the Tata Motor PV business, right? So all of that, if you add up, actually, Tata Motor PV should have probably opened higher than where it opened. My assumption was it should have opened near 450 odd levels, 460. It opened around 400. Now, given the sharp correction, that's the second point now, which has happened to 360. I think Tata Motors PV is extremely attractive. Look, Jaguar Land Rover specifically went through a problem point because of the cyber attack and because of which production was hit in Q2 and partially in Q3. So Q3 numbers are also they've given are not going to be that great. But now that is behind them. Now things will only start looking better. They've also now got all the issues sorted for their export business from Europe and from UK to the US. So we believe the US business will also start bouncing back. We think the opportunity for the Indian PV segment, they continue to gain market share. They are now the second largest player in the domestic market. And if you look at electric vehicles, they are, I think, number one with 44 or 45%. And the electric market is only going to keep growing. And Tata Motors is making new launches continuously. So we think the opportunity there is very good. For me, Tata Motor PV is a buy. Tata Motor commercial vehicle, they are losing market share at the point. Ashok Leyland, Mahindra are all eating into them, but it will still grow. So I would not recommend buying a Tata Motor CV at this point. I think you can hold on to that to see how things pan out. But for Tata Motor PV, it's 100% buy.
Yeah, so that's with regards to where Tata Motors is concerned. But the next question is from Arjun, who's writing us from Kolkata and wants to know if this is the right time to make an entry into something like an Apollo Microsystems for the next 7 to 8 months. Your view on this, Rajesh?
Yeah, so this stock has been in a consolidation phase since last few weeks. So as of now, I would suggest to wait, but there is a trigger point somewhere around 285 levels. Once that is crossed, then the stock can see momentum towards 300 levels. So wait for the trigger point. On the downside, 250 seems to be a strong base for the counter.
All right, so that's with regards where Apollo Microsystems is concerned. The next one, we've got our next caller. Subramaniam is calling us from Hyderabad. Subramaniam, hi, a very good morning to you. How can we help you today?
Good morning. I want view on Indraprastha Gas, fundamental view. I have about 5 lakhs. Is it right time to enter? I'm a dividend investor.
Okay, got it. You've invested around 5 lakhs, is it?
No, I'm going to invest. I just want to know, is it the right price or should I be entering at 195, fundamental view?
Okay, so got your question. Samir, what's the view like on IGL?
Honestly, I'm bullish on IGL, but a 5 rupee specifically for your question is not going to really change your long-term dynamics, right? If you're looking at 180, which is 10% lower, then you could probably think of waiting. But if you're going to wait only till 195, these kind of volatilities in the market can keep happening and you may get it. But the basic thing is fundamentally, the growth opportunity remains strong. the CNG business, the PNG business will all continue to grow. They will get new markets. The profitability over time will increase. These are capital heavy intensive businesses, and the operating leverages are playing out nicely. I think it's got good, decent growth ahead of it. You can buy even at 200. If you want, you can wait till 195. In this market, 195 you could probably get tomorrow also. So, I mean, you can maybe accumulate it slowly over the next 15 days.
Got it. Next one is on something like Star Health, and Mohit from Ludhiana has bought it at 590 rupees per share. It's currently sitting at loss, and he's bought 200 shares. He's asking if we should continue to hold for the next 3 years. Samir, would you recommend that, or is there any other pick in the health insurance space that you like better?
So I don't have actual coverage on Star Health, but what I will do is give you a view on the insurance space. I think the opportunity in the health insurance space is extremely strong. I think you're going to see great growth in penetration continuing to happen, premiums rising. The opportunity is great. Now, I don't have a view on Star Health, but in that space, I think, instead of focusing on a company that focuses only on one segment, it might make more sense to focus on companies that cater to all segments. And in that space, then you have ICICI Lombard, which we like a lot. We think is a great opportunity to invest in from a longer term perspective. And of course, there's Niva Bupa also. I think that's listed in the health space. But for me, I would put my money into ICICI over a Star Health, but I don't have a view on Star Health.
Got it. The next one, we have another caller coming from Kolkata, and Shayan is, dialing in for a stock query. I hope I've pronounced your name correct. Please go ahead with your question.
Yeah. Okay, I own 500 shares of Nalco at the price of 171. So it has gone through a significant rally, and should I book partial profit, or I should continue holding it? I can hold it for next 6 to 8 months. Actually, I don't need the money right now, but I want to reinvest it in Hindustan Copper. So,
okay, you want to invest in Hindustan Copper, is that right?
Yeah.
Okay.
So should I take the money off or continue holding?
Got it. Shayan, we actually discussed Hindustan Copper at the start of the show with Samir. He wasn't very keen on doing that trade, but let me get your question with Rajesh. On Nalco specifically, do you see more upsides? Should he hold on for some more gains? Rajesh, on Nalco?
So overall, if we see charts of Nalco, it has been an outperformer, and we expect this performance to continue. On the weekly charts, if we see, the stock has given a strong long-term breakout about 240 levels. So any kind of dip towards 240 is likely to get bought into. And on the higher side, we expect the stock to move towards 290 to 300 levels. So strongly bullish on the counter, and we expect 240, any dip towards 240 to be likely to be bought into.
Okay. All right. The next one is on ABB India. Krishna Kumar from Rajamundry has bought 7 shares at the levels of 5950. Wants to know if he can hold or sell. Rajesh, your view on the charts?
So as of now, can hold on to it. The stock has been an underperformer, but it's approaching its 200 weekly average. So as of now, hold on to it. On a bounce back towards 5400 to 5500, that would be the levels to rewatch. I mean, if the momentum is there, can hold on to it. But as of now, it's on a strong support.
Got it. We have another query now coming in on something like a TCS. It's a stock in focus today on the back of the investments in data centers. Our Dorji has bought 10 shares at 3,149, asking for a short-term view. So Rajesh, let me come back to you on TCS. Any movement on the charts that suggests an up move?
So yes, last few sessions has been good for IT space, and TCS as well has come out of a recent short-term range. So we expect positive momentum to continue. 3,300 is its 200 DMA. So as of now, hold on to it. Somewhere around 3,300, look to book profits.
All right. The next one is from Shankar. What he's saying is, and by the way, he's writing us from Dubai. He's saying that he bought 60 shares of Fari at the levels of 1247. Then later he bought 30 shares at the levels of 1148, thinking it could average out. This is Vari Renewables. And he's saying that however prices further have decreased now from a technical perspective. Do you think he should continue to hold for the next 1 to 2 months? Or should he exit now and maybe enter at further bottom level. Rajesh, what's the view like on the charts?
So as of now, hold on to it. This is a very volatile counter. Recently, it has seen price dip from the higher levels, but somewhere around 1050 to 1040, there is a origin point of the rally. So hold on to it. 1040 seems to be a strong support, and once it crosses back above 1150, expect stock to move back towards 1300 levels. So hold on to it.
Got the view. We have another query now coming in from Manohar. It's an interesting one, so that's the reason we're picking it. He has 80,000 rupees. Wants to invest in Cyient, KEC International and Tarrell for the next nearly 2 years. Is it the right time to enter these stocks? Samir, Tarrell has definitely been in focus. KEC also got debarment from Power Grid. Any of these, and Cyient actually hasn't had a good time. So all three counters have something wrong with them over the last few months. Would you recommend any of those in your trade right now?
Yeah, so KEC International and Tarrell are two companies that we think can continue to do well. Yes, they've had their issues. So Tarrell's issue, I think at the moment, with that ban that had been put on them has been removed. So the stock has seen a little bit of a bounce back in the recent past, but we think the long-term opportunity for them remains very strong. KEC International also, we think the power sector is going to see huge investments, especially over the transmission and distribution space. So it doesn't matter whether you're solar, renewable, solar, wind, or thermal or nuclear, but the distribution space will grow. And with that, KEC, who sets up all of these things, will get order flow. Yes, they will obviously be able to manage through this problem point. Yes, you might see 1 year, maybe FY27, where growth will be subdued, and which is why the market is hammering the stock down. But once they come out of this and they start getting new orders, and especially when the private sector is placing orders and they get orders from the private sector, I think KEC will continue to do well. So these two you can definitely add on. The Cyient, I don't have a positive view on that one.
Got it. And next question is actually a caller coming in from Bengaluru. Karthik has a stock query for us. Karthik, very good morning to you and welcome to Ask Profit. What's your query?
Yeah, hi, good morning. So my query is on Nesco. So I have 25 shares bought at the average price of around 1,426. So I'm looking for a long term. So I see that the quarterly results was up recently, and but I don't see the share price moving. It remains as it is. So is it a good time to add some more? That's what my question is.
Got it, Karthik. Samir, a long-term view on Nesco, because it is a stock that's not that expensive in terms of valuation compared to players. Any view?
Okay, so let's talk about Nesco's business, right? He has two main businesses. One is the Bombay Exhibition Center in the outskirts, not outskirts, but you can say in Goregaon area of Bombay. And there he's also developed IT parks. That aside, he has a very, very small engineering business, which is not really scaling up in any which big way. Now, if I were to look at the 65-acre land parcel that he has out there, a lot of the development for that and a lot of the cash flows for that are already into the system. Now, his next leg of growth is something that he wants to tap into is this highway wayside business, where he bid for 3 projects, where he won 3. He got 3, but he's returned 2 and only going to continue to manage 1. For me, stock is fully valued. Let me also please put in a disclaimer. This is the owner of Nesco is actually a very, very close friend of mine, and that's why I know this company as well as I do. But it is going to take a while before you see the next rung of growth coming in through this. For me, at this point, it would probably be a hold. I wouldn't sell it because the cash flows are very, very strong. But I wouldn't be looking to add on at this point of time. I think if it comes closer to 900, which it was if you look at it maybe a year ago, that might be a better price to get into Nesco.
Okay, all right. So that's the view with regards to where Nesco is concerned. But Samir and Rajesh, it's our second rapid fire round now on Ask Profit. Try to keep your answers as short as possible. The first one is from Lavish, who's writing us from Indore, asking about SW Solar. He's bought 1,000 shares at the levels of 350. What should he do? Samir, your view?
Bye.
DB Realty at 188, so definitely Sterling Wilson as a buy again. DB Realty at 188, 556 shares. Rajesh?
Hold on to it, expecting a strong bounce back.
Okay, Kamlesh is asking the next one, wants to know how Vedanta is looking on the charts. Your view on this, Rajesh?
Yes, hold on to it. We have a very positive bias on this counter.
Kirloskar Pneumatic bought at 1151. Rajesh, quick view.
Hold on to it, expecting some bounce back 2 to 3% in the near term.
Okay, SBI Bank is the next one. Arijit from Kolkata wants to know if he can hold from a shorter term perspective. He's got 10,000 shares at the levels of 973. Rajesh, your view on the charts?
Yes, strong counter. We are expecting 4-digit very soon.
Long-term view on PFC, Samir?
Very positive. Please buy.
Okay, Eternal is the next one. Srikanth has bought at the levels of 69. 2,000 shares is what he has in his portfolio. From a shorter term perspective, should he book profits? Rajesh, your view?
Yes, hold on to it.
Paytm bought 60 at the public issue, so definitely sitting at a loss. What should we do, Rajesh? Anything on the charts?
As of now, the stock is in strong momentum. Hold on to it.
Okay, the next one is on Vishal Megamart. The person wants to know that from a shorter term perspective, can he, if not from a short term perspective, from 5 year perspective, can he continue to hold this counter or not? Your view on this, Samir?
Absolutely. Hold on and add on.
Aarti Industries bought at 420 for the last 2 years is what Siva is holding. Samir, any view?
No view. Sorry, please ask Rajesh.
Rajesh, on the charts?
As of now, hold on to it, but exit on a bounce.
Okay, Oracle Finance is the next one. Suresh wants to know if he can continue to hold for the next 3 months or not. Rajesh, your view on the charts?
Yeah, hold on to it. Positive.
Wipro at 290 rupees. Should he hold or exit, Rajesh?
Yeah, short term looks positive for the IT space, so definitely hold on to it.
Okay, NTPC Green is the next one. Murthy is holding 300 shares at the levels of 107. Can he continue to hold or dispose? Samir, your view?
Hold on to it.
Next one, something like a TCS. We've answered the fundamental. We answered the tech query. For Samir, anything on the recent news flow? Buy, sell, hold?
So I would maybe hold on, but I'd definitely not buy.
Okay, Satvik Energy is the next one. Naresh Jain wants to know if he can continue to hold or not. He's got 40 shares at the level of 468. Recent listing, Samir, any view?
No view, sorry.
Amar Raja bought at 1200 rupees per share. He's currently sitting on a loss. Rajesh, on the charts, any positive momentum?
So as of now, we are expecting bounce back, so hold on to it.
Okay, the next one is Shelly Engineering. Ramana from Bengaluru wants to know if he can continue if can make an entry into this counter at the moment. Rajesh, your view on the charts?
Not tracking this counter.
All right. Okay, Samir, any quick view on Shelly Engineering?
Oh, a little expensive on valuations. I wouldn't enter at this point. 2,000 odd levels, yes.
Okay, all right. So thank you so much, Samir and Rajesh. Thank you so much more because, despite of having a management conversation, a link and as cut in as well into what SEBI chairman had to say, we've tried to answer 46 queries today. So thank you so much, Samir and Rajesh, for that. Viewers, with that, we're completely out of time on this edition of Fast Profit. But do stay tuned. Know your company on the other side.
I believe that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now. Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, कि यार इंडिया में अच्छी bread नहीं मिलती. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business.
Yes. So a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete or are you going to get acquired?
Startup like ours has its own DNA for us to be able to command a price point from a consumer because they trust us. This is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. Profit किधर है?
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Chandani. Of course, a very unique company coming today at our KYC show. The name is Sequence Scientific, and of course we teased to our public also in social media, and we had put in pictures of animals as well. Very interesting. Generally we speak about pharma companies. It's generally on humans, but this is on animals as well, and they are favorite of mine as well.
And that segment is growing really fast.
Exactly, and that pet segment you call it, that's also growing up. But the question remains is, why are we calling them? Is it just the pets or is it humans also? First question is, what will be the outlook for the India business? Of course, that's the geographic front. But if we kind of break it down in the product segment, there are two segments coming in. One is API, other is the formulation business. And of course, formulation comes later stages on a higher margin side. That's what we had discussed. API also is something which we would be focusing on. CDMO opportunities, what are they looking like? What's the market looking? What's the potential here? Viyash Life Sciences, you must be hearing about this company. And that itself is an arm of Sequent Scientific. What's their growth segment looking like? And of course, the revenue margin guidance for FY27. But there's a lot of complications whenever we discuss a pharma company, and that's why Varsha is there to actually help us break the company out, what actually it does. And it must have been in an industry pressure when change of hands was there.
Exactly. Just talking about what this company do. So first I'll talk about Sequent, and then I'll talk about Viyash because of the merger. NCLT has recently approved their merger. About Sequent Scientific, they provide a wide range portfolio of products, of animal health products, and has two business segments. You have formulation and you have API. Formulation contributes almost 79% to the overall business, while rest, that is 21%, has been contributed by API. Also talking about the geographical analysis. So Europe constitute almost 45 to 46% of the overall revenue. Emerging markets contributes almost 44%, and rest, that is 10 to 11%, is being contributed by India business. Now the important headline, I would say, is the Sequent Scientific and Viyash Life Sciences merger. Now first let us talk about what Viyash Life Sciences do. So they develop API, which is a main salt, advanced intermediates, which is used to manufacture API. So if I were to talk about the value chain, you have key starting material, you have intermediates, you have API, and then end product, that is formulation. So they are into API, they are into intermediates, and they are into formulation as well for human. It operates globally with a robust R&D pipeline and manufacturing capabilities across 8 plants. Now, let's give a highlight how merge entity will look like when Sequent and Viyash will merge itself. So revenue will become 2x, EBITDA at 2x, and EBITDA margins on a consolidated level stand at around 14.6%. Now, also, since we just got over with Q2 numbers also, let's talk about how was Q2 FY26 for Sequent, because Viyash currently is not being consolidated because merger is in progress. Now, talking about the Q2 FY26, overall a good set of numbers. Significant growth has come from Europe business because of growth in Spain with good export performance, while India business is beginning to accelerate as field team expansion ramps up. Talking about the API business, so API momentum continues at 7% year-on-year growth. We would want to know what is the outlook when it comes to their API business, and they've also launched product for the US market as well. So overall, Sequent being into animal pharma, Viyash being into rather human pharmaceutical companies. So now when these companies will combine, we'll see a lot of new things emerging up, maybe CDMO opportunities and, the pet segment. So because if you see a lot of companies, Sharad, are going into pet segment now.
It's an inflection point, right?
Yes.
So many things happening.
So many things happening, and Sequent had, some kind of, I would say, pressure in the last few quarters, which we will of course talk about. So there was an overhang. Now we may see again, we may see good numbers going ahead. We have to, gauge this company for next few quarters as well to see whether they'll come up with the good numbers as well.
There is a bit of confusion here. Where does the company stand? Just to remove those confusions, we are getting this KY issue. And importantly, let me just point out all the rating parameters so that it becomes easier for you when you watch the show on how we are judging this company, which is, of course, as Varsha mentioned, at an inflection point. Income statement, balance sheet, cash flow, return ratios, the numbers, that's something which we crack for you. Then there is shareholding street cred, which is nothing but the shareholding return, be it on a 1-year basis or even a 5-year basis, and also the valuation, where does the company stand, and most importantly, the outlook. Based on these 8 parameters, we give the KYC rating. But the first parameter, you start with the income statement, and of course I think the Q2 numbers also will be included in that.
Yeah, absolutely. So talking about the income statement, let's see what has happened from FY22 to FY25. If you see, the numbers have not been really good because there were some problems that Sequent was going through. So one is of course geopolitical and energy cost spikes because of the conflict between Russia and Ukraine, but which led to sharp decline in energy costs in Europe. But the main important thing why Sequent was facing some problems was volatility in Turkey operations. So the business in Turkey, where Sequent had significant exposure, was severely impacted by currency depreciation, hyperinflation, and other macroeconomic instability. Also, there was pressure in API segment as well. So the API segment faced margin pressure due to raw material price volatility, and we all know that API segment is going through some pressure, and Sequent also had an impact on that. Also, there was a key product which treat infection which is caused by worms. So that key product, that key API product of Sequent was muted because of lower intake by major consumer, which is WHO, for deworming programs, which was partially linked to school closure in Africa. So because of that volatility in that one product, which was a growth, rather I would say primary revenue contributor for Sequent, also faced problems. So overall, because of all these issues, the financial numbers for Sequent are not looking good. But if I were to talk about the Q2 FY26 number, how it fared well when it comes to quarter-on-quarter and year-on-year. So on year-on-year, if you see, there was a growth of 15% when it comes to revenue, while EBITDA growth was almost 44%. A huge growth when it comes to net profit. So maybe we are seeing good numbers, but we need to watch out. Investors should watch out. Also, few quarters going ahead, will these numbers be sustainable? Of course, we'll be speaking to management, but overall, if also talking about the margin trajectory, if you see, there's been increase in margins also from 7.7% to 13.2%, but we would want to know what's the sustainable margin going forward. So overall, we have given a neutral rating for this because of good Q2 FY26, so a neutral rating when it comes to income statement.
Well, I was just looking at the balance sheet also, Varsha. Not much action happening, and just to give a perspective to our viewers, the ownership hands had exchanged over the last 2 to 3 odd years, but they are actually shoring up the balance sheet. No major announcements of capex has been announced And look at the reserve. There was a spike, in the H1 numbers coming in. That means company is trying to, shore up more capital so that deployment can start. Borrowings also, they have remained largely stable. Not much change happening, and same thing goes with the cash and bank balances. So when there is no much movement happening in the balance sheet, that means the company is making a strategy, and then the deployment comes at a later stage. So from my side, it's going to be a neutral impact for Sequent Scientific when it comes to the balance sheet.
Talking about the cash flow statement, let's move forward. Overall, if you see cash flow statement, we've given a neutral rating. I mean, not pretty good, but not bad also, because from FY24 to September 25, if you see, they've increased their cash flow from operation from 31 crore to 83 crore in FY25, and of course half yearly, if you see 45 crore of cash flow from operation. If you see CFO to PAT, also 118%, not that bad, but we might want to see what is the progress going ahead. So overall, that's the reason we have given a neutral rating for cash flow statement.
That's pretty interesting on that front, but there was a lot of loss making also numbers coming in over the last 2 to 3 odd years. That's why the ROC numbers which you are seeing on the screen, FY23 and FY24, this is not available. And right now also the numbers are very dismal. So from my side, the return ratios, the ROC numbers which you are seeing, the return on capital employed, they have not actually picked up. And anything between 10 to 15% up would be a healthy number to track if you are tracking average company looking at the return ratio. So from my side, it's a thumbs down.
Talking about the shareholding pattern, so pretty good things over here. Of course, the promoter stake has been there at 52%. Of course, I would also want to highlight this key note that there was a time when there was a resignation from top level executive people, so key executives including the managing director and CEO and CFO. So there was a resignation at a very critical times, which impacted overall investor confidence and trust, and also one of the reasons why there was a phase when Sequent Scientific was not giving any kind of stock returns to investors just for the benefit of viewers. Talking about the shareholding, well, if you see the interesting part over here is if you see the DIIs, that is domestic participants, so from 8% to 13%. So this is a good thing, and that's the reason we have given a thumbs up, because the increase in stake by DIIs is a positive thing. So overall, nothing much negative when it comes to shareholding.
That's pretty interesting, Varsha. And street cred also, if you are a shareholder, say for holding the stock for like say 1 year, 1 month, 1 year, even 6 months, there is a good return coming, and seeing how the markets were volatile this year. 41% up move coming in the last 6 odd months, and in the last 5 years, if you're a really long-term investor, this stock has tested your patience. So for a long-term investor, this is a bit very negative. For the 5 years return, just 48%. But for 1 year, 6 month, year-to-date basis, this is a very decent, or I could say outperforming return when it comes to the broader indices. And that's why Significant Scientific comes in at a neutral rating when it comes to the overall street cred.
Talking about the valuation, so overall, if you see FY27 and FY28 valuation forward PE, it is at 48 and 31 times FY28 basis. So I mean, not bad, but so that's the reason we have given a thumbs up, considering the growth expected and also the forward PE that the company has.
Interestingly, beaten down company, the sector is not beaten down, and of course, last 2 to 3 odd years, the story was different, and now a lot of, you could say, smaller players and even MNC players are trying to take this animal healthcare market and go ahead. Of course, the pet theme is something which is very important. Outlook, the PAT growth is expected to outpace the EBITDA growth going ahead, and that's a very strong statement coming from the management. They're also pruning down their low margin products, and they're focusing much more on a high volume, I mean to say high value, which is aided by high margin products. That's something to focus on, and focusing will be on new product introductions, especially in the API segment. Now, recently they had launched the oncology segment. It's been roughly 18 odd months, and already a 15 to 16 crore portfolio. So good strength coming in from there. A couple of filings is also done, and management is seeing this potential to leverage this same business in the animal health segment as well. So net, it would be, I could say, for this overall outlook, we would be saying this would be a kind of a neutral rating going ahead. But let's just revise most of the ratings which we have done in the KYC, that where does the company actually stand. And last 2 to 3 years has been hard on the company, but not on the industry. Let's just get the ratings and revise this. Income statement, balance sheet, cash flow, all the 3 numbers, the basic things, it's not adding up, isn't it? So we're giving kind of a neutral rating right now. And of course, you see the street trade valuation. That is something very interesting because it's cheaper right now, right? I think the industry rate was around 40 times. It's cheaper on that levels. Net 4.5 out of 8. It's kind of an even Stevens kind of a rating generally we give in our show. But to get in more perspective about the company, about whether this animal theme or is it animal plus human theme, we are going to get all our details up. And right now joining us is Dr. Hari Babu Bodhpudi, who is the group CEO of Sequent Scientific and Viyash Life. A very good afternoon to you, Mr. Bodhpudi. The first question is, of course, the vision. That the vision is, with this is an animal-related company. Now there's a human aspect also involved to it. So what will be the product mix, revenue mix? What's the vision like for the next 3 odd years? Company has gone through a lot of ups and downs, but now it's at an inflection point.
Good afternoon, both of you. Thank you so much for giving this opportunity. So you see both Sequent and Viyash, last 4-5 quarters continuously growing. Viyash is basically human health fully integrated platform. So last 3-4 years, we developed a lot of products, both API and formulation. Around 40 products API and around 30 products formulation. Formulation is basically for US market. And we see launches are coming up now. That's how where we can see the growth quarter on quarter. So we have very strong portfolio in API. So that's where we are growing. And also last 12-18 months, we introduced a lot of oncology products on our portfolio. It's catching up and we can see a lot of growth in coming years on API oncology thing. Coming to Sequent, it's again purely animal health fully integrated play. So we have very strong presence API doing business with innovators. Around 75-80% business is coming to innovator. Of course, it was stagnated last couple of years due to various reasons. The main fact is, balance sheet was not very strong last couple of years, but it's continuously strengthening last couple of quarters. But with combined Viyash, balance sheet is going to be very strong for the combined company. That's where we are going to see a lot of opportunity grow in animal health, especially API with Viyash capability, with very strong R&D and very strong manufacturing infrastructure. We have 8 manufacturing sites, both API and intermediates. All are approved by FDA. That's a basic requirement. And also we have very strong R&D focused on new products, complex products. And most important today's scenario, EHS sustainability is very critical for doing business. So we are very strong. We are at almost equal to any multinational company in that perspective. So with all these things, where we are going to focus next maybe 5 to 8 years, of course, midterm also is equally important. Long-term perspective, I personally see a lot of opportunity in animal health, especially pet care. All of us know pet care is growing very fast in every region. So we want to become definitely one of the leading animal health company in next 5 to 8 years. And of course, API also Sequent, it's a very good growth opportunity. So with our strength, definitely you can see different API Sequent business coming years.
Right.
Without losing any focus on our base business, human health, it's also is equally important. Slowly we are moving into specialty business in API. That's where you can see our 60-70% portfolio is oncology. And also formulation, we are trying to take into specialized formulation business, more focused on the US government business, all those things.
Right.
So Yeah.
Yeah. So, hi, sir. Varsha, this side. Pleasure to have you at NDTV Profit. Sorry to interrupt you, but you talked about the specialized products also, and I believe that company is moving from lower margin to higher margin products. Just wanted to have an update. Where is the contribution when it comes to higher margin products, or I would call as a value-added products for that matter, and where you want to take this contribution to? If you could give us that number.
No, last 3 years when we started VS, initial phase development was 70% is the mature large volume products and 30% is around complex products, because complex product, it takes time to launch. Unless you develop at early stage, it's very difficult to capture market. So that's the reason it takes always complex products 5 to 8 years to launch the products. So initially to manage midterm, we focus more on mature products, 30% complex. But last 12 months, after building the portfolio to mitigate midterm, so our current focus is 60-70% is the more complex products. In that, around 60-70% on the oncology products. That's how you can see the growth last couple of quarters. Growth is coming on 2-3 things. One is, of course, new launches. Second is new products, whatever we do, like CDMO, so a couple of products we are able to generate service income. And all these new products, validation income is coming substantially. So already we see that ratio is moving quarter on quarter. But most of these launches are going to happen maybe from 28, 29, but mostly from 30. And we can see a lot of difference from maybe 29, 30 on this perspective. The same way, Sequent, since they are not focused much on new products, API last couple of years, now with VI's strength, we are going to cover the products up to 2035. Already last 2 quarters, we were able to develop 4 products, new products.
That's pretty interesting, Dr. Hari Babu. But one concern, or we could say the street is wanting, is the guidance coming from the management. And of course, we are seeing inflection point coming in. And you have been very bullish on your high margin products also. And you are giving an important claim that in the next 5 to 8 years, you would be the pet company, the animal healthcare company going ahead. Dr. Hari Babu, this question is for you. The revenue and the margin guidance, if you want to give for FY27 or the next 2 to 3 odd years, what could it be?
So, of course, we are working the strategy since we received NCLT approval just 2 days back. Couple of things till that April we are not supposed to do. That's where we started actively. Of course, integration activities are going on very well. So guidance perspective, earlier we indicated FY27. We are going to do closely 4,000 crores and EBITDA margins around 20%. Today, Sequent EBITDA margins are not so good, but it's growing quarter on quarter. So we thought 20% is good for 27, but looking at last few quarters, I think 20% we are going to do very soon. So last quarter we did 20 plus, but we are very confident to do 20% margins from now onwards. And FY28 onwards, we are working on the strategy. So we are also thinking to have an investor meeting sometime in last quarter or first quarter of next year to have a complete strategy discussion. And we'll definitely are going to give the guidance to the market that time. But till that time, of course, this is what we indicated to market. FY27 close to 4,000 crores with 20% EBITDA margin. We are very confident on that.
Also, sir, in Q1 FY26 con call, you had said that the PAT growth will outpace EBITDA growth. Are you on track on that? If you could, quantify us for that.
Absolutely. It's today, last few quarters, you see EBITDA growth or margin growth, but now it's converting into free cash. Last year, VIASH itself, we were able to generate 200 crores free cash. So that's continuously going to grow. And it's more important converting into EBITDA into PAT. It started now, there are 2 things where we are suffering PAT. One is Sequent perspective. Interest component is very high. That's a one area. And of course, few things, ESOP component also is there. But most important, interest component is very high in Sequent. With the combined entity balance sheet, with our current net debt with EBITDA ratio close to 0.7, and we are going to generate a lot of free cash. So our interest burden is going to come down drastically in next few quarters. That's where we can convert our EBITDA into PAT. And the second area in Viyash, we have some amortization intangibles.
Interesting.
Also,
Doctor,
we are suffering every
yes.
quarter. I think these two things are
Dr.
going
Hari
to...
Babu, last question. Of course, the debt-related, the numbers coming. Viyash Life Sciences, technically a debt-free company. What's the outlook looking like on the debt picture on the overall entity? You have spoken about the EBITDA synergies, the revenue synergies, and even the margins on a blended basis. But overall, what does this look like for Viyash? The debt plus the picture coming in for the consolidated entity.
So, as you know, Viyash is currently debt-free. Last quarter, we have very little debt, 20 crores or net debt. So now almost debt-free. With the combined entity, current debt EBITDA ratio is 0.7. I think it's close to, we have 400 crores. Next few quarters is going to come drastically. But we have a few things. And also, we don't see much capex infusion in next couple of quarters. Already we infused last quarter 50 odd crores to expand Sequent products. We don't see much capex infusion in next few quarters. And also we see a lot of free cash generation in next few quarters. There are two things. So we are working on that, whether to become debt-free soon. But also we have a couple of plans and M&A to bridge the gaps of Sequent. When I say we want to become leading animal health company, so there are few gaps in the business. We are trying to bridge those gaps, trying to acquire a few front-end areas in few countries where we can actually move quickly on that, trying to build some additional infrastructure. But this year end, I can say next 2 quarters, it's going to come drastically on the debt. That's where we are going to improve PAT.
Thank you so much, Mr. Hari Babu, for answering all the questions, and all the best for the business.
Thank you. Thank you so much for the opportunity. Thank you.
Thank you so much. Well, the key takeaways from this conversation would be that they are moving slowly into specialized products for API and formulation. Balance sheet will be strong for combined entity, and they want to become a leading animal healthcare company in the next 5 to 8 years. And PAT growth will outpace EBITDA growth, and EBITDA margin is expected at around 20%.
So they are sticking by their FY27 guidance coming in. But one question we asked on debt. It's not the debt reduction story. There is a further story of merger and acquisition coming in, because there are some more holes to be plugged in the entire ecosystem, and animal and healthcare. It's a vast system, right? It's not just complete. But that's all for today in KYC. We got Sequent Scientific's management for you. So stay tuned to NDTV Profit.
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
I believed that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now? Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, hey, yaar, India mein achhi bread nahi milti. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business?
Yes. So a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete or are you going to get acquired?
Startup like ours has its own DNA. For us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. Profit किधर है?
Nifty takes a breather after being a whisker away from a record high. Sensex slips more than 300 points. Auto, the only sector in the green today. Groww reports a stellar set of numbers in the second quarter. Transacting users rise 5%. Management sees long runway for growth. Reliance stops importing Russian oil into its special economic zone refinery. Move comes well ahead of the mandated deadline. Israel-India finalized terms of reference for free trade agreement. Commerce Minister Piyush Goyal says negotiations will kick off now and the pact will be a force multiplier in India-Israel relations. Prime Minister Narendra Modi leaves for Johannesburg this morning to attend the G20 summit. Prime Minister to speak at all three sessions of the summit. India's perspective on global agenda to be shared. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take it straight to the markets. Yes, there is weakness and a large part of that is really owed to the global cues coming in, which have been on the weaker side. So that's what the Indian markets is not immune to. So at the moment, almost 100 points down when we talk about Nifty 50, closer to the lower level of the trading session when we talk about the key index. And there is a sea of red when we see the rest of the pockets in the market, except for the auto sector, which is clearly showing an outperformance and is in the green. If you really look at the contributors on Nifty 50 and the key Nifty 50 components, well, HDFC Bank and ICICI Bank, these two have been leading the charge in the drag that is coming in for this particular index. On the gaining side, as I said, are the auto components, auto sectors like Mahindra and Mahindra, Maruti, even ITC as well as TCS are in the green. So that's the big picture that we are seeing in the markets at the moment, and there is clear sense of weakness that is really coming in. So another important story that we are really tracking from the IT space, let's get on to that straight away. And we are talking about TCS, which has, remember, announced a massive 18,000 crore rupees of investment to really build and expand data centers across the country. And also to make this happen, TCS is really teaming up, remember, with global private equity giant TPG, and also through a new venture that has been brought into place for the focus on data centers. In fact, my colleague Jasmeet is right here to take us through those details of this partnership and what it means for TCS. Tell us, Jasmeet.
TCS signs the pact with TPG Terabyte Bidco to invest up to 18,000 crore into the Hypervault. While this investment is to create AI-ready data centers where the company will increase the capacity to the excess of a gigawatt. Now, Hypervault is a wholly owned subsidiary of the company, while the TPG is a global leading alternative fund management company. A bit details about this particular investment. We see that the company has secured $1 billion investment. That's roughly 8,800 crores, which it has been taking from the TPG group out of the 18,000 crore investment. Well, we also see that the company and the TPG will invest in this particular project in a ratio of 51:49. TCS will have a 51% share, while 49% of the investment will be coming from TPG group. Secondly, the TPG is expected to have a shareholding anywhere between 27.5% to 49% in this particular Hypervault, which is yet to be decided. Lastly, the investment to be in various tranches over the time of 3 to 4 years. While this news had already come back in the Q2 earnings call of TCS, where they had planned to invest in the data centers. And this particular news had a mixed views from the analysts, given that TCS is into IT company where they are asset light company, but moving into data centers will make them asset heavy, which might reduce the ROCE altogether. So it's a wait and watch on how this will turn up for the company and how it will contribute going forward from here on.
All right, Jasmeet, thanks so much for taking us through all those details. Let's discuss this with an expert then. And Sandeep Agarwal, who's a fund manager and also co-founder at Sowilo Investment Manager, joins us now. Sandeep, always a pleasure to have you on NDTV Profit. With this move by TCS, how do you see their overall business enhancement, and why are IT companies, Sandeep, looking at this capital-intensive sector like data center?
Hi, good afternoon, and thanks for having me on the show. So if you will go and see when, TCS during the earnings call also said that they intend to get into this space. Yes. I think from a TCS perspective, it makes a lot of sense versus any other player, which are primarily we are seeing, in data center, 3 categories of players coming. One, which are having very big land banks and capital both. Another, there are some real estate players who are trying to play this as a proxy. And third, now even technology company has come. So if you put all 3 together, I think the one for which it makes the maximum sense is the technology companies, primarily because, if you see these big technology companies, the money they are making post-tax on these huge cash balances they are having is around 4%, 4.5%, 5% max, right? So compared to that, this business is highly profitable today. But remember that, this data center will become highly commoditized also very soon. But they will still have very high, much better advantage than other 2 categories of players who have jumped in this space initially, because you can make multiple offerings on the technology side. And when data center is owned by you and you are a renowned technology company like TCS or any other large name, then you always have an advantage of, doing some kind of cross-selling and making a lot of money. So I think it is a fantastic option between distributing cash through buyback or, dividends versus investing in this. Obviously, you won't get the kind of ROE, ROC which you were getting in the software businesses which you are running, plain vanilla software business, because it is not comparable. The total seed cost for one person is around 6 to 7 months of payback period. So you are making, if you exclude the cash balances these companies hold, all the companies are at 60 to 70, 80% or sometimes 90% return on equity investment. So that you will not get in this space, obviously, but I think it will still improve your ROE and ROCs in long run, because this will be much better than what you are making as interest and other income on those cash balances. So I believe that, on a console basis, in fact, the returns will go up, and it is a much better choice rather than distributing cash and unnecessarily buying something in AI space, which are like, at a very irrational levels in terms of valuation. No asset is available at a reasonable price, and, better invest some money in your R&D and build those capabilities. See, all these companies which are today doing AI, they will have to finally come, once that it gets streamlined and stabilized, those prompts will have to be written in India. You can't sit and write prompts in the expensive market. So I am very positive after 2 years, I think 1.5, 2 years, there is a challenge, because the efforts are going down in the industry by 30%. So you will take 1 to 2 years to cover that in your revenue and base to come in. And then I think we will have good time again. That is the way we look at it.
Right. So you gave a lot of points out there, Sandeep. But one aspect, obviously, is this a strategic shift also by TCS as a platform plus infrastructure capability company going forward?
See, I will tell you one very interesting observation, and I am covering this space for like now 20 plus years. In India right now, what has happened, because the margins in Indian IT was very, very low. No one wanted to serve Indian domestic IT, because you will see most of the contracts were in loss or something for multiple reasons, right? So most of the players, it is Wipro, HCL, and NIT, you see they are not doing business in India. Most of them have completely closed up. So now
Sandeep,
on the Indian players.
If I can intervene, we have to take it straight across to Gautam Adani, who's addressing the Indology Conclave 2025.
एक धर्म कार्य का स्वरूप देती है. Also, my greetings to every scholar, student and seeker gathered here today. I am thankful that so many of you have come from all corners of Bharat, and many from lands that lie beyond. I'm also deeply grateful to the Indian knowledge systems under the Ministry of Education for their support. Without their guidance, this Indology conference would not have been possible. My dear guests, let me start by explaining why we are here today and why a conference on our Indology. We are the carriers of an epic civilizational adventure that has faced invasions, rebuilt multiple times after destructions, and carried his wisdom across thousands of years with unbroken tenacity. A civilization that refuses to break is also the one that learns how to build. जो सभ्यता राख में भी अग्नि जगाती, वही हर युग में नई धरती बसाते. Fast forward to today, and there can be no doubt that over the past decade, Bharat has not only been the world's fastest growing major economy, but it has also grown to become the fourth largest economy on the planet. However, across history, no nation has sustained economic power without civilizational confidence. When a civilization knows who it is, its economy knows where it must go. The two have always been inseparable. But as we gather here today, the nature of the global battleground is rapidly changing. The gatekeepers of tomorrow will not be kings or conquerors. They will be algorithms that are silent and unseen. And these digital empires will either become the custodians of our civilizational principles, or rewrite them. This is why we meet, to debate Indology and to ensure that our heritage is preserved in the world that lies ahead. हम यहाँ अंतः मिलते हैं ताकि ज्ञान के दीप जलाए तथा युग युगांतरों तक भारत धर्म की धारा फैलाए. Now allow me to tell you how all of this started. And as always, behind every action sits a simple story, and here is mine. The initial years of my childhood were spent in Banaskantha in a North Gujarat. मेरा बचपन बनासकांठा के रेगिस्तान में बीता और लाखों हिंदुस्तानी बच्चों के ही तरह मेरी मां की गोद में ही मेरी पहली पाठशाला थी. Like millions of Indian children, my first classroom too was the lap of my mother. Every evening, as the golden sun set over our home, my mother would gather me and my siblings, and she would narrate episodes from our eternal epics, the Ramayana and the Mahabharata. She, Santaben, would tell us the stories about Prabhu Ram's 14-year exile, Sita Mata's devotion, the engineering wonder of the bridge to Lanka, the war with Ravan, the reunion of Prabhu Ram and Sita Mata, and then Sita Mata's separation again. From the Mahabharata, she spoke about Arjun's battlefield doubts and Krishna Bhagwan's words to Arjun to rise beyond family bonds and serve the purpose of Dharma. My mother was not just telling me stories. She was doing what every Indian mother does. She was shaping my sense of duty, devotion, and dharma. She would tell me, "Beta, રામની શક્તિ તેમના ધનુષમાં ન હતી, તેમના ધર્મમાં હતી. અને ધર્મની રક્ષા એ જ કરી શકે જે પોતાના સ્વાર્થને ભૂલીને પ્રજાના કલ્યાણ માટે પોતે દીપ બની જાય. પ્રભુ રામ's strength was never in his bow. It was in his dharma. It is only the one who forgets his own ego that can become a lamp for the welfare of his people. Every virtue in my mother's story had a name and a face. A wife like Sita, who lit the flame through the exile's night, turning her sorrow to strength and darkness to light. Brothers like Bharat and Lakshman, loyal and true, tied by dharma in everything that they do. My mother was not just narrating the principles from our epics. She was teaching me how to live them. Mata, Prathama Guru. The mother is indeed the first teacher. And perhaps, after all these years, it was her soft voice that resurfaced when the Ram temple was inaugurated in Ayodhya last year. In that moment, my heart turned not only to celebrations, but also to reflections on the 14 years Prabhu Ram spent in exile. जैसा कि आप सब जानते हैं, 14 साल कोई साधारण संख्या नहीं थी। वह धर्मधारा नियत काल था, जिसने ये सुनिश्चित किया कि राम अयोध्या से निकले युवराज बनकर पर लौटे देवता बनकर। He left as the crown prince of a kingdom and returned not as a king he was expected to become, but as the god destiny had shaped him to be. And as Sudipta outlined, that is when the Indology idea took shape in my mind. My dear friends, as expected, since our announcement, I have often been asked, why does Indology matter? What is the objective of a 3-day global conference on Indology? Let me first address the questions. Why does Indology matter? And to do so, let me first define what Indology means to me. It is the disciplined study of our philosophies, art, medicine, mathematics, architectures, language, and governance. From zero to Vedic algorithms, Ayurveda's healing, to Vastu harmony, Arthshastra's statecraft, to our civilization values, Indology is about how to turn ideas into institutions. And so, when we study Indology, we do not look back to live in history. We look forward so that the best of history lives through us. हम अतीत को इसलिए छूते कि राष्ट्र ज्योति उदित हो जाए, यथा अनंत काल तक भारत धर्म की किरण जगत में फैलाए. That, my friends, is the answer to the first questions, why Indology matters. My dear friends, when the roots of culture fade, the land turns dry and bare. But as long as values shine, darkness can never dare. When we speak of a civilizational setback, we often remember Nalanda. But Nalanda was not an exception. It was a pattern. Bharat's greatest injuries came from the systematic destructions of our knowledge infrastructures. Let me explain. Bakhtiyar Khilji burned Nalanda, Vikramshila, and Odantapuri. In doing so, he did not just destroy libraries, he burnt the nerve center of Asian learning. Their fall erased hundreds of years of knowledge in a single generation.
All right, so that was Gautam Adani speaking there. But take a look at Nifty 50. It is trying to limp back. There has been a considerable amount of recovery in Nifty 50 in the last half an hour of trade. But unfortunately, it's time to wrap on markets at 12. But keep it with NDTV Profit. Thanks so much for tuning in.
I believed that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now. Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, कि यार इंडिया में अच्छी bread नहीं मिलती. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business.
Yes. So a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete or are you going to get acquired?
Startup like ours has its own DNA. For us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. And profit किधर है?
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
We are at one of the facilities of Merck in Bangalore. Well, we are here at R&D facility or research and development facility of Merck. So there you go. Ooh. Merck actually develops those life-saving drugs which are used in cancer and MS. The business model of
Hello and welcome. You're watching Profit Buzzers right here on NDTV Profit. My name is Puneet Zaveri. With me is Anushi Wakharia. And over the next hour or so, we'll try and get you perspective on all the key stocks, all the key stories that are buzzing in trade today. Also get you some perspective from our guests about those stories as well. But before we go ahead with all of that and a lot more, let's look at how the markets are doing, because we have spoken about the Nifty 50 largely being in a bearish territory today. But what's interesting is over the last hour or so, we have started to see some buying and some recovery. Now just 40 points odd. At one point in time, we were down about 120 points on Nifty 50. So we are closing in on the 26,150 mark. We will continue to monitor 26,200 as a key level that we will be watching out for. Let's quickly look at the heat map for the Nifty 50. We were down, almost 40 stocks were in the red at about 10:30. You will see a more positive, outcome as of now, because the auto pack has decided to take it up on themselves to show a positive momentum. So the likes of Maruti, Mahindra, Eicher Motors, as well as Tata Motors, the passenger vehicle side, are 4 of the top 5 gainers for the Nifty. We are seeing some on Interglobe Aviation as well, but largely a positive outcome compared to where we were a couple of hours ago. The advance decline also, let's pull that up very quickly. We were at roughly 450 advances a couple of hours ago. That has inched up to 600 odd. Continue to see how the momentum happens, but largely over the last 2 days, it's been the benchmarks that have been outperforming the broader markets, and hopefully by the end of trading session today, we will see that happen yet again. When you look at the mid cap and the small cap very quickly, it's been an underperforming scenario there for both the indices. Mid cap 150 down 0.7%. The small cap as well down at a similar trajectory. And finally, the BSE 500. You will see that post the earnings season, we have started to see some cool off in some key stocks, but the likes of DCM, Shriram, Anupam Rasayan, as well as Alembic Pharma are not one of them. Saman Capital, after seeing downward momentum at the start of this week, is starting to see some pullback, while AIA Engineering, AWL Agri, of course, had that block deal. So that's the reason why the pressure on the stock. Quest Corp is also down almost 2.62% today. But, let us give you some perspective now to ring in the holiday shopping season and the year's biggest retail shopping day as well. Brands gear up to offer mega discounts to tech appliances and a lot more. But my colleague Anushi has made it to the wall. She's now joining in to give us some more details on the stocks that you should keep on your radar this Black Friday. Anushi.
Well, of course, a lot of us are busy right now checking out all those best price deals that we are looking at with these 50 or 60% off, offers that are flowing through. But what we've done essentially is we've also made a stock watch list in terms of where the analysts are most bullish on a couple of these counters where they're seeing returns of anywhere between 30 to 50% as well. So just this is in mind that Nifty is nearing its all-time high levels as well. There is some correction that we've seen in today's session. But let's take account in terms of which are these stocks in particular. Now, if you're talking about the stocks, HG Infra, REC, these are stocks which are in focus. Brigade Enterprises also, we are looking at returns of over 39 to 52%, while for Orient Electric, Suntec Realty and restaurant brands, we are looking at returns of over 38 to 42% each. Coming to the other picks which are there, Aptus Value Housing and Moltec Packaging. Now, these are the interesting ones that we are seeing, especially Moltec Packaging in the small cap space. 36% is the kind of upside that we are looking for this particular counter. While we look at some of these others, Dhanuka Agritech now makes the cut. This is despite the environment that we are seeing 36% of an upside, along with something like a Z Entertainment also making the cut, about 35% of an upside potential seen here as well. But what's making analysts so excited about these stocks? Why are they there in the watch list is something that we should be seeing as well, along with the outlook that the company has given as well. Starting off with HG Infra now. Now, if you just talk about the first half, the order inflows have been on the muted side, but management maintains a guidance of around 10,000 to 11,000 crore despite this muted performance that we've seen. Along with that, they're also monetizing more of their assets. This includes the likes of 5H HAM assets as well, which are expected to strengthen their balance sheet also going forward. So that is on HG Infra. Moving on to the next one in focus is something like a REC. Now, what we are seeing essentially that earnings have remained majorly in line. Along with that, even the asset quality has been stable. If you take the other factor in consideration also, that they have maintained their loan growth guidance of 11 to 12%, which is also on the positive side that we are seeing for REC. Coming to the third one now, if you are looking at Brigade Enterprises, where the expectation is of more than a 33% of an upside. A strong launch pipeline is what we are seeing now. H2 is expected to be where a lot of these real estate players are expected to accelerate their launch pipeline and get more of those pre-sales number in terms of new launches is what we are seeing. Along with that, they already have a sizable land bank, and even if you take the debt levels in account, that is at the comfortable levels is what we are seeing. So positive is what we are seeing for Brigade Enterprises. Moving on to the next one in focus is something like a Orient Electric. Now, what was the, despite the macros and the overall environment in which it operates, it reported a better than expected performance in terms of where the H1 was headed. So that was one positive that we'd seen. What is also anticipated to drive growth is its wiring business, which would lead to higher margins also going forward. So that's on Orient Electric that we are seeing. Moving on to the next one in focus is again from the real estate space, and that is Suntec Realty. Now, if you look at this guidance that the management has given, 30 to 35% is what they've been guiding for consistently over these last few fiscals. So this remains on a healthy trajectory. Along with that, what we are also looking at, which works in favor for the company, is that along with the pre-sales guidance, the execution is now going to be important, because that's going to lead to margin accretive projects going forward versus the older projects which were there. So margin boost is also expected for Suntec Realty. The stock has not performed well if you just take the overall year-to-date in account. So that's for Suntec Realty that we are seeing. Coming to restaurants brands Asia now. Gross margin expansion is something on the cards. This would be driven by the supply chain efficiencies. Along with that, what would be the other factor that would be critical for the growth is its same-store sales growth. Now, that stood at about 2.8%, which was higher than what the street had estimated. So that was on the positive that we are looking at. So restaurant brand Asia in focus. Coming to Aptus Value now. Now, management has reiterated a 25% plus of AUM growth. So this is on the stronger side that we are looking this particular guidance at. Along with that, now they're pivoting to more higher ticket sizes along with better collection. So that is expected to improve their margins as well. So that is for Aptus value that we are seeing. And lastly, coming to something like a Moltech packaging now, increasing contribution from their high margin pharma is something that the management has been focusing from these last 2-3 years onwards, and the mix is expected to continue. So that is on Moltech. Along with that, the utilization levels is also expected to drive growth. This is already the capacities have been ramped up. So it's just the utilization levels that we should be watching out. So these are overall all the stocks that we are seeing, along with something like a Dhanuka Agri as well, wherein they are seeing new product launches to drive growth going forward. Along with that, the capex scale up is something that we should be seeing. So that is on Dhanuka Agritech that we are looking at. And lastly, coming to something like a Z Entertainment. Now, overall demand environment has remained on a muted side, but this is reflected in the ad revenue as well. But they are cautiously optimistic now on FMCG players with these new GST rules in place and higher pickup in terms of where the consumer spending is concerned, that they would lead to a better ad revenue going forward for the business. So these are the 10 stocks that you should be watching out for on this Black Friday sale that is going on.
Well, thanks so much for that, Anushki. And it's a very interesting set of stocks with the reasons that Anushki also highlighted. So let me welcome in Neerav Asher. He's the head equity research analyst at Latin Mandaraj Securities. Neerav, very quickly, let me highlight a couple of these which are very interesting to me. The first one, something like an HG Infra, right? Because post hitting almost 1700 or 1800 or levels, stocks down almost 50%. And hence you're seeing that upside on that stock. Let me also get your opinion on something like an Aptus value in that NBFC and the smaller finance space and Moltech packaging. A lot of positive results from someone like Asian Paints does augur well for this manufacturer of, in the plastic space. So these three stocks, and Anushki, I'm sure, has a few questions as well. What do you make of these three ones?
Good afternoon and thank you for the invite. I think the common denominator amongst all these stocks which we have discussed just now is their presence into segments like infrastructure space, construction, real estate, and consumption space. So I think infrastructure players, as you mentioned, HJ Infra, after having hit a record high, the stock has corrected. There could be several reasons which could be attributed to this. There could have been a delay in receipt of orders. The order intake would have slowed down, and I think that has impacted the stock performance, and that has impacted the revenue growth, and that has consequently impacted the margins. Going forward, the company is confident that they'll be able to ramp up their order inflows. The order books are likely to move up, and there's likely to be a pickup in infrastructure activity in general. So I think government infra spends are likely to go up. Private sector capex is likely to go up. So I think the prospects could improve on account of this factor. At the same time, I think construction activity continues to do quite well. It's a very competitive space at this point of time. There is a risk of demand slowing down. However, at this point of time, things look quite positive. And the third script which you have mentioned regarding the packaging side, I think there could be several factors attributed. One is the raw material costs continue to remain quite benign, and moving up the value chain is naturally going to help ramp up the margins. So I think these are the factors which could be attributed positively.
Hi Neerav, this is Anushki here as well. Just want to follow up on that. You mentioned about construction activities, the pickup there. So just want to focus on real estate as a space as well. Now, if you just look at the index performance in this year-to-date period, it's not done so well. Of course, there was a correction as well after the kind of year, the year before, wherein there was strong gains that we'd seen. But something like a Suntec Realty, or let's say even Brigade. Now, Suntec has been consistently giving those 30 to 35% of a pre-sales growth momentum, but still it is one of the most corrected stocks in this real estate pack that we are looking at. So just want to get your outlook in terms of overall real estate as well. Is this a good opportunity to enter in this? And what's your view regarding these two?
I think a lot of stocks have moved up on account of the exposure to low-cost housing or redevelopment projects. These companies continue to do well. However, we are seeing certain players like Suntech and Prestige, which are focused on the premiumization space. So one does tend to see a bit of volatility as far as this space is concerned. That could impact the valuations. However, the outlook in the medium term continues to remain quite positive.
Okay, so well, that's with regards to all of those top 10 stocks that we've discussed. So those are some stocks that you should be having on your radar. But shifting focus, if you just talk about what's happening with Novelis, another fire incident was reported at the Novelis Oswego unit. And this is the second such incident that we are seeing after a fire at the New York plant in September as well. What's happening? What's the scenario? Would there be an impact on financials? It's something that we should be going across and asking Sharad for more details.
Hindalco has seen a significant fall in the day's trade, and the stock has been, you could say, under the stress. This is the second fire striking the company's plant, and this is the US plant we're talking about. Earlier, this was the New York plant, and overall the impact, that is a very important thing to look at. There's going to be an impact of roughly $100 to $150 million in FY26 EBITDA numbers, and if you look at the operating cash flow, that could range between $550 to $650 million odd. Now remember, Novelis is a key supplier for Ford Motor when it comes to the aluminum sheets, and in last trading session we saw Ford Motor also falling almost 4% in the day's trade. Also looking ahead, what will be the timelines for the resumption of these closed units is something which the street will be watching out for, and also any revision of guidance would be coming in, especially when is the restarting of production. That's something which the street will also be looking at. And per previous fire, that guidance last time, their facility production is expected to start by December 25. So any delay in these timelines would augur more negatively for the company. But net, this is the second fire coming in Novelis pack, and that's why it's dragging the metal index also down.
Thank you for that, Sharad. Nirav, coming to you on this now, with the second fire incident which is happening there, we have seen about a 2% of a correction in terms of where Hindalco is concerned. But other than that, the main concern remains on the EBITDA side of it, about the revenue loss also. Just want to get your perspective on what's happening for this.
Well, I think when such incidents with respect to industrial safety happen, and that too in developed countries, there's a serious note which is taken, and this is the second incident which has happened. So it could potentially also impact, definitely it's going to have an impact on the financials, it's going to impact production, it's going to impact delivery, execution, margins, etc. But more than that, it could impact the relationships with the suppliers, because when audits take place, a lot of customers, they tend to focus on zero defect, zero accidents, and all these factors. So I think it could have a reputational impact on the company as well, especially the fact that this is a second incident which has taken place.
Okay, so that's with regards to Hindalco that we are seeing, but we'll stay with the space. What's happening with steel industry, it also remains in focus, and this is after Beijing is weighing a fresh round of property easing measures as it now looks to stabilize the sector, which is still grappling with debt stress along with weaker demand. To give more details on this, Sharad joins us with a detailed outlook on what's happening with the sector.
Overall sector, there is a sentimentally positive news flow coming in. Tata Steel, JSW Steel and SAIL, these companies are in focus, and Beijing is considering new round of property easing measures going ahead. And once these measures actually become good, then the demand for cement and real estate, that also picks up. And if that picks up, the metal demand also picks up, and that's auguring well for the global prices as well. Overall, if you look at it, these initiatives will underline the policymakers' rising concerns because there is a massive property downturn in the China markets. And Nomura has also stated that if this kind of announcement comes in, this would stabilize it. Now, why it is positive for the Indian steel makers is because the demand of steel, copper, aluminum, that can go up, and the global demand, actually bulk numbers come in from China itself. So the Chinese demand picks up, the pricing goes up, and it's positive for the Indian steel makers as well. So that is something which we'll be watching out for overall for the steel industry.
Well, thanks so much for that, Sharad. But Nirav, we did get your view on something like a Hindalco as well. What should one do? Because the metal space has actually been quite buzzing at this point of time. Anything that you like from the whole space, in particular, that investors can look at right now?
Well, if one were to see a pickup in the infrastructure activity as well as a construction activity, definitely the metal space is going to do quite well going forward. And per se, I don't see any problem with the Indian steel sector because the domestic steel demand continues to be quite strong. We've had very healthy realizations in the range of 64,000 rupees per ton. And the EBITDA per ton has been quite healthy at around 14,500 rupees per ton. So EBITDA margins have been ruling quite healthy at around 21-22%. But I think it is the overseas situation or the situation in countries like China where the dumping has impacted the domestic markets. So I think if there was a revival in the Chinese market, it would work extremely well for the domestic steel industry. I think aluminium also continues to do quite well. Copper demand continues to be quite strong, especially the kind of demand which is going to come from the power sector, from the data centers, the EVs, etc. So I think the demand scenario looks quite formidable.
That's Nirav's view on the metal space as well. But let's pull up something like a Groww. It's been on retail investors radar for a while now. Saw 18% downtick in the last today. Today it's up almost 5.5% on the back of its quarterly earnings and probably leading to the momentum today. Sharad is joining us back with us, actually giving us perspective on what worked in this quarter for Groww to lead that positive momentum. Sharad.
Strong set of Q2 numbers coming in for Groww, and interestingly, even the EBITDA margin, they are touching nearly the 60% mark. Overall, looking at the share itself, the operational numbers, the transacting users, that went up 5% sequential basis, and even active users, there was a good addition coming in. The revenue per broking order, there was a slight increase coming in, jumping on a year-on-year basis to 19.8 rupees as compared to 18 rupees. And their business for the broking, especially the cash market side, the MTF, which is the margin trading facility, that saw a significant jump coming in. Market share, that's also very important, but this is year-on-year basis. NSE active clients it's at the top, 26% plus. Mutual fund SIP inflows in the 13% mark, but cash average daily turnover, look at that significant jump coming in from 17% to 26%, and derivatives also a significant jump when it comes to the market share in the average daily turnover. Also, this was the first, you could say, the letter coming to the shareholders, and three important takeaways coming from this. And first is that the company says they haven't even covered 1% of their total journey. They'll be laying their roadmap for the coming years, and the focus would be there in customer growth. Today we'll be getting you more important details for the company, as con call is there at 4 p.m. and on December 10th there is a 1-month share lock-in happening for 2% equity stake as well.
Thanks so much for that, Sharad. Nirav, very quickly, a lot of interest, as I mentioned, on something like a Groww. Would you venture in right now, given the solid Q2 earnings, or would you like to play this theme in some other key stocks or companies that you will have on your radar?
I'll definitely keep Groww on my radar because margins have been quite good. So I think a margin trajectory of around 62% EBITDA margin, that's very, very healthy. And they've been able to maintain that. I think they have worked on a very disciplined, in a very disciplined manner on their cost structure. If one were to take into account the employee cost, it's around 12%, and rest of the expenses are around 28%. So I think 60% EBITDA margin augurs extremely well, and at the net level, I think 44-45% net profit margins. So I think there has been some disappointment with respect to the revenues. In H1, the revenues have been down by around 8%, but there's been a 12% increase in the net profit. So I would attribute this as a mixed quarter. Expect the stock to consolidate. I would wait for some correction before venturing into the stock.
Okay, so that's on Groww that we are seeing, but still up over 5% in trade is what we are looking at. But before we talk about Reliance Industries, which is also the stock in focus, let's quickly take a check with regards to what's happening the benchmark indices. In terms of what the Nifty 50 is doing currently, we are seeing a strong uptick in the last half an hour or so. Currently, flattish moves is what we've seen. We've seen a strong recovery that almost in green is what we are looking for Nifty 50. So interesting move, Puneet, that we are looking into with regards to what's happening with the benchmark indices, right?
Definitely, and we were down almost 120 points at one point of time in the trading session. So over the last 2 to 3 hours, a positive build-up which is visible on the charts, and we'll continue to monitor that. But a major shift at Reliance Industries is what we're looking at. The company has officially stopped importing Russian oil into its special economic zone refinery, well ahead of the mandated deadline. What does this mean for operations, margins, as well as its global export? My colleague Somit is here to break down all of that for us. Somit.
Important announcement that has come in from Reliance Industries side, and the company is saying that they have stopped importing Russian crude with effect from November 20th, and this is for the special economic zone, that is the export unit of Reliance Industries. From December 1st, the company is clearly saying that all products which will be exported from the SEZ refinery will be obtained from or will be made from non-Russian oil. Now they are saying that this transition has been completed by the company ahead of the schedule to ensure full compliance, and the schedule was supposed to end, or the restriction was coming into force from January 21, 2026. Now what does this mean? If you look at the SEZ unit, that is the export-oriented unit of Reliance Industries, and this will stop processing or using Russian crude. But the DTA unit, which caters to the domestic market, will continue using Russian crude. Now, RL has a capacity of around 1.4 million barrels per day. Now, this means that they process this much amount of crude products every day, and largely this is spread equally between the SEZ and the DTA unit. And currently they are using around 40% of Russian crude. So this moves out from SEZ and could possibly shift towards the domestic unit DTA. So it's not that they have stopped using Russian crude, it is just that they will not use the Russian crude in the export oriented unit and will continue to use the same in the domestic unit. Now when it comes to the impact, this could be the best possible way for Reliance Industries, in fact, to stop using Russian crude for exports, given the fact that the crude discounts have anyways come down to just $1 to $1.50 per barrel. And if you look at the margins for the refined products in the global markets, they are nearly at a 2-year high. In fact, yesterday we were highlighting that the Singapore gross refining margin, which is the Asian benchmark for refining margin, was trading around the $10 per barrel mark, which is at a 2-year high. So if they sell their products in the export market, and they'll generate much more return compared to what they would have generated by taking Russian crude into the SEZ unit. So this is the best possible scenario for Reliance Industries at this moment. And yes, by exporting the product, they will make up for not having the discount of using Russian crude into the SEZ unit.
Well, thanks so much for that, Somit, giving us key perspective on Reliance Industries. Nirav, very quick view on something like a Reliance. What would you do right now with the counter?
I think the Q2 results were quite impressive. We had 22,000 crore profitability, and if one were to add the depreciation, then the cash profit was significantly higher. We have the O2C, which is making a comeback, oil to chemicals. We are seeing the dramatic turnaround in the refining margins. The upstream and the downstream oil and gas businesses have been doing quite well. And the consumer facing businesses, that is the geo platforms as well as retail, both continue to do quite well. According to Reliance Industries, they're expected to double their operating profits by FY27, and this is on the basis of the strong performance of the consumer facing businesses. And the new age businesses are also likely to scale up in the next 5 to 7 years and generate revenues equivalent to the O2C revenues at this point of time. So I think the outlook looks quite encouraging as far as the existing businesses are concerned.
So that's with regards to Reliance Industries is what we are seeing. But moving on to an important story now, sources tell your channel that IndusInd Bank is not in discussions with a merchant banker to explore a fundraise. My colleague Vishwanath is joining in with more details. Vishi, if you see about the development and about the chatter, there was a lot of discussion on there being some kind of fundraise on table for IndusInd, but we're now seeing that that's not the case scenario. Give us a detailed breakdown in terms of what's happening here.
Right, so news reports were suggesting that there was a likely $1 billion fundraise that the bank was exploring, and this is primarily because the bank needs confidence capital. There were other news reports which saying this is not being pitched as confidence capital. This is being done because the bank needs more funds for provisioning, as well as the expected credit loss framework, which comes into play later on. What we are learning from our sources is that there is actually no such plan at this point in time. There has been no merchant banker who has been contracted for this purpose. The name Citi was being prompted as the merchant banker who is going to lead this entire effort. What we are learning from a source is that the bank has not engaged with Citi for this specific purpose. In fact, currently the bank believes that it has enough capital in its accounts, enough capital to address any provisioning requirements that may come up. In fact, the book is currently clean, so enhanced provisioning is probably not a requirement. ECL will be a problem, but that once it comes in, the bank will attempt to raise funds then. But at this stage, there is no discussion of a fundraise that is being formally discussed. That is what we are learning from our sources. The bank has also gone out and issued a clarification to the exchanges, calling these news reports speculative and factually inaccurate. And of course, what we are telling you is over and above what the statement said.
Thank you so much, Vishi, for giving us what's all that's happening with IndusInd Bank. Nirav, let me come to you on this, with regards to the fundraise being on or off table. What do you make of this development? How do you read IndusInd Bank currently as?
Considering the fact that there have been a lot of turbulence as far as IndusInd Bank is concerned, I think they would wait for some time before taking any further measures with respect to fundraising, etc. And I think the promoters would also be keen to infuse capital. They have indicated earlier. So I think it's a wait and watch game for the time being.
That's Nirav's view on IndusInd Bank. But time for a very quick break, viewers. But before we go, the inaugural season of NDTV Pro-Am is starting this Saturday, November 22nd from Delhi NCR, and will travel across 6 mega cities across India. Stay tuned for more information, and we'll be right back with a short break.
I believed that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now. Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, hey, yaar, India mein achhi bread nahi milti. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business?
Yes. So a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete, or are you going to get acquired?
Startup like ours has its own DNA. For us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. Profit किधर है?
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it.
Welcome back. You're watching Profit Buzzers here at NDTV Profit. Now, markets are seeing recovery, but we'll have to wait and watch out for whether we do cross the life high today or not. That is at 26,277 levels. Right now, the Nifty 50 is trading at that 26,167 level, so 110 odd points away from its life high. But three stocks that we're putting spotlight on is TeamLease, 5-Star Business and Sunteck Realty. Now, analysts are calling these names sure shot winners, but the market has voted the other way. All year, each of these stocks have been sitting on double-digit losses despite strong backing. Varsha joins us with the entire analysis as to why is that. Varsha?
Well, thank you so much for that. So all the three stocks, if you see, analysts are super bullish on all these stocks, but these stocks have given negative returns to investors, starting with TeamLease. If you see the stock, all the 12 analysts have a buy rating, but the stock is down almost 44% in year-to-date returns. If I were to talk about for 5-Star Business, if you see all 11 analysts have given a buy rating, but stock is down almost 25%. And for Sunteck, 14 analysts have given a buy rating and the stock is down 15%. So let's, deep dive why this underperformance and what's the outlook for three of the business. Starting with TeamLease, if you see lean hiring trends from sectors like IT and BFSI is one of the reasons why the financials were not good for the company, and hence the stock was down almost 14% or 41%. Now let's see what's the outlook when it comes to this company. So they've increased in hiring in GCC centers, which is a positive point for the company, and they're expecting strong revival when it comes to H2 FY26, and there are early signs of demand recovery when it comes to general staffing as well, which is a positive for the company, and there's a stronger contribution from higher margin specialized staffing business, which will help overall EBITDA margin for the company. Next on the list, if you have a 5-Star Business Finance, if you see the stock is down 25% year to date. Now, one of the reasons is soft Q2 quarter, and also the growth was subdued because of with disbursal declining. But talking about the outlook, let's see what's the outlook going ahead. So the visibility is improving on AUM growth and asset quality, and also if you see that there's been gradual improvement expected when it comes to Q3, and the strong recovery is expected in Q4. Well, next on the list is Sunteck Realty. If you see the stock is down 15%. Why? Because one of the concern that investor has is moderation in MMR region market, which remains a concern for overall investors. But let's see what's the outlook. One is they've maintained their pre-sales guidance of around 30 to 35% year on year for FY26, and they've also they've got a healthy launch pipeline. So overall, based on the outlook for H2, all these analysts are super bullish when it comes to all these three companies, and hence all of them have given a buy rating for all the three stocks.
Okay. All right, Varsha, thank you so much for getting us those details. And of course, that's a pretty good analysis that you've made there for all of these three counters. But Nirav, I'll come to you on this one. Any of these counters, because like Varsha was mentioning, there is buy tags, but it's not done much in the past. Any of these that you still think that despite of the kind of downtake, they hold good fundamentals and can be a good buy at the moment?
Well, I think all these stocks have been prepared on the basis of certain expectations. So I think if TeamLease was recommended, it was on the basis of the assumption that that would be a revival in both the segments, that is the banking and financial services as well as IT. Now that has been delayed for certain factors. So I think the recovery has been pushed back, and I think there's been a disappointment as far as the stock price performance is concerned. So we'll have to wait and watch for some time with respect to this company. As far as 5-star Business Finance is concerned, of course, can expect things to improve from the second half of the year, but recovery is clearly some time away. And with respect to Suntec, I think they'll be able to meet their expectations. Already they have given some positive outlook with respect to the pre-sales. So hopefully they should be able to bounce back at the earliest.
Well, we also have Raja Venkatraman, the co-founder at Neo Trader, joining in as well. Raja, very good afternoon and thanks so much for joining in today. Your quick view on the charts of something like a Suntec Realty and 5-star Finance as well, because both of these have strong fundamentals. For TeamLease, we have seen the demand environment being quite subdued, but any view on Suntec as well as 5-star?
Yeah, when you take a look at the, good afternoon, first of all, thank you for inviting me to the show. So when you take a look at the real estate space as a whole, it has been going through some bit of turbulence. And when you dive down into Suntec Realty, you can see that the stock has been under continuous selling pressure here. And, the stock has not been able to generate that kind of momentum. While the fundamentals could be strong, we also need participation here. And that's what is missing at the moment. So at the current juncture, I would not be buying into Suntec Realty. If I were to get into the stock, I would wait somewhere in the region of around 440 levels, where I would see some bit of demand picking up. And that's what would be a good zone to consider. So, and when you talk about 5-star, yes, 5-star has been in a consolidation mode. So between Suntec and 5-star, I would say that 5-star is a much better bet, because after rising for a while, the stock had slipped into a consolidation. So now if markets are getting better, then it could percolate to the real estate and this stock could also benefit.
Well, Arvind Sharma, head of India Autos and Transportation of Citi, actually believes that there will be an uptick in demand for the auto industry despite the strong Q2 as well as October season that we've seen. He's expecting the demand momentum to continue in Q3 as well as in Q4. Let's quickly listen into what he had to say.
Did you sense from the quarterly numbers, from the commentary that came in, that things are gonna look hunky-dory for Indian autos, two-wheelers, four-wheelers, tractors, etc., because of this GST cut? And will Q3 be a remarkably good quarter? I'm trying to understand. And will it set the stage for further quarters?
Sure. So if you go back before the GST cuts, also the change in the tax slabs, generally better rate environment, and then the GST came in on 15th of August. So naturally, things were setting right. All stars were aligning for a good growth. Between 15th August and 21st September, we weren't buying because we things are getting cheaper. On 22nd September onwards, things really came up, and if you look at those 42-day period, we're up almost mid 20% across all sectors, across all subsectors, passenger vehicles, two-wheelers, tractors, etc. Since we're talking about the quarterly numbers, companies were still a bit cautious. That's why you see most of them talked about second half growth of mid to high single digit. None of them was extremely exuberant, saying we're going to go up 10-12%. No. But what we've seen now that we are towards the end of, almost end of November, things are holding on. The retail data does show a fairly steady number in both entry-level bikes, entry-level cars, as well as even some of the premium bikes and cars as well. So it seems to be across the spectrum that we are seeing good growth. Now, what remains to be seen is November the month when everything subsides, or do we go on further? Our sense is some of these changes are more structural. Thanks to GST, prices have been cut. When you look at the price cuts, actually companies have gone over and beyond what GST mandated. Beyond that 8.5–10%, we've seen companies cutting prices by 18–20% on specific models, right? So if that goes on for some time, and thankfully rural India is doing good, we see that in numbers, in tractor numbers, which is very visible. So we believe that there should be an uptick in broader demand across segments. Naturally, small cars or small or entry-level bikes, which have been weak for so long. Last time small cars were doing good was probably 3, 4 years, 5 years back. So you have a base that helps them, right? But even accounting for that, on a broader passenger vehicles and two-wheeler space, we should see a decent growth in second half. Tractor is something which has surprised us literally every month. You know, you see commentaries getting more positive almost on a monthly basis. So there also, I think we should see a good second half.
Well, that was the Citi think tank, and you did see the other analysts as well. We had coverage from the analyst who covers internet stocks, Kunal, of course, of banking, and Surinder Goel, the head of research. I urge you to, catch that conversation on YouTube if you missed it today at 10 a.m. A key insight into what went down in Q2. But Nirav, let me come back to you very quickly. Autos today also the momentum is quite strong, and the expectation is that it will be continuing that momentum from Q2 into Q3 as well. Give us perspective on a couple of stocks. One's Hero, because we haven't discussed that too much with you over the last quarter. Stellar set of numbers from the company, as well as what you make of the EV players as well, and specifically Hero as well, because it's doing very well with VIDA as well. A quick view on Hero MotoCorp.
Well, Hero MotoCorp, if I were to sum it in one sentence, they have made a statement. We have had market share gains in almost each and every category, whether it is entry level, whether it is deluxe, whether it is premium, whether it is scooters, whether it is EVs, or whether it is a global business. I think this sums up everything. Rural markets have been doing quite well. We are seeing a very strong penetration in the market. There have been a lot of first-time buyers who have made purchases during the festival season. The scooters have done exceptionally well in the western part of the country as well as the southern part of the country. Maharashtra, Gujarat, Karnataka, and Kerala have done exceptionally well. And I think it's the best of all the worlds as far as Hero MotoCorp is concerned. The valuation support is also there. And to top it all, we have seen a slew of brokerage upgrades also in the last few days.
Well, most certainly, and 3 key upgrades that we've seen, and yesterday was the third one from McGuire. Others were JP Morgan and Morgan Stanley over the last week since the results came in. But let's quickly pull up some of the key stocks from the Mahindra Group, and that's stable. M&M's one of the top Nifty gainers, up 1.2%. That's largely on the back of the investor day that the company held yesterday across all the listed entities. So let's look at M&M Financial as well as Tech Mahindra, and these three is what we are putting the focus on the back of brokerages coming out with their view post the investor day. Tech Mahindra has seen some sell-off from the day's high, and so has M&M Finance. But on Mahindra, Morgan Stanley has maintained an overweight rating, target price of 4,407, maintaining 2 key points. Growth targets across the spectrum of 15 to 40% over FY 26 to 30 is a key positive. And SUV, an 8x revenue growth target between FY 20 and FY 30 continues to be one of the key focus areas for the company. Farm business, a 3x revenue growth is another key positive with a 26 to 30% CAGR. Jefferies maintain a Y as well. They've increased the target price actually to 4,500 versus 4,300 earlier. And they feel that they are very optimistic on the company's light commercial vehicle turnaround. It's another business that they are very strongly focusing on. When you look at M&M Finance, Morgan Stanley has a target price of 300 rupees per share and maintains that the company needs to improve its return on assets ratio, but credit costs is seen one of the key vectors, and hence you're not seeing too much of a reaction on the stock today. While Jefferies has maintained a hold rating, but increased the target price to 325 from 310 earlier, and maintains that they're seeing a better sequential trend from the company in H2, and ROA is expected to inch up again to 1.9 to 2% over FY 26 to 28. Tech Mahindra also, the long-term target is something that we are focusing on, but it's an underperform rating from Tech Mahindra as well. But before I take a question on this one, we have Piyush Goyal who's currently speaking. Let's listen to what he had to say.
भारत और इजराइल के बीच फ्री ट्रेड एग्रीमेंट की शर्तें जो हैं वो फाइनलाइज हो चुकी हैं, हस्ताक्षर हो चुके हैं। इंडिया और इजराइल मिलकर कैसे आगे बढ़ सकते हैं? इनोवेशन इजराइल का जो है वो कैसे भारत के काम आ सकता है?
इजराइल ने दर्शाया है कि नवाचार, इनोवेशन, रिसर्च, डेवलपमेंट किस प्रकार से छोटे से देश को बड़े महत्वपूर्ण स्थिति में खड़ा कर सकता है। इनको जब अपने राष्ट्र की सुरक्षा की समस्याएं थीं, तब उन्होंने सुरक्षा के साथ साथ नवाचार को स्वास्थ्य के साथ मिलाया, नवाचार को पर्यावरण के साथ, जलवायु परिवर्तन के साथ मिलाया, और ड्यूअल यूज, जो एक ही नवाचार युद्ध में भी काम आ सके सुरक्षा के दृष्टिकोण से, और सामान्य मानवी के रोजमर्रा के जीवन में बदलाव ला सके। इसका जो मिलन इजराइल में देखने को मिलता है वो वास्तव में बड़ा लाजवाब है, बड़ा प्रोत्साहित करता है। और इसीलिए भारत और इजराइल दो ऐसे देश हैं जो मिलकर इस नवाचार को बहुत बड़े रूप में विश्व स्तरीय ताकत बना सकते हैं। बहुत बहुत धन्यवाद।
Well, Piyush Goyal was speaking in Israel, and he is there for some talks with the government, of course, to form a key pact between Israel and India. It's something that we'll continue to bring key updates on. But Raja, let me come back to you very quickly on something like a Mahindra and Mahindra. On the fundamentals, quite strong in terms of their growth targets as well. On the charts, does it still make sense for someone to buy into this particular rally?
Yeah, when you take a look at Mahindra, you can see that the stock has diversified itself, and that diversification has actually helped it to sustain the momentum. And we can see that the steady upward traction which is seen here clearly augments more upward traction here. And I feel that one can participate in Mahindra at the current levels, but looking at the way it has run up, probably a dip also could be a good opportunity. So one can balance their entries between the current levels, and a dip closer towards the region of around 3,500 should be a good spot to enter, because the target of around 4,100 to 4,200 is possible within the next 6 months. So it's a very much buy on my cards. Along with this, I would also say that the other stock which is showing some good traction today is Maruti. After a brief sell-off from its recent highs, the stock has woken up out after a long phase of consolidation. And I would say that Maruti could be the other good pick from the four-wheeler space. So these are the two stocks from the auto pack which I would actively track and participate in the market.
Okay, all right. So that's with regards to where auto stocks are concerned. But liquor companies, have been buzzing since yesterday, and this is because MNCs like United Breweries, United Spirits are seeking over $337 million overdue payment, which is has been overdue since 2024 from the Telangana government. Now, today, in fact, the Breweries Association of India plus the Confederation of Indian Alcohol Beverage Companies and International Spirits the Wines Association of India have written to the Telangana government stating that alcohol industries dues worth rupees 2,985 crore are due. This includes 2,029 crore outstanding from May to August 2024. This includes 956 crore overdue amount that is incurred from sales after August 2024, and pending dues also include overall total amount of around 2,985 crore. Industry stakeholders have kind of alleged that there is unfair treatment that's been going on. They have denial of legitimate dues despite multiple meetings with the government officials. Telangana government has denied, saying that these dues are not legitimate, but the body has written to the Telangana government stating that this is legitimate and this is the outstanding amount that is due from the government. Many companies will be unable to continue, of course, operations considering the financial resources in that particular state. And you have names like United Breweries, United Spirits, as well as something like an Allied Blenders that could see an impact because of this. So we'll have to wait and watch out for as to how this pans out. Overall, current outstanding should overall be brought down to 45 days as per the contract, and government should also bring down excise duty in advance to 1% to ease working capital. But before we wrap, I mean, listen in to some important commentary at the sidelines of the Bharat Invit event 2025. There will be guardrails on investment in construction project. That's the word coming in from SEBI chairman Tuhin Kanta Pandey. Listen in to what else he had to say about construction projects.
यदि ऑन कंस्ट्रक्शन प्रोजेक्ट्स भी आपने लेने हैं, एक तो यह है कि आपके सारे रेडी प्रोजेक्ट्स हों और जिसमें कैश स्ट्रीम्स भी हों. एक होता है कि आप के पास काफ़ी सारे कैश स्ट्रीम वाले प्रोजेक्ट्स हैं और कुछ आपके पास ऑन कंस्ट्रक्शन भी हैं, तो गार्डरेल्स ये होगा कि कितना परसेंटेज आप वो ले सकते हैं, राइट? हाँ, ताकि वो, क्योंकि रिटर्न्स जो हैं कॉन्स्टेंटली इन्वेस्टर्स को मिलते रहें, इसका भी सेबी को ख्याल रखना है.
Well, that was a key conversation that was coming in from Tuhin Kanta Pandey. But Raja as well as Neerav, we leave it at that because of time constraints. Thanks so much for joining in, giving us perspective across a whole bunch of stocks and spaces. But viewers, that's all the time we have on this edition of Profit Buzzers. Stay tuned to NDTV Profit. Small Cap Buzzers comes up next.
I believed that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now. Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, कि यार इंडिया में अच्छी ब्रेड नहीं मिलती. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business.
Yes. So a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete or are you going to get acquired?
Startup like ours has its own DNA. For us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. And profit किधर है?
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
We are at one of the facilities of Merck in Bangalore. Well, we are here at R&D facility or research and development facility of Merck. Now there you go. Ooh. Merck actually develops those life-saving drugs which are used in cancer and MS. The business model of
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Anushi, the correction that started yesterday from the day's highest point is still continuing. Nifty is down around 75 odd points, largely led by Nifty Bank Index. Nifty Bank Index is down more than 300 points in trade today.
In fact, for Nifty 50, what we are seeing is currently it's hovering near the levels of 26,165, if that's the mark that we are seeing. Okay, we are seeing some bit of more correction in this last half an hour. So it's down about 0.3% or odd. So in fact, with Nifty Bank, what we are seeing is that Nifty Bank also under pressure. We're looking at cuts of somewhere around 0.6% as well. In terms of the point contribution table, if you just pull that up to see what's leading to this kind of track that we are seeing in the markets, HDFC Bank, ICICI Bank, all of these banking names right at the top is what's leading to that drag that we are seeing. While what's booking out on the other side is something like a Maruti, along with that even M&M and Bharti Airtel are seeing some bit of that green kind of a momentum is what we are looking at. But in terms of the sectoral heat map also, if you just pull that up to get a sense in terms of which sectors are doing well despite the past today. So Nifty Bank is down about 0.6%, but in terms of the overall market check, Nifty Auto is the only one with along with something like a FMCG which are still in green is what we are seeing. Flattish growth is what we are looking for FMCG currently, while auto is up around 0.3%, while defense is the sector which is beaten down the most today in trade, about cuts of around 1.7%, and this is in contrary to what happened in yesterday's trading session. Along with that, Nifty Metal and Realty are also under pressure. Realty has continued to remain under pressure for past few trading sessions is what we are seeing. In terms of the broader markets though, that's where the main focus is. Mid cap 150 cuts of around 0.8% is what we are seeing, while for small cap 250 what we are seeing currently is similar to how the mid cap 150 is doing. So that's with regards to how the overall broader markets are doing. In terms of BSE 500, to get some stock specific action as well on what's buzzing or what's not working out so well. something like a DCM Shriram is right at the top. We are looking at gains of over 7% as well in the trade. Along with that, what we are also seeing that Anupam Rasayan and Alembic Pharma are doing particularly well in today's market despite the overall picture which is there. But what's not working out is something like a GSW Energy. Along with that, AI Engineering is also under pressure. Jamna Auto also seeing cuts of over 3%. But let's take a more detailed check in terms of what's working out for small cap or what's not working out. So I'll start off with that first. Since small cap 250 is under pressure, you have your stocks like All Cargo Logistics, Chennai Petro and Gujarat Gujarat Exports under pressure. We are seeing cuts of over 4% for all of these counters. All Cargo Logistics again makes it to the list of these small cap buses that we're talking about. While on the other side, we already spoke about DCM Shriram, Anupam Rasayan and Alembic Pharma being in focus, seeing gains of over 4 to 7%. In terms of what's working out and what's buzzing is something like our Apex Frozen. Strong gains of around 15% is what we are looking at. Even Dave Accelerator is up around 12%. But Premier Poly again makes it to the list as well in terms of what's working out so well as well. But on the other side, Oriental Hotels, Mangalam Drugs are under pressure. We talked about Mangalam Drugs even in yesterday's trading session. Today also seeing cuts of over 5%. And in terms of where the higher volumes are concerned, Patel Retail, Kesoram and Goldium are the stocks which are also buzzing in terms of high volumes. We're looking at up moves of around 5% as well in terms of how these counters are doing. But with that, let's focus on today's management. Ugrow Capital is the stock in focus. If we just talk about the financials, the AUM was up around 20%. Net interest income was up around 60% and net profit reported a growth of around 22% in this quarter. But to discuss more about the results in the quarter gone by, Shachindra Nath, founder and managing director of Ugrow Capital, joins us. Hello and thank you so much, sir, for taking out the time and speaking to NDTV Profit. First of all, just want to get your sense in terms of how the quarter has gone by and what's your outlook for FY26.
This quarter was a quarter of consolidation for us, as you might have seen that we did an acquisition, announced an acquisition of Profectus Capital, which is another NBFC. Over the last 3 years, every year we have grown by 3,000 crore. This acquisition, when we completed our capital raise, almost 900 crore of equity capital was raised. And we announced an acquisition for 1,400 crore of Profectus. It automatically added around 3,000 crore asset to us. And that's why on an organic basis, we decided to, slow down our disbursement, predominantly to reduce our cost of borrowing. I think one of the things which we are very focused is, beside our AUM growth is how do we reduce our cost of borrowing? And cost of borrowing is a function of the demand of the money which we have. So we felt that if we reduce our, gross disbursements, then the cost of borrowing sequentially would come down and profitability and ROAs would improve. Otherwise, I think all metrics have done extremely well for us. We are looking forward for the next quarter. Our target continues to be the same with 12,000 crore of our organic book, 3,000 crore of acquisition book. We think that we'll add this year another 1,000 odd crore of total AUM. So we should end, anything between, 15,500 to 16,000 odd crores.
Just want to understand on the long-term picture for this acquisition which is there, how is that going to incrementally add to the growth for the business going forward?
So Profectus is another NBFC owned by Actis, which is roughly around 3,200 odd crore, largely in secured asset, and it has a vertical called school financing, which we don't have. So the school financing vertical would be an add-on product for us, and we, given our base of almost 325 plus location in India, we think that can be expanded further. Second, as you might see that of the Ugrow is very large with respect to co-lending and direct assignment. Almost 42% of our balance sheet is in form of an off-balance sheet asset. We believe that off-balance sheet asset brings certain amount of volatility into earnings, and that's why we wanted to reduce that. And Profectus being a completely an on-balance sheet asset would reduce it to 35%. On a long-term basis, we would like it to remain in that range, and that this asset would help in doing that. So Profectus acquisition improves our secured asset mix by at least 10%. It gives you school financing as a vertical. And our long-term aspiration to continue building a very large-scale MSME financing business get accelerated with that. The acquisition itself would improve our ROA by 0.7%, and it helps us in getting our targeted ROA of 4%. Our targeted ROA has multiple, levers. Of our emerging market branches, we have now added a total of 300 plus branches, and around 200 plus branches would break even, which are the new branches, over a period of next 8 to 10 quarters. 30 odd branches do 1 crore monthly disbursement. Around 88 branches do 50 lakh to 1 crore, and 188 branches are below 50 lakh rupees.
Right.
So the entire management focus is to improve the productivity.
The 535 crore fundraise that you did was largely to fund the acquisition of, I guess, Profectus Capital. But going forward, would you require another round of fundraise? Any plans on that front?
We actually raised total of 535 of preferential, and also we did a right issue of 380 odd crore. So the total capital was roughly around 875 odd crore. Obviously, acquisition is done from our organic cash flows which we have, but large portion of capital has gone into this acquisition itself. Our current capital adequacy standalone is 28%. Post acquisition and upon merger, we will still, with the growth, will be at around 21% of capital adequacy. We don't think so that for foreseeable future, next 12 to 16 months, we need further capital raise. We are conscious of the fact that Ugrow is currently, undervalued as a company vis-a-vis its peers, and we want to make sure that all future capital raises happen at a much higher base of, value. And we are focused on how the public markets, likes us, and for that we are focused on improving our return on asset and return on equity.
Right. And when it comes to cost of borrowing, as you were mentioning earlier, that your aim is to reduce this number further going forward. In the second quarter, you did manage to bring it down to, I guess, 10.37%, which is down around by 38 bips on a YY basis. How much further can it reduce? Any guidance on that front for FY26? By what would be the exit number of cost of borrowing, or for FY27? Any number you could share with us?
See, look, if for our size of company, we would be roughly around 3,000 crore of total net worth, 10,000 crore of on-balance sheet asset, and A plus rated. Our target is to improve our rating and bring down our cost of borrowing. Even within our rating band, we think so that our cost of borrowing is higher by at least 150 basis points. The reason for that this company has grown at a very fast pace. And when you grow at fast pace, obviously your cost of liabilities goes up. So, our target is to reduce, in 8 quarters, our cost of borrowing by at least 100 basis points. But it would be a function of the market and a function of our growth. But the constant endeavor would be to bring it down by, that much.
Okay, Mr. Nath, another metric that I want to talk about is disbursements. Now, there was some bit of an impact in terms of whether on the back of the underwriting norms which were there. But just want to get an outlook in terms of FY26. Do you see a pickup in this particular metric? What's the kind of trajectory that we should see?
No, as I was trying to explain, Ugrow consistently for now, starting post-COVID from 2022 onwards, every year we have added 3,000 crore of asset. This year at the beginning itself, when we did the acquisition, 3,000 crore got added to us. And we saw this as an opportunity to lower our organic growth and focus on more profitable growth from our emerging market branches. So we tightened credit. We also saw, portfolio quality in a small ticket business loan, small ticket LAP, to deteriorate. And that's why we tightened our, underwriting norms so that both benefit comes to us. The future credit costs remain in our targeted control range of 1.5 to 2%. And also lesser disbursement required lesser liability so that we can reduce our cost of borrowing. So as I said that we continue to, see the growth of 3,000 crore per year, and that's our target. This year target we completed by acquisition itself. So we'll add roughly around another 500 to 1,000 odd crore on the total base of combined asset of 15,000 odd crore. And next year we will be, do same 3,000 plus odd crores.
Right. Thank you for joining us, sir, and thank you for giving us the way forward for Ugrow Capital. Let's welcome in our fundamental guest for the show now, Prashant Tapse, Senior Vice President, Research Analyst, Mehta Equities. Prashant, you did hear the management of Ugrow Capital. They're quite strong on their growth plans, 25% AUM growth. They're also looking to reduce the cost of borrowings by around 100 basis points over the next 2 years. How are you looking at this count at the current valuations?
I think valuations are very much decent. I think the way they are growing every year, that gives some kind of comfort level for a fundamental analyst to have a very positive outlook. But again, my concern would be on the industry where there is a cutthroat competition to have a business model around the supply chain financing, unsecured business loans, machinery loans, and also that will bring a lot of competition, that will bring a lot of pressure on the EBITDA margins. But they are able to manage their EBITDA levels, their NIM levels, and also that gives a positive outlook. But yes, I need to see how they deliver going forward once the acquisition part comes into the real business. So post the consolidation, the numbers has to grow. There is some kind of missing in terms of the earning growth. If you see next 1 year, I think the earning growth is very decent to 10 to 12%. But post acquisition, there should be some kind of extraordinary earning growth that will give a lot of pressure on the valuation. So for me, a comfortable, neutral, long-term outlook positive.
Okay, so positive in terms of where the long-term picture is for Ugrow Capital. That's the view from Prashant Tapse. But with that, let's focus on another stock. And Dredging Corporation is a stock that we are talking about, down about 2% in trade today. Yesterday also it was under pressure. And this could be attributed to a muted quarter as well that the company had, but let's see what the outlook is going forward. And for the same, Jasmeet joins in with more details.
Well, right, thank you for that. Before we start off with the company, let me explain what the company does. Well, company provides dredging services to a lot of government and navy bodies. Well, dredging is basically removing sand from the bottom surfaces of the ocean. Now, talking about the key performance of the stock is nearly up 40% over last month, and now it's seeing kind of a selling pressure. Now, in terms of the Q2 results, though they were muted, the stock tanked 9%, but the operational efficiency is still maintained in the stock. Let's quickly understand the key revenue figures for the company. The revenue was up at 3.6%, though the margins remained flat, and EBITDA on the other hand improved to a positive 25 crore from a loss of 1.5 crore. And in terms of the losses, the company's net loss remained flat at 34 odd crores. If you look at the bigger view of the company for FY23, 24 and 25, so the revenue has been flattish 11 odd crores, but the EBITDA has been improving from minus 19 crore in FY23 to a positive 140 crore in FY25. On the other hand, even the profits, you see the losses of the company have been narrowing from a loss of 200 odd crores in FY23 to the loss of rupees 27 odd crores. While given the future outlook of the company, something to watch out for how the performance of the company changes and the stock reacts going forward.
Okay, well, thanks for that, Jasmeet. Prashant, your quick view on Dredging Corp?
I think that despite having the largest market share in terms of dredging as a business, the company is not able to make a good profitable history and even going forward. So that is a challenge for a company. Being on the valuation side very expensive at this point of time, I think the correction would continue towards the level of 700. So one should avoid this stock currently at this point of time and look out for a quarterly earnings should be better than what it has done in Q2.
Shifting focus to our next conversation now, that's with Ketan Shah, the chairman of Simplex Casting. Now, Simplex Casting remains in focus given the fact that the company has been meeting a lot of funds like Nuvama, Polycap Family Office, Systematics, Yes Securities. To understand the business more, let's speak to Ketan Shah. Sir, firstly to start off with, you have been meeting a lot of funds of late. So what has been your conversations with them? And also if you could explain to us what is this Simplex 2.0 all about, and what would be your future growth drivers, and what is your revenue target, say, for the next 2 to 3 years?
Fantastic. Simplex is a 5-decade-old company and having a lot of flexibility in manufacturing. And we are traditionally equipment builders for steel plants, power plants, railways, defense. And we are in this field for the last 50 years. And we have a very strong relationship with our customers like BHL, like SAIL, like L&T, and including the various shipyards. We have a very long relationship with them. And Simplex 2.0 is our vision to capitalize on our credibility, on our capacities and capabilities. And we are looking at a number for which we have done in the last 3 years, an incremental growth and a good incremental growth and touching about 500 crores in 2 to 3 years.
Mr. Shah, just also want to understand, in terms of the outlook that you've given, a lot of emphasis is now given to railways, defense, and you're projecting about a 40 to 50% of a CAGR going forward. Want to understand in which key areas and specifically you're focusing in these two particular sectors?
Railway has been a business which was almost 130, 140 odd crores for Simplex just about 4 years back. We want to get that business back again to about the same level of about 100, 120 crores. And we are also looking at defense to grow. We have been in this field of defense for last many years, I would say a few decades. But with the kind of shipbuilding activity that is projected, we are expecting the defense business also to grow multifold.
Also, you're looking to increase your margins to, I believe, around 20% in second quarter. This had come down a bit. So what are those factors that would drive your margins going forward, and what should be the sustainable margin rate that an investor should expect from the company?
See, I feel that, the kind of scenario that is playing out in our field, whether it's the steel sector or the power sector or the railway sector that we are targeting, a margin of 20% is something which we can easily target. And the kind of, the turnover that we are talking about is also possible because the kind of outlay that has been given to all these sectors is huge. And we are looking at a minuscule of it.
So just on that, Mr. Shah, I want to understand the order picture as well, since you're targeting about a 40 to 50% of a growth going forward. You're waiting for certain sort of approvals in terms of whether casted bogies are concerned. And this was by the end of this particular month that you're seeing. What would be the pickup in terms of orders as well as how that would contribute to revenue is the first question. Along with that, even the fabricated bogie development as well, that was also under manufacturing. What's happening on that front? What's the progress there? Need perspective on that as well.
Casted bogie, we will see something happening in the last quarter because our approvals are through, and we should be having some sales going forward in the last quarter of this year. Fabricated bogie developmental order has already been booked, and the real impact we'll see after about, I would say after about a year and a half.
Okay, so that's with regards to these two segments that we are particularly seeing. But also when it comes to the mix as well that you've mentioned, just in terms of that, with the defense and the railways mix increasing, how do margins differ across all of these segments that you have?
Railways and steel business is traditionally tender-based, but we have very specialized products. Even in the steel sector, we are market leaders in various fields in steel plant, like center cars, like pallet cars, like coke doors, like torpedo rattle cars. So we are in the niche segment in steel plants. And in railways also, what we are looking is, then the fabricated bogies and casted bogies, and to in the other fields in the niche, in a very niche segment that we are looking at, and we are already known for that. So that is how we are looking at margins to be higher than 20% or around 20%.
Thank you so much, Mr. Shah, for joining and sharing that perspective on Simplex castings. But Prashant, coming to you on this particular counter, it's a strong projection that the management is giving. They seem quite optimistic in terms of how the ordering activities, along with that, higher share in the railways and defense business is what they're seeing. Just want to get your perspective on Simplex castings.
Very decent company in terms of valuations and the business model. I think they should be very much focusing on the improvement in the EBITDA margins, which they have done it in the many quarters. And again, going forward, the way they are projecting their next year top line growth. So with that, there may be some kind of pressure on the EBITDA margins also. So that should be watched out for. But overall, I think on the valuation side, with the ratios which they are presenting with ROCs and ROIs, I think this company looks good for me at this point of time.
Given the volatility in the market, let's shift focus to Sharad to give us some details on how has been the setup when it comes to the FNO side.
Well, interestingly, Somit, the markets are in a choppy mode here, but interestingly, the PCR levels, that was very high, that has actually come down, and that actually augurs well, and that's why we saw a mild recovery in the market, but still a downtick coming in. It's just even, Stevens, when you look at the Sensex heat map, but of course the auto holding up. Overall, looking at the contracts, there is some reversals happening when it comes to call options writing, especially when you look at the most active contracts, and there is a downtick also. BankX also, the story remains the same, but the support which was coming in earlier, that has gone, especially ICICI and SDFC, both of the heavyweights in the contributor list in the BankX are showing negative returns. The other side, IndusInd Bank, that has been doing well, and that's an outlier, you could say, in today's trade. Overall, the contracts also we can see much more of the action is shifting slightly towards the put side. and the congestion levels are also in this segment. Let's look at the stocks which would be in focus. The key longs developing in this market, Maruti and GMR Airports. Strength, not so much. And looking at the short covering also, these two names come to the list. Samman Capital recently out of the FNO ban as well, and IndusInd Bank, which we had mentioned earlier. Long unwinding stocks include JSW Energy and Hitachi Energy. And for key new shorts coming in and a big build-up is Coforge from IT Space and Tube Investment. Nothing much has changed since the last 10:45 update, but the markets are choppy and the closing 90 minutes will also be very volatile.
Thank you, Sharath, for that update. The last 90 minutes of trade would be important to track today, is what is the key takeaway. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
I believed that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now. Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, hey, yaar, India mein achhi bread nahi milti. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business?
Yes. So a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete or are you going to get acquired?
Startup like ours has its own DNA. For us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. Profit किधर है?
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Thank you very much for starting golf. We want to thank you. That's very sweet of you. Thank you. I think that's very, very important.
We are at one of the facilities of Merck in Bangalore. Well, we are here at R&D facility or research and development facility of Merck. Now there you go. Ooh. Merck actually develops those life-saving drugs which are used in cancer and MS. The business model of Merck is stable. A drug faces competition, the life science segment or the semiconductor segment chips in. So basically what they're doing is they're curing you, they're enabling science and they're lightening up the world all at once.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct.
Welcome, you're watching India Market Close here at NDTV Profit. I am Mahima Vachrajani and with me is Sharad Dubey. Let's take a quick look as to how the markets are doing. Well, as Sharad was mentioning, it's a choppy day of trade. Everybody is trying to see whether we'll reach that 26,277 levels, which is the life high, and maybe cross that as well. We are around 140 points away from that level. So let's see whether tides turn within the next 1.5 hour or not. But the Bank Nifty today seeing some profit booking, but Bank Nifty has been structural when it comes to keeping the markets in check. Today seeing some profit booking down by about 0.4%. Let's try to pull up the Nifty 50 heat map and see as to how things are faring there. Maruti leading that chart up 2%, followed by something like an Interglobe Aviation up 1.2%. M&M, Max Health and Infosys all up by about 1% each, but something that's not doing well includes your Tata Steel, which is down 2%. HCL Tech down 2% as well. You have Bajaj Finserv, Hindalco, JSW Steel, BEL, Bajaj Finserv, as well as Eternal and ICICI Bank, all down by about 1% each. So there's no trend per se in terms of where the sectors stand, but individual stocks in focus on that Nifty 50. Let's try to pull up the sectoral heat map, in fact, to see as to how sectors are faring. Nifty Auto topping that chart, seeing just gains of about 0.4%, followed by something like the Nifty FMCG, which is in the green today, up by about 0.2%. Otherwise, largely all sectors in the red. Nifty Defense seeing significant amount of profit booking, down by about 1.8%, followed by Nifty Metals, Nifty Realty, as well as something like the Nifty Energy, down by about 0.8% as well. Let's try to pull up the advanced decline ratio, because that will give us a flavor as to how broader markets are doing. Well, that gap has been widening throughout the day. Slightly it did narrow at this hour, but it's still widening by the hour. You have around 1800 odd declines versus that of 600 odd advances. So 3:1 ratio in the favors of the bears today. Let's try to pull up the mid cap 150 and the small cap 250. The mid cap 150 down by about 0.8%, and that's that was reflected in the advanced decline ratio that we saw. Not at its day's low point, but still not doing very well, off from its day's high point for sure. The small cap 250 also down by about 0.8% in tandem with where the mid cap 150 is doing. Let's try to pull up the BSE 500, not very stock specific or news specific market, but you have counters like TCM Shriram, which is up 6.7%, Anupam Rasayan, Alembic Pharma, Supreme Petrochem, Samman Capital, all up by about 2 to 6% each. But something that's not doing well, Gujarat Ambuja Exports. This counter has been seeing quite pressure in the past few days of trade. You have AIA Engineering, which is down 3% as well. Hitachi Energy, JSW Energy, Jamna Auto, as well as Tube Investment, all down by about 3% each. So that's with regards to where the markets stand. But Sharad, tight range of markets, what do you think the strategy should be right now?
Well, the strategy should be, if you're a medium-term investor or even a trader on a positional basis, buy the dip would be the strategy, because the technical levels of both Nifty and Nifty Bank are still sound. But of course, on an intraday basis, it's very challenging, and there's a short range, 26,050, 26,150. That is where the oscillation is happening. Call option congestion is coming at 26,100 levels. And interestingly, Nifty Bank profit booking is also coming in, because both HDFC and ICICI Bank, the major constituents, are in the red. Buy on dip strategy is something which is still holding. And I must say the domestic cues are much, much stronger than the global cues. But the Nifty put call ratio, that was earlier at 1.5 in yesterday's closing, that has cooled off to 1.2. And that is why you can see a kind of bearish sentiment actually coming down. But India VIX, that has jumped 10% in the day's trade. It's near that 14 odd levels, you could say around 13.5 currently. But the important thing is, once this goes past the 15 mark, option strategies start coming in. And that would be good, especially on the bullish front. Broader indices setup still remains weak. Yesterday also we saw the small cap index ending in the red, and the US-India trade deal, that still remains a key trigger. If that comes in over the weekend, then we might see a significant gap up opening on Monday itself, but no major announcement has come from the government yet, but it's in the final stages. That's what the buzz is in the street. And overall, the European markets are still opening mixed, and we saw there is a polarization happening when it comes to the events globally, be it AI, crypto, or even the Japanese yen carry trade coming in. But coming back to the Indian markets, where the action is, joining us is Ruchit Jain. He's the Vice President of Equity Technical Research and Wealth Management at Motilal Oswal Financial Services, and Avinash Goreshkar. He's the founder and head of research at Avinash Mentor Research Services. A very good afternoon to both of you gentlemen. Ruchit, a kind of a pause. We have been all waiting for that all-time high levels for Nifty. Yesterday also we are waiting. Today also we are waiting. Will we celebrate today in the last 90 minutes, or we need to wait? What are the charts suggesting? What are the technical levels suggesting?
Yeah, hi, very good afternoon, Sharad. Very good afternoon to everyone. Well, it seems a bit difficult for today itself, but definitely we should see that all-time high levels very soon. So primarily the broader trend for the markets are not negative, and we are witnessing a good buying interest across the large cap space. If you look at last few trading sessions, the large caps have supported the market, and the uptrend still remains intact as far as Nifty is concerned. So overall trend for the market is intact. The only divergence that has been seen of late recently is that the performance of the buying interest is only in the large cap names and not on the mid cap and the small cap space. But just for example, if you see the Nifty returns vis-a-vis the small cap returns in this month, then Nifty is up by about around 2%. Bank Nifty was up by around 2.5%, whereas small cap index is negative 2%. So this clearly indicates a divergence. Even if you look at the month of from the start of October till date, then in last 1.5 months, Nifty is up by around 6%. Bank Nifty is up by around 7 or 8%. around 8%, whereas small cap index is up only by 1.5-2%. So this clearly indicates that since the month of October itself, the small caps have started underperforming and the buying momentum is there only in the large cap names. So we are positive on the markets, but on the index front and the large cap stocks, we have also have been advising our clients on the basis of this since last 15 days that you should look to make a shift from mid cap, small cap to large cap names where the relative outperformance to continue. So because of positive moves in the large cap names, I think index would hit that all-time high soon. But as I said, the momentum should be restricted only towards large cap for now.
Right, soon to hit that life high, but we'll have to wait and watch out for as to how soon that happens. But Ruchit, what about your picks for the day? Are you also preferring large caps like you mentioned and you're advising your clients as well?
Yes, definitely there's the relatively safe area in such volatile times, I believe. And a couple of names from the large cap stocks which we like technically over here. One is Lupin. The stock has went through a decent consolidation phase over last 6 months, and as an entire consolidation, prices have formed a good support base around the recent swing lows. So in terms of that risk reward issue, if you look at the pharma is one of the space which has not participated in the recent uptrend. Mainly last 5-6 months, because of the uncertainty over US tariffs, we have not seen any significant buying interest coming in the pharma space. So because of that entire time-wise correction, the risk-reward ratio has become favorable for some of the large-cap pharma names. And Lupin is one of the stock where the risk-reward ratio seems good to take some contra longs at current levels. So one can go long on Lupin with stop loss below 2,000 for trading targets around 2,100. And Mahindra within the large-cap name, the large-cap auto names, which has already been an outperformer within the auto space, is still showing bullish signs. The one consistency has been seen, price up moves followed by consolidations. After consolidation, the stock again resumed its uptrend. And I think that has been going on since last few months. So similar structure is there now as well. The 20 and the 50 DMA supports are intact. So this trend should continue in M&M. Still at current levels, one can go long from a short-term perspective with stop loss below 3,660 for potential targets around 3,940.
Okay. All right. So that's the view with regards to where Ruchit's picks are concerned. But Avinash, the defense index is down by about 1.8% today. Any particular counter that you would be looking at right now to make an entry in terms of buying on the dips, as everybody calls it? Any particular counter that you're looking at to make an entry?
Yeah, I think, defense business is definitely a long-term kind of structural kind of story. And I think, there are few days when you see, the defense index down, some profit booking coming in. But I think, companies like HAL, Bharat Electronics, Bharat Dynamics, I think investors typically should use these kind of opportunities to accumulate and build positions here. Because, the revenue visibility, the order books of most of these companies are running pretty high. At least for the next 12 to 18 months, most of these companies have got orders which are going to sustain for them. And most importantly, the coming budget this time is also going to focus again on defense. So you're going to see a lot of government spending coming on defense exports being boosted up. So all said and done, I think Bharat Electronics and HL look pretty promising. I think despite the fact that, today could be a little bad day, but I think if you're looking as an investor, and looking at the time cycle of next 12 to 15 months, I think one could definitely do a little bit of nimbling now, considering the fact that earnings visibility continues to be pretty strong. And these companies are definitely going to be in flavor, ahead of the budget, which is going to happen in the month of February next year.
That's pretty interesting on that. Defense space might be having a bad day, but one stock is not having a bad day, and that's our stock of the day. That's Groww. Q2 numbers came in, and of course, there was no street estimates as such, but the operational numbers were pretty good, especially if you compare them on a sequential basis. Now, what happens is it reclaims its 1 lakh crore market capitalization, and look at the stock. It was up 5% but there has been a kind of a profit booking coming in, but still in the green in today's choppy markets as well. Overall, operational margins were at the, you could say, optically on the higher side of their average numbers coming in, and the numbers you can see on the screens. And today at 4 o'clock, there will be an important con call also. Let's look at overall the operational numbers, how they have actually panned out. The transacting users, that has gone up 5%. Active users also, there has been a good growth coming in. Revenue broking numbers, let's get in the screen. That's coming in at almost 20 rupees now. It's a good jump on a year-on-year basis. And margin trading facility, the new business for Groww, that has also seen a good uptick. Now let's see the market share. That is the most important data to look at, and we are comparing it on a year-on-year basis. Active clients and SIP inflows, not so much change, but look at the cash and the derivatives average daily turnover. That was earlier 17.7. This has gone up to 26%. Derivatives also, this is a jump of almost 6%. So yes, is it justifying its valuation? That we don't know, but the growth is coming really strong here. And for the first time, they have given their letter to the shareholders as well. And they have stated that they have not even covered 1% of the total journey. And they will be laying out a roadmap for the growth going ahead. And lastly, the focus would be solely on the customer growth front. So lot of grow and growth words we are using, but this time they have justified it in the earnings, still in the green. So overall, we can see that the Groww has given a good set of earnings. The street will be looking at the con call. But Avinash, since it's a newly listed IPO company, could you like to just give more views on Groww? This is just the second test they have passed. The IPO was there. There was a good flying colors they passed with. There was a correction. Again, the earnings came in. Stock jumped 6% on an intraday basis. And now, 4 p.m. con call and a stock lock-in is also coming on December 10. How are you looking at Groww right now? Have they proved it?
But I think, Sharad, the quarter 2 numbers which have come out have definitely pleasantly surprised the markets. I think what was interesting is the market share gain across, the derivative segment. And most importantly, the EBITDA margins have steadily improved. So our sense is that, already they're number one in the online business. Their focus is basically capturing more market share. And as the management has rightly mentioned, there's a lot of headroom for growth. The runway clearly is very large. And I think these kind of companies, it's very difficult to give you a view on a quarter-on-quarter basis. But I think if you look at the next 12 to 15 months, I think capital markets, the way they are performing and the kind of response for IPOs, secondary market volumes, both on the cash and the derivative side, I think Groww is definitely getting recognized as a very dependable, very trustworthy kind of platform. So I think as long as they deliver the numbers, I think, Sharad, I think there could be a significant amount of re-rating even from these levels. An ideal price would be around 145 to 150. But I think people who can stay invested in the stock for a slightly longer term period, say for the next 12 to 15 months, could get a slightly better edge, considering the fact that, there was some report that there was some short selling on the counter. So that also impacted the price. And plus the stock had run up also very fast. So I think things are now consolidating. And I think it's a good time to accumulate, provided you have a time frame of at least 12 to 15 months. I'm pretty hopeful that FY26 and 27 should be very strong years for the company.
And Avinash, this is despite of the valuations that it is sitting on, considering the run-up that you talked about. Valuations, still became more expensive post the run-up. Do you still think that somebody who wants to make an entry right now can make an entry into Groww?
Yeah, I think normally when you talk about growth, I think, clearly, I think this is a business which actually generates a lot of cash. It does not burn cash. We have got companies like Zomato and, Swiggy, which are burning cash, but still, valuations are record high. So I think my sense is that, if the investor starts looking at valuations and defers his buying, he might miss a big opportunity over the next, say, 12 to 18 months. So my sense is that there are very few companies who could now become another Groww. And to that extent, they have a significant edge in incremental customer addition. I think that's what the market is looking at. Going forward in the next 1 or 2 quarters, if the incremental customer additions are aggressive, that itself is going to give a signal that Groww is going to outperform all its competitors. So, maybe you could do a small SIP now at the current level, maybe a small dip at a later stage, you could acquire more. But it's very difficult to actually pinpoint a company purely on the valuation part. As long as growth numbers, I believe, would be significantly high in the next, say, 12, 18 months.
Okay, so that's what we are expecting for Groww. But Novelis, that's also in focus. Let's just pull up the Nifty Metal Index first. That has seen a good selling happening. Let's just show the contributors also. You see, most of the metal stocks are cracking in trade after 2 days of gain. So very volatile counter coming in, and Hindalco, that's also in the red. Focusing on Novelis, it's a US arm. Around 60% of EBITDA contribution comes from there. They have reported another fire coming in. This is for the Oswego facility. Overall, the company is the key supplier of aluminium sheets for Ford Motor. And yesterday itself, that stock itself went 4% down as well. Interestingly, the Q3 numbers, it might take a significant hit on the EBITDA. It's expected that this would be roughly around 100 to 150 million of impacts coming in on the FY26 numbers. And looking at the cash flow impact, that's also roughly at 550 to 600 odd $1 million as well. But of course, we will be looking at the overall impact analysis and the progress of the timelines. When will these plants opening up? The New York is expected to open up in December 2025. Technically, what are you expecting, Ruchit, when it comes to the stocks itself, Hindalco? Is this looking like a buy on dip opportunity, or we are seeing something more kind of a selling stress coming in this counter?
I believe that from a short-term perspective, metal space will go through some consolidation phase. Nifty Metal Index made a high of around 10,800 towards the end of October. And since then, we have seen some consolidation or a time-wise correction which is there. Even Hindalco overall trend is not negative, but from a near-term perspective, last few trading sessions on the pullback moves, we have not seen any kind of rising volume activity happening. So the metal index itself has shown some kind of signs of consolidation. So relatively post this move that we have seen in the month of August, September, October, I think this could be some time-wise correction within a broader uptrend.
With regards to where charts are concerned for Hindalco, down 2% as we speak. Now, moving on and shifting focus to M&M and group companies, because they are in sharp focus today after upbeat guidance at 2025 Investor Day. Brokerages remain largely bullish, with Morgan Stanley and Jefferies hiking the target price for Tech Mahindra. However, gets a cautious view with regards to where growth is seen recovering only gradually. Let's get Puneet to get us more details. Puneet?
Well, thank you for that. It's definitely the most optimist brokerage view is coming in on something like a Mahindra and Mahindra, while it starts to wane on the other group companies. But M&M Financial as well as Tech Mahindra are the other ones that we're putting our focus on. Morgan Stanley maintaining an overweight rating on Mahindra and Mahindra, the auto giant, with a target price of roughly about 4,407 rupees per share. They mentioned that the investor day maintained its focus on accelerating growth. Ambitious organic growth targets between 15 and 40% over FY 26 to 30 is what they maintained. SUV growth, 8x revenue growth from roughly FY 20 to FY 30 is what the company has continued to maintain. We've already seen some signs of that over the last few years, while it also implies a sharp revenue growth which will be driven by a profit growth of almost 30 times between this particular time frame. When you look at Jefferies as well, they've actually gone ahead, hiked the target price for Mahindra and Mahindra to 4,500 rupees per share from 4,300 earlier, making two key points. They've raised the tractor guidance from 7 to 9%. That's a key positive, and also optimistic on the turnaround of the light commercial vehicle segment, and that's a new one because they acquired SML Isuzu as well as their own pickups under the Bolero brand. There are multiple positive triggers according to them. Finally, on M&M Financials, also a couple of brokerage notes that come out. Morgan Stanley has maintained an equal weight, a target price of 300 rupees per share. They mentioned that the medium-term loan growth target as well as credit card targets have remained largely stable of what they earlier indicated. But the FY 26 to 28 numbers estimates are significantly below what they had actually aspired. So there is some kind of negative connotation coming in on something like an M&M Financial. Jefferies has also mentioned that while they're hiking the target price to 325, the targets, they see a better sequential trend in H2, and hence the target price upgraded on Tech Mahindra. Actually, someone like Jefferies maintained the underperform target price of 1,270 and mentioned that the focus area over the next 18 months is to drive growth and margins, but the guidance at 15%, which was reiterated for FY 27, according to them, is likely to be gradual, and hence the revenue target seems to be a tad bit optimistic according to Jefferies. So these are a clutch of brokerage notes with views across the group companies, but the most optimistic, as I mentioned, on the parent's auto company.
Okay, Puneet, thank you so much for getting us those details. Avinash, I'll quickly come to you on M&M first, because Ruchit seems to be bullish with regards to where charts are concerned, but do you think fundamentals are supporting that as well? And would this be your pick in the auto space?
Yeah, I think Mahindra and Mahindra definitely deserves a kind of accumulate rating, because we have been also positive on Mahindra for a long time. I think the best part is that despite challenging headwinds, the company has done remarkably well, both on the automotive side, the tractor side, even their electric portfolio of passenger cars has been doing pretty well. And most of the group companies have also contributed meaningfully. So, on a consolidated basis, we believe that the earnings traction for 26 and 27 should at least be 18 to 20%. 15% on the net level. And most importantly, Mahindra is a group where I think they've always judiciously employed capital. Their capital allocation policy has also been very good. So I think net, even on these levels, if one were to take a slightly medium-term view over the next, say, 12, 18 months, I think the company seems to be well positioned, in terms of the product launches, in terms of the market opportunity. And with the GST cuts announced, I think you could see a very strong October to December quarter and hopefully a much better kind of financial year for the forthcoming financial year also.
Right. Kotak Mahindra Bank is one counter that we really need to focus on because in this rally that we have seen when it comes to the Nifty Bank Index, that stock has not contributed much. So it has underperformed the Nifty Bank Index. And today is an important board meet where the board is going to consider stocks, but obviously it's just a corporate action and it's not going to change anything financially. But given the strong underperformance compared to the Nifty Bank Index, how are you looking at this counter? Avinash?
So I think, Swamit, Kotak Mahindra Finance has been a long underperformer. I think it's very clear that the markets were not happy with its numbers. But if you ask me, frankly, the split is going to create a little bit of excitement in the short term. My sense is that, looking at the kind of busy season, October to March, hopefully credit growth is going to increase. The GST cuts are going to drive consumption. And to that extent, I think, the markets are expecting a much better number for Kotak in the second half. The second quarter number was more or less an average kind of performance. But if you look at the kind of re-rating potential, it may take a little bit of time, but I think the stock is currently in consolidation stage. My sense is any re-rating trigger will require a bigger boost in the profitability. So we have been telling our clients to actually hold on to Kotak. There's no need to hurry to buy it. I mean, let the split happen. At that point of time, we may think of considering of reviewing the stock, but definitely no short-term trigger. Longer-term prospects continue to be quite good.
Right. And Ruchit, how is Kotak Mahindra Bank looking on charts?
I think from a near-term perspective, it's more into a consolidation phase. We are not seeing that participation. When the banking index was going higher, the stock relatively stayed within a range. But the good thing is that this entire consolidation is happening above its important 200 DMA support. So the longer-term trend is not negative, but it's just short-term sideways trend which is going on. So if any existing long positions are there from a bit mid to long-term perspective, then it makes sense to continue to hold on to those long positions.
Okay. All right. So that's the view with regards to where Kotak Mahindra Bank is concerned. But three stocks that, the research team has tried to put spotlight on. In fact, Varsha has done all the work behind this. Teamlease, 5-Star Business and Suntec Realty. Now, analysts are calling these names sure shot winners, but the market has voted the other way around. I mean, each stock is sitting on double-digit losses despite strong backing. Varsha joins us with an analysis as to what's happening with these counters. Varsha?
All the three stocks, if you see, analysts are super bullish on all these stocks, but these stocks have given negative returns to investors, starting with Teamlease. If you see the stock, all the 12 analysts have a buy rating, but the stock is down almost 44% in year-to-date returns. If I were to talk about for 5-Star Business, if you see, all 11 analysts have given a buy rating, but stock is down almost 25%. And for Suntec, 14 analysts have given a buy rating and the stock is down 15%. So let's, deep dive why this underperformance and what's the outlook for three of the business. Starting with Teamlease, if you see lean hiring trends from sectors like IT and BFSI is one of the reasons why the financials were not good for the company, and hence the stock was down almost 14% or 41%. Now let's see what's the outlook when it comes to this company. So they've increased in hiring in GCC centers, which is a positive point for the company, and they're expecting strong revival when it comes to H2 FY26, and there are early signs of demand recovery when it comes to general staffing as well, which is a positive for the company, and there's a stronger contribution from higher margin specialized staffing business, which will help overall EBITDA margin for the company. Next on the list, if you have a 5-Star Business Finance, if you see the stock is down 25% year to date. Now, one of the reasons is soft Q2 quarter, and also the growth was subdued because of with disbursal declining. But talking about the outlook, let's see what's the outlook going ahead. So the visibility is improving on AUM growth and asset quality, and also if you see that there's been gradual improvement expected when it comes to Q3, and the strong recovery is expected in Q4. Q4. Well, next on the list is Suntech Realty. If you see, the stock is down 15%. Why? Because one of the concern that investor has is moderation in MMR region market, which remains a concern for overall investors. But let's see what's the outlook. One is they've maintained their pre-sales guidance of around 30 to 35% year on year for FY26, and they've also they've got a healthy launch pipeline. So overall, based on the outlook for H2, all these analysts are super bullish when it comes to all these three companies, and hence all of them have given a buy rating for all the three stocks.
All right, Varsha, thank you so much for getting us those details. Ruchit, any of these counters that you think can see a turnaround from here on and looking attractive on the charts right now?
And none of these three, frankly, are looking much bullish on charts for now. I think what we even discussed at the start, that the mid and the small cap space itself is showing some signs of continued underperformance, at least a relative underperformance compared to large caps. So I think until we see any kind of trend reversals coming in the broader markets or the market breadth improving, we can see that the overall market breadth also remains on the negative side. So I think as of now, we would tend to wait on sidelines as far as small caps or mid caps are concerned.
Nothing attractive coming from these three stocks which we have picked up. Thank you very much, Ruchit, for giving your contribution here. As we slip into a quick break, let's hear Alchemy Capital's Hiren Ved and Carnelian Assets Vikas Khemani giving their cautious view post the sharp listing rallies which we saw in the recent IPOs.
There are obviously some very obvious areas where we have to be very careful. I think this whole trend of IPOs coming, listing, and then immediately we are seeing a massive, run up. Clearly, it's very tempting for anybody, but I think we have to be very clear. All of this will normalize over a period of time, as it usually does. Market takes care of everything, right? But other than that, I think today, just at a very broad macro level, I don't see any very obvious risk. Obviously, as I said, the real risk is the one that I and you do not discuss about. If in your PowerPoint wo likhna padta hai ki risk hai, if those are the risks that everybody knows and market knows how to price those risks, right? So I think I don't think India's macro has been as good as it is today, right? With balance sheets so under leveraged, and in my view, I think there are a couple of sectors which have been generally very sluggish because of the whole trade and tariff and whatever. Incrementally, I think that there are some good quality companies there which, can really deliver returns. But otherwise, I am very, very bullish on the markets going forward from here. I think earnings picture is looking good. Monetary fiscal policy seems to be in place. We just have to steer clear of narratives, and I think there is a little bit of this bubble in the IPO markets which one has to be a little careful about.
Today, most of the IPOs are coming fully priced, glamorized stories. Bankers, of course, kind of create a huge story around it. So most of the time, our general approach to IPOs is no. Okay. Unless we think something is very interesting company coming at a right price, right? That's the only reason, because I'm not saying IPO per se are bad, right? IPOs, of course, gives you access to the very, very interesting companies. Only way to get new sectors, new companies coming into the market is only IPOs, because every time economic transitions, new sectors come about. There were hardly any healthcare 20 years ago. Today there are many healthcare opportunities. So that's very, very important. The only thing is that, and in fact, we like to invest into companies which are post 2-3 years of IPO. By then, all the sheen has gone, excitement has gone down. If you go back and check companies which IPO'd 5 years earlier, in the last 21 cycle, you will find many of them, or 80% of them are 40 to 50% down. So, companies are good, but you might not make money. And hence, look at Paytm IPO, it's like, after this rise also is down. We bought Paytm at 500 rupees, not at 1800 rupees, right? So you got to track those companies. Sure. They are good business models, but they may not be the right investment. So IPOs are generally, we feel, there's a lot of euphoria around it. Unless we see everything, but do very little.
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
I believed that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now. Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, कि यार इंडिया में अच्छी bread नहीं मिलती. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business.
Yes. So, a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete or are you going to get acquired?
Startup like ours has its own DNA. For us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. Profit किधर है?
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When
Welcome back. You're watching India Market Close on NDTV Profit. Well, a clutch of stocks would remain in focus on the back of the MSCI flows that are expected to happen on Monday in the last half an hour of trade. Now, the names of stocks that will get added or removed from the MSCI Standard Index were already out at least a month back. But what is important for November 24th, that is Monday, is the flows that will be coming in. And also, India's weightage on the emerging market standard index will increase to around 15.6% post this adjustment. So 4 stocks are getting included into the MSCI Standard Index. First, it's Fortis Healthcare. Second, Paytm, GE Vernova T&D, and Siemens Energy. Fortis is expected to see the highest amount of inflow, anywhere between 436 to 470 million US dollars, which is nearly 19 times its 20-day average. For Paytm, the inflows are expected to be anywhere between 420 to 460 million US dollars. For GE Vernova, 350 to 380 million US dollars is something what is expected. And for Siemens Energy, the inflows could be anywhere between 250 to 270 million US dollars. And these stocks could see high volume action given the fact that the amount of inflows is nearly 10 to 19 times their 20-day average. On the exclusion side, it's Tata Elxsi and Container Corp. Both these counters move out of the MSCI index. Tata Elxsi could see an outflow of anywhere between 160 to 175 million US dollars and Container Corp anywhere between 140 to 160, and this is nearly 12 to 23 times its 20-day average volumes. So high volume action is something that is expected in all these counters on Monday, and this MSCI inflow and outflow will happen most likely in the last half an hour of trade. Kunal, coming to you, these 6 names, Fortis Healthcare, Paytm, GE Vernova, Siemens Energy, Tata Elxsi, Container Corp, anything that is looking interesting on the charts?
IT is something which is looking interesting at the current levels. I'll be watching out for Tata Elxsi. We have still not got a confirmation on the technical charts, but I think 5,500 is what I'm watching out at. If that is taken out, then one can expect a good rally towards the mark of 5,800. So above 5,500, Tata Elxsi would be a buy.
Right. And what would be your view when it comes to the Nifty and the Nifty Bank Index? Nifty Index today has been quite range bound, around 26,050 to 26,180 is the range between which it has changed directions a lot of time. So what is your view here now?
So I think while looking at, we are just 30 points shy from the all-time high. I just remember that Ultratech ad, bhaiya ye diwar tootti kyun nahi? So that is the case out. I think the big boys will come in. Overall, the trend is still positive for the markets. You have the intraday volatility which is kicking in because of the global data. But I think the trend is positive till the time Nifty is sustaining about 25,900. I don't see any problem for the Nifty indices. In fact, today is the weekly close for Nifty index. So what we'll be looking at, the weekly close is also quite positive. So probably next week is where we'll be making the all-time high. Our positional targets for the Nifty index is 26,400, 500 is where we are expecting the indices to go. So again, dips to be utilized as a buying opportunity. 25,900, I'm not expecting that to breach on the downside. Similarly, for the Bank Nifty as well, I think here we have seen some consolidation. My sense is that Bank Nifty will eventually go toward that 60,000 mark. But Bank Nifty, which was the leader, will now take a backseat and Nifty will come ahead and again carry this rally on the upside. So constructively bullish aggressively on the Nifty indices. Bank Nifty probably could go toward that 60,000 mark. It remains as a buy on dips. So dips is a buying opportunity for Bank Nifty. And HDFC Bank, which on the technical charts looks very attractive, looks to surpass its all-time high level. And that is what it will help the Bank Nifty index to go towards the 60,000 mark.
Right. Other than HDFC Bank, what would be your top picks?
Here first, my pick would be from the travel space, and that is Indigo. The fall in crude oil prices is what we are seeing is the direct beneficiary of it is Indigo. The setup looks very attractive. We have seen volume-based buying in the last 2 trading sessions, and Indigo looks to break out on the upside. So here it's a buy for me with a stop loss of 5750, looking for targets of 6,000 to 6,100 on the upside. Second, where I'm looking at again the IT space as well as the financial space is looking good. From there, my top pick over here will be Shriram Finance. Again, a strong weekly close is what we are getting for the stock. Already the trend is on the upside, so this is a buy for me with a stop loss of 810, looking for targets of 850 to 860 on the upside.
Okay, all right. So Interglobe Aviation and Shriram Finance are on Kunal's list today. But it's time to look at some movers and shakers of the day. Let's bring in Jasmeet to tell us what are the positive buzzers on his list. Jasmeet?
All right, thank you for that. Starting off with the movers first, the positive buzzers on my list. First one is Karnataka Bank. While the stock is up in trade today, the stock still sees pressure roughly of 12% over Y20 basis. Now, if you look at the buzzing volume, it is spiked at 10 times on 20-day average. Well, next one on my list is Sharda Cropchem. Now, for this particular company, we see the buying interest coming in as the volumes are spiked up to 7 times on a 20-day average. Now, for this particular stock, we also see the FII interest coming up, given that FIIs have increased their stakes over last year from 2.5% to 5.2%. While this particular rally in the stock comes after a sharp correction of 14% seen in the past month. Well, thirdly, I have DCM Finance. While we see strong up moves coming in, where the stock is up 19% over last 6 months for this particular company. And the stock had also rallied after the Q2, given a strong set of numbers coming up, and the profit has also doubled for the Q2 results. Now, the fourth I have Anupam Rayase, well, for this particular company, we said that the Y2D rally of the stock stands at 72%. The currently trading volume at 16 times the 20-day average. Now, if you look at the DIIs, they have reduced the stake in this particular stock. They have roughly halved it from 2.4 to 1.37 in the month of September. Lastly, it's Alembic Pharmaceuticals company. It's a pharma company. For this particular company, the volumes are at 40 times the 20-day average trading at. If you look at the overall performance, the company recently received the US FDA approval for one of their drugs for hydrochloride tablets. Now, if you look at the stock performance on Y2D basis, roughly down at 9%. So these are the positive buzzers on the back of volumes in trade today.
Okay, Jasmeet, what are the stocks that are not having a good day and what are the reasons behind them?
Right, starting off with the shakers and the stocks which are stanked in the trade today. Starting off with Time Technoplast, the stock is down 21% Y2D basis. Given technology stock and overall Nifty IT is also suffering, we see the stock is down by 21%. Even the volumes are 13% lower the 20-day average. If you look at the FIDI interest, it has spiked for this particular company as the both have increased their stakes by 30 and by 26% in this particular month. So we positive up move coming in from DIs and FIs, but the stock is still down. Next I have Gujarat Ambuja Exports. While we say stock is tanked on the back of the volumes are 15% lower the 20-day average. Now while the downtick comes after a rally of 9% in last 5 days, that's why we are seeing a downtick in the stock today. It's a cool-off rally basically. While the FIs have halved their stake in this particular company and it's down to 2% as of November. While thirdly, it's Banco products. While currently we see selling pressure on the stock as the stock is doing really well on Y2D basis, nearly a 42%, but today in trade it's down. If you look at the volume, they're 27% below the 20-day average. If you look at the fourth stock on my radar is GE Vernova T&D India. Well, for this particular stock, selling pressure is coming again on the back of volume itself. FIs have majorly up-moved the holding in this particular company from 2.4% in the back in month of June. They have increased to 16% in the month of September. So we positive up moves and pumping up the money coming in from the FIS. It can also be seen the stock performance on Y2D basis as the stock is trading up. While lastly, the stock is roughly up at 58% on 6-month basis. If you look at the last stock on my radar, it's TD Power Systems. Now the selling pressure is coming as the volumes are trading at 67% below the 20-day average for this particular stock. And the stock is up by 62% on Y2D basis. If you look at the overall phenomenon of the stock recently got court approval for pushed away of the union-led disruptions.
Okay, thank you so much for that, Jasmeet. Kunal, I'll quickly come to you on two of these names. Anupam Rasayan, which is year to date, gone up by 72%, and the other one, which is Alembic Pharmaceuticals, that's trading 40 times its 30-day average today. Any of these counters looking attractive to you, or from the list that Jasmeet had, any of these looking attractive on the charts right now?
See, nothing looking attractive right now because already the stock, specifically Anupam Rasayan, has in the last 3 to 4 days, 1100 stock has almost become 1250 on the upside. So clearly not a buy at the current levels. We need to see whether this rally gets sustained at the higher levels. The resistance of 1170, 1180 has been taken out. We might get a pullback towards those levels and probably then one can look to go on the long side. So not at the current levels.
Okay, all right. So that's the view with regards to where Anupam Rasayan is concerned. Kunal, earlier I was talking to Avinash about the defense index. Let's try to pull that up and see as to how constituents have fared. It's down 1.8% in trade. Defense, if we can. Try to pull up the constituents on the India Nifty defense. But anything that you think right now after seeing this kind of profit booking looking attractive on the charts right now has found the bottom and can make entry right now?
See, I think not for the bottom, but I think the momentum is very strong over here on the shipbuilding companies. And I think here one can look to accumulate it on the downside. And my preferred pick over here would be GRSE. So GRSE on the downside, the support for the stock is around the mark of 2750. 2760 zone. So I think that dip towards that mark would be a good opportunity to go on the long side. One can expect this to go towards the level of 3100, 3200 on the upside. So GRSE looks attractive as a buy. The lower end support for the stock is placed at 2700 on the downside.
Right, multiple stocks that we need to keep an eye out for based on what we are hearing from the dealing room. Firstly, it's Britannia. First stock on the list is Britannia today. The stock has been under pressure because of the CEO change that we got to know a few days back. But what dealers are now indicating is that the selling is largely over on this count and concerns related to the CEO change is most likely overdone. So there could be a turnaround on in the share prices of Britannia. So keep an eye out for that counter. When it comes to South Indian Bank, a lot of buy flows on the large HNI desk from positional perspective from 2 months for the next 2 months is something. This position has been taken by a lot of HNI. So keep an eye out for South Indian Bank as well in trade. For GMR Airports, dealers are indicating that there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter, and delivery volumes could well be on the higher side. When it comes to Kotak Mahindra Bank, as I was mentioning earlier, the stock has underperformed the Nifty Bank Index by a big margin, and this is largely owing to the selling pressure that was there on this counter. But dealers are now indicating that the selling pressure is largely over when it comes to Kotak Mahindra Bank, and this counter could now outperform the Nifty Bank Index for the next few days. And lastly, when it comes to Asian Paints, there are buy flows on DI desk. Dealers are expecting some positive development to happen very soon when it comes to Asian Paints. Well, let's also welcome in Neeraj Diwan, our independent market expert. Sir, we were discussing about Kotak Mahindra Bank a bit earlier. Now, if you look at Kotak Mahindra Bank, the counter has underperformed the Nifty Bank Index by a big margin. Do you expect now that the stock has bottomed up, and what could be the key triggers now going forward for Kotak Mahindra Bank?
Yeah, good afternoon. See, basically, as far as private sector banks are concerned, Kotak Mahindra Bank and even ICICI Bank has really underperformed the Bank Nifty. So I'm more positive on ICICI Bank looking at the valuation. Kotak Mahindra Bank had done the catch-up because earlier Kotak Mahindra Bank had been lagging behind, but last about, if you see 3 to 6 months, they have done some catch-up. So at these valuations, I'll prefer ICICI Bank, and I think the triggers would be that capital demand for capital will increase. So I think the second half of the year is one where you get a lot of demand for capital. So credit growth should pick up. And initially when there's a pressure on the NIMs and interest rates come down, I think that pressure would also ease off now going ahead, and NIM should stabilize around these levels. So I would say that next couple of quarters can be good, and ICICI Bank is my top pick as far as the private sector banks are concerned.
So that's with regards to where some of these banking names are concerned, but the metals pack is seeing a mix of tailwinds and caution signals. From China's policy moves to domestic regulatory shifts and new sector-specific risks, Sharad joins us to break down what's the bull versus bear triggers for this particular sector. Sharad?
Well, Mahima, last 2 days, the Nifty Metal Index was in the green, and today it's one of the worst performers. It's down 2%. Be it the domestic cues or the global cues, there seems to be a positive news as well as negative news. First, of course, the bull case is Beijing is considering new property easing measures coming in. That, of course, would lift the global sentiment up as well. But interestingly, there is a dollar strengthening happening, and there's an inverse relation generally we see between metals and the dollar. Overall, the second bull case scenario is that the government is extending the quality norms exemption for steel and stainless steel grades till March 2026. This news flow came in today morning itself. But apart from that, Niti Aayog has asked to cut down on the non-tariff related measures as well. So we are seeing two different sides of the coin when it comes to the regulations domestically. Medium level technicals suggest still there is a strength coming and bullishness is still there. And also the second fire was reported in the Novelis plant as well. That's where the drag is coming by Hindalco. Also, HSBC came out yesterday with a report, and that was a pretty interesting report where they have stated that the valuation premium of Indian players is justified when it comes to the global peers, while on the other hand, Kotak Securities has a view that the steel flat and the long prices are down versus the Q2 average numbers. So there is a lot of push and pull when it comes to the metal pack. But interestingly, Kunal, in this metal space itself, if you had to look for any good company where the risk-reward ratio is good, what would that be?
I think firstly on the metal index, we have seen a good rally on the metal indices in the recent times, where we got a breakout into the indices from the mark of 9,500, 9,600 zone. And I'm expecting on the lower end that the indices might test the support of 9,800, 9,900 on the downside. So currently trading at 10,200. So maybe probably a 200, 300 point fall is left, and probably from those levels you will find a reversal coming in. From this space, one stock which looks attractive to me over here is National Aluminium. I think Nalco still looks attractive. Already the longer term structure is quite bullish, and this dip should be utilized as a buying opportunity. The support for the stock on the downside is placed at 240. You might get a dip towards that 245, 240 zone, and that would be a good buying opportunity. One can go long there. Keeping a stop loss of 227 on the downside, and again looking for targets of at least 265 to 270 on the upside.
Okay. All right. Now, rupee is, at its all-time low at 89.34 per US dollar, down around 0.7% today as we speak. And this is on account of probably there is subdued risk appetite on fading expectations of a Federal Reserve cut and uncertainty, of course, with regards to where the India-US trade deal stands. To understand as to how, this pans out, we're joined by Anindya Banerjee, who's the SVP Currency and Commodities Research at Kotak Securities, joining us now. Mr. Banerjee, thank you so much for taking out the time. This rupee hitting all-time low, how are you looking at this? And this is on account of, the India-US trade deal, still in the works, or do you see some other triggers that are leading to this?
A very good afternoon, and thank you for having me. Yes, the India-US trade deal has been an overhang for some time, but today the trigger seems to be two. One is, of course, the risk-off environment which we are seeing across the world, especially in the AI and the crypto. That is spilling over into a broad risk-off. We are seeing a sell-off in the metals and commodities as well. And secondly, this 89 mark, the market, the dealers, the importers, they were seeing it as a sort of a barrier which the central bank might defend. So today, once it broke, that triggered a lot of stop loss buying. And that's the reason why we have seen a flare-up in the last 1 hour or so.
So, Mr. Banerjee, do you think this is, kind of structure, or do you think this is just a temporary outlook that we're looking at? Do you think that this could, probably lead, spill over to more inflation going forward? How are you viewing that?
Right. See, as far as inflation is concerned, the weak rupee is not an issue because we have enough cushion on the inflation.
Correct.
Now, the trigger could be the trade deal, the next positive trigger for the rupee, because if we compare the Indian rupee's performance with its peers, Indian rupee definitely looks undervalued. But that undervaluation would evaporate only when we get a positive trigger, and that positive trigger could come once the deal is signed. So till then, we could see the Indian rupee remain under pressure, but we expect the RBI to step in at higher levels, probably around 89.5 or close to 90, because that's a psychological number. And that can contain the downside.
And Anindya, Sharad here, what kind of arrest which RBI would kind of announce here? Will we see some repurchases happening in the bond market, or will we see some more kind of a quantitative easing measures coming in?
See, Sharad, the thing is, at this point, RBI will just simply come into the spot market or the forward market and intervene, which means sell dollars. That will itself create enough supplies to contain the upside in the USD INR, because right now a lot of these stops got hit, both in the domestic market and offshore. So once these orders are filled, we would see that the market coming down, the USD INR, possibly around the 89 mark. But for it to fall below 89, it needs the push from the RBI.
Much, Anindya, for giving your views on the Indian rupee. Indian rupee has hit its record low levels, and of course the risk of sentiment is impacting, and also stop loss is getting triggered as per some currency traders as well. Neeraj, I wanted to get your view on this as well. Indian rupee is at the record low levels, and everybody is expecting that there should be a near completion coming in for the US-India trade deal. How are you viewing this, and what it means for the markets?
I think, first, of course, our technology sector, for them, I think this is definitely a welcome move in the rupee. And I don't think that we need to worry too much of the rupee at this point of time, because 90 kind of a target was anywhere which has been there for some time. So if you are below 90 or somewhere hovering around that range, I think it should be fine. And if the trade deal is announced, I think that should be something which should really matter. So what really matters is the next 1 week to 10 days, you should have this trade deal, because now it's been, every week we've been waiting for it, and now I think it's getting delayed, so that should happen soon.
Right. Reliance Industries is another counter that remains in focus today, and this is on the back of the announcement that the company made yesterday, where they're saying that they have stopped importing Russian crude into their SEZ refinery with effect from November 20th. Now, from 1st of December, they are saying that all products that will come out of the SEZ refinery will be obtained or will be produced by using non-Russian crude oil. Also, the company has said that the transition has been completed ahead of the schedule to ensure full compliance. Now, these product restrictions were supposed to come into force by January 21st, 2026, and before that, the company has been compliant. But what does this announcement actually mean? Now, Reliance Industries has two set of refineries in Jamnagar. One is an SEZ refinery, the other one is a DTA refinery. Now, SEZ refinery is largely export-oriented unit, and this will not process the Russian crude. But the DTA unit, which largely caters to the domestic market, will continue to use the Russian crude, is what this announcement is saying. Now, RIL, if you look at the combined capacity of both SEZ and the DTA unit, is close to 1.4 million barrels per day, which means that it processes 1.4 million barrels per day of crude on a daily basis. Now, and this capacity is largely evenly spread between SEZ and the DTA unit. And nearly 40% of its crude requirement is Russian crude. So most likely, the company will shift the 40% Russian crude that was currently being used in the SEZ unit to the domestic unit. So this clearly means that Reliance is not stopping the usage of Russian crude. They are just not using the Russian crude in the SEZ unit. They will continue to use the Russian crude for the domestic unit. Now, what would be the impact? Now, this is one of the best possible scenarios or best possible move that Reliance Industries could have done to mitigate the issue that we have seen globally when it comes to usage of Russian crude, because Russian crude discounts had already fallen off to around $1 to $1.50 per barrel, and if they export their products, then the margins that they will get in the export market will be much higher, and they will not only suffer, they will even out the losses that the company will see because of not using the Russian crude. So this is one of the best possible scenarios that Reliance Industries has got here. And refining margins, if you look at globally, Singapore gross refining margin, which is the Asian benchmark, yesterday was at $10 per barrel level, which is the highest level that we have seen in the last 2 years. So Reliance Industries will definitely benefit out of this move, where they are not using the Russian crude in their SEZ unit and will completely use it only in the DTA unit. Neeraj, you might have gone through this announcement that Reliance Industries has come out. Given the fact that Singapore gross refining margin is also on an uptrend, how are you looking at Reliance Industries at the current valuations?
See, there are three parts to it. Like, so retail has been doing well, and with the recent GST cuts, I think there also you see improvement. Telecom, they are talking about the IPO coming very soon, so that is anyways going to be something positive for Reliance. And third, as far as the oil and gas is concerned, I think we were concerned about the purchases that they were making and the profit that they were making by selling out that refined crude, the profits from the Russian oil. So I think there was an objection there that they're making extraordinary profits, and which is something I think the US was really objecting to. So if that is not happening now, I think that thing will also go out. That negative will also go out. So there's no immediate concern as far as that is concerned. And because the refining margins, GRM margins have been good, so I think even this segment should report decent earnings this quarter and next quarter. So I think overall, I am positive on Reliance looking at all these three factors.
All right, that's the view coming in from Neeraj. Let's take a quick break. On the other side, we give you the top buy today's, sell tomorrow picks. Stay tuned.
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel free trade agreement. He's also meeting Israel's finance minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am, is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
I believe that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now. Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, hey, yaar, India mein achhi bread nahi milti. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business.
Yes. So a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete or are you going to get acquired?
Startup like ours has its own DNA. For us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. And profit किधर है?
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also
Welcome back. You're watching India Market Close here at NDTV Profit. Well, the Nifty 50 down by about almost 0.5% as we speak, down by about 100 odd points and nearing at its day's low point. And as you know, Somit was suggesting, it's 6 times today, right, Somit?
Yes. This should be the 7th time.
Should be the 7th time where the Nifty has moved.
We have 26 minutes to make it the 8th time also.
Hopefully, and in the upward direction.
Yes.
But that's with regards to where the market stand. Even the bank Nifty probably trading at its day's low point. Let's try to pull that up because down by about 0.8 odd percent. Yes, almost at its day's low point, down by about 450 odd points. But Arvind Sharma, the head of India Autos and Transportation, believes that there will be an uptick in demand for the auto industry. Let's listen into what he had to say in our exclusive chat with Citi today.
Did you sense from the quarterly numbers, from the commentary that came in, that things are gonna look hunky-dory for Indian autos, two-wheelers, four-wheelers, tractors, etc., because of this GST cut? And will Q3 be a remarkably good quarter? I'm trying to understand. And will it set the stage for further quarters?
Sure.
So if you go back before the GST cuts, also the change in the tax slabs, generally better rate environment, and then the GST came in on 15th of August. So naturally, things were setting right. All stars were aligning for a good growth. Between 15th August and 21st September, we weren't buying because we things are getting cheaper. On 22nd September onwards, things really came up, and if you look at those 42-day period, we're up almost mid 20% across all sectors, across all subsectors, passenger vehicles, two-wheelers, trucks, etc. Since we're talking about the quarterly numbers, companies were still a bit cautious. That's why you see most of them talked about second half growth of mid to high single digit. None of them was extremely exuberant saying we're going to go up 10-12%. No. But what we've seen now that we are towards the end of almost end of November, things are holding on. The retail data does show a fairly steady number in both entry-level bikes, entry-level cars, as well as even some of the premium bikes and cars as well. So it seems to be across the spectrum that we are seeing good growth. Now, what remains to be seen is November the month when everything subsides, or do we go on further? Our sense is some of these changes are more structural. Thanks to GST, prices have been cut. When you look at the price cuts, actually companies have gone over and beyond what GST mandated. Beyond that 8.5-10%, we've seen companies cutting prices by 18-20% on specific models, right? So if that goes on for some time, and thankfully rural India is doing good, we see that in numbers, in tractor numbers, which is very visible. So we believe that there should be an uptick in broader demand across segments. Naturally, small cars or entry-level bikes which have been weak for so long. Last time small cars were doing good was probably 3-4 or 5 years back. So you have a base that helps them, right? But even accounting for that, on a broader passenger vehicles and two-wheeler space, we should see a decent growth in second half. Tractor is something which has surprised us literally every month. You see commentaries getting more positive almost on a monthly basis. So there also I think we should see a good second half.
Okay, Kunal, earlier when I was talking to Ruchit, one of his pick was M&M in today's trade. Do you also think charts are constructive enough for M&M, or would you suggest something else in the auto space?
I think definitely M&M continues to be the top pick here from the auto space. Looking for further upside, I think 4,000 is there on the cards as well. So it is a buy. On the technicals, the stock has been finding support at 3,600. So till the time that is not breached on the downside, the view remains positive. I'm expecting 4,000 to be achieved in the next couple of weeks.
Interesting. On an important story, sources tell that IndusInd Bank is in not discussions with the merchant banker to explore any kind of fundraise. Vishy joins in with us with more details. Vishy, what you are gathering, the stock is doing well in the trade, but what are your sources saying?
So, there were already news reports about a potential QIP raising about $1 billion for IndusInd Bank. The bank, of course, came out with a clarification to the exchanges saying that these news reports are factually incorrect and they're speculative. What our sources are telling us is that the bank has not engaged with any merchant banker for any potential fundraise as of now. In fact, one name that was being thrown around, Citi, as the banker for this fundraising exercise. What my sources are telling me is that IndusInd Bank has not actually engaged with Citi at all, especially in the last 2 or 3 months. What we are also learning is that currently the bank's capital adequacy ratio is quite healthy at 17%. In fact, if you were to look at where the book is, that is also looking pretty clean because all of the cleanup exercises happened before August when Rajiv Anand took over as the MD and CEO of the bank. Since then, now the bank does not need any further capital to actually go out and make any accelerated provisions. The only issue that remains is the ECL framework or the expected credit loss framework coming into play. At that point in time, the bank may need some more capital, but there is still a long time. In fact, the comment that my sources made was that what is the hurry? Why exactly do you need so much capital? So as things stand, IndusInd Bank is not engaging in any conversations for a potential fundraise. That is where it stands as far as IndusInd Bank is concerned.
Thank you very much, Vishy, for that update. And IndusInd Bank up almost 2% in the day's trade, despite the choppiness coming in the market. So, Kunal, what would be your views on this stock, and especially if you could give your medium-term view on a holding basis, because this chart seems on a daily basis the strength is still there.
I think, definitely. The stock has started to gain some momentum. The trend from the downside has reversed, and now we are seeing a heart of high bottom formation in the stock getting developed. 810, 820 is a very strong demand zone for the stock. So constructively bullish. The immediate hurdle for the stock is where the recent fall had started, and that is 887, 890 on the upside. So we are expecting a short-term move towards 870, 880 that could kick in for IndusInd Bank.
Okay, all right. So that's the view with regards to where IndusInd Bank is concerned. Neeraj, with regards to where the Nifty Realty is concerned, if you can try to pull up the constituents on the Nifty Realty as well. We've seen, a rough patch, overall in the past few months. We saw some recovery as well, but today it's down, all the sectors in the red. Oberoi Realty with down by about 3% as well. Any of these counters that you think it makes sense to make an entry right now where fundamentals are looking attractive to you?
Yeah, Nifty Realty has been disappointing because the last 2-3 months also we were expecting some pickup to happen, close to Diwali or around this season when normally demand picks up. But it looks like the demand is not picking up, especially for the luxury market, where a lot of them have assets, and I think there is definitely some slowdown which is visible. So that's what is reflecting in the realty index. But that said and done, I think as far as the interest rates are concerned, liquidity is concerned, there is a good possibility that demand should pick up sooner rather than later. And as far as my picks are concerned, I like stocks like DLF and Max Real Estate, which are in the NCR market. I think these two stocks would be my top picks as far as the real estate is concerned.
Okay. All right. So that's with regards to where the real estate pack is concerned. But shifting focus, sourdough bread is all the rage today. But it wasn't the case back in 2013 when Aditi Handa, the co-founder and head chef that started Baker's Dozen, bringing sourdough bread to Mumbai and gradually to rest of India. Aditi disrupted the way Indians consumed bread. She tells us this story in an exclusive chat with our managing editor Tamanna Inamdar on today's episode of The Disruptors. In the episode, Aditi gets candid about why competition from mass fact players who are entering the space doesn't scare her at all. Listening to that bit.
To a lot of people, say in the Western region and in Mumbai, this is a brand that everyone knows, started here, originated here.
Yes.
As selling sourdough when sourdough was not quite the rage it is right now.
But
you are now available pan-India in major cities?
Yes, we're present in about 33 to 38 cities pan-India.
Okay, so let's start with how this all began. Why sourdough? Why the Baker's Dozen?
I'm talking about the year 2012, where Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry, but we said, let's go out there and explore. And we met about close to, I think, 60 odd people from different industries, someone in pharma, someone running an old age home, someone running a restaurant. And we would ask them, can you narrate your story? And at the end of the story, please let us know a gap in your industry where two young people like us could see an opportunity to start business. In one of these discussions, and this was like a by the way comment, someone said, कि यार इंडिया में अच्छी bread नहीं मिलती. This was not supposed to be a business idea. I think we were eating some naan and saying कि यार ये naan अच्छा नहीं है. It was like a reaction like that. And we had a whiteboard in our office where we would write these business ideas. And we would say, yeah, this is very true because you travel the world and you eat this amazing breads. And in India, you're still eating unhygienic, dirty, square bread. Multigrain to tab tha bhi nahi. It was more like white and brown bread. And we thought this was really, really interesting. Now the question came, none of us knew how to bake. He came from an MBA background, I came from a psychology and HR background. Dur tak, hospitality, food, baking, cooking, nobody knew. But we've always believed that whichever industry we would have gone in, one of the founders had to have a strong technical backing in it, which meant one of us had to go and learn. And I was like, yes, I want to go and learn. I'm a let's say, a learner for life.
So you decided to become a baker because you wanted to start a baking business.
Yes. So a lot of people think it's the other way around. It's not.
So that's a bit of a risk, because cooking is sometimes it's not a skill everyone can pick up. Not everyone is good at it. A lot of people can go to culinary school. Not everyone's good at it. वो हाथ में जादू होना चाहिए.
It is only once I went to New York to the culinary school, and I think it was on my 3rd or 4th day when I was baking a loaf of a French sourdough, where अंदर दिल से एक आवाज़ निकली कि your purpose in life is to bake bread. When you're young, you're also a little bit foolish when you start a business. And that foolishness and naiveness is so important. Like, you must retain that. Because I fell in love with sourdough, and I believed that if I made a sourdough, all of Bombay will love it. There was no math out there telling me that that is true. But I just believed, and I used to tell Sneh कि यार Sneh मैं बनाऊंगी ना, पूरा बॉम्बे खाएगा, तू चिंता मत कर.
पाव छोड़कर मुंबई sourdough खाएगा.
But that happened. And when it didn't happen easily, but it happened because when we opened our first store in March 2013 in Prabha Devi, we were the only ones in Bombay making sourdough.
Now, here's the tricky bit. When, because you've been around now for some time, about 11, 12 years, and you've had a head start in being health conscious, premium, XYZ. Now, all of your mass, very large FMCG players are entering this game with their forks and knives ready. They're acquiring companies left, right, and center because they've realized that this is where they need to be. Are you going to be able to compete, or are you going to get acquired?
So there are 2-3 things. There are different segments in India. The way we define it is there's a premium and there's a masstige and then there's mass. We are still playing between the premium and the masstige. We've not been able to go to mass because right now we feel we will not be able to do the same justice to the product quality if we go at a mass level. Second, I think when you have legacy players, they have their own DNA. And a startup like ours has its own DNA, and you can't always buy the other person's DNA. For us to say we are product first, we want high quality, for us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. So everybody has their own DNA, which is why this does not, it does not scare us or intimidate us.
Right, interesting conversation. Of course, for the full conversation, tune in at 6 and 9 p.m. only on NDTV Profit. But shifting focus now, race for IDBI Bank is set to intensify. Now, this happens as sources tells our channel that Kotak Mahindra Bank is likely to be the front runner. And let's get in my colleague Nisha to tell us more. Nisha, tell us, what are you gathering from your sources?
So, 2 independent sources with direct knowledge of the developments of IDBI stake sale deal have shared with NDTV Profit that Kotak Mahindra Bank is likely to be the front runner in buying out the large stake that is on offer on IDBI Bank from both LIC as well as the government. And here we are talking about 60% stake. Now, what we also gather that Oaktree as well as also Fairfax have been in the race. But sources have been telling me that with the price escalation of IDBI Bank now touching 100 rupees, where the market capitalization of IDBI Bank is now over 1 lakh crore rupees, it could be slightly more expensive for the players like Oaktree Capital as well as Fairfax, and therefore Kotak Mahindra Bank could be turning out to be the front runner in this large transaction. Now, also to remember that Kotak Mahindra Bank, if it buys out that particular stake, it could be by way of cash as well as equity merger. And that equity component and the benefit of equity currency could be one of the most important aspects because of which Kotak Mahindra Bank could be seeming like the front runner for this particular transaction. Now, we know that the government aims to finalize the buyer for this particular transaction by the end of FY26 and also is likely to open the bids, final bids in the month of December. So the government is really putting this particular transaction on the fast track. We did reach out to Kotak Mahindra Bank a few days back and wrote about this query of they being considered the front runner for IDBI Bank. We haven't received any comment coming in from Kotak Mahindra Bank on this particular aspect, but sources with direct knowledge have been sharing that it is likely to be the front runner for buying out government and LIC's 60% stake in IDBI Bank.
Neeraj, coming to you, quickly your view on Kotak Mahindra Bank coming out as a front runner to acquire IDBI Bank. The market is not taking this news positively. How are you looking at this acquisition fundamentally?
Yeah, I think Kotak Mahindra Bank may be the right fit as far as the private sector banks are concerned. I think, but initially challenges will be there. That's why I think Kotak Mahindra Bank has been under pressure, and that's why I also said that I'd prefer ICICI Bank to Kotak Mahindra Bank as far as private sector banks are concerned. I think let's let the news get confirmed first. But then there are definitely initial challenges which happen when you have this kind of a stake buy and integration with IDBI Bank. So I think that is what is playing in everyone's mind right now as far as Kotak Mahindra Bank is concerned.
Well, interesting about that, Neeraj. But one more interesting thing is there, and that is the Black Friday sale, which is there. And Anushi is joining us in our special profit intelligence segment. Anushi, when we talk about the Black Friday sale, is it like some stocks which are there at a discount? What are you gathering from this? What are the stocks you have picked up for us?
Well, the consumption trends are anyway in the frenzy, that's in the flavor. We've tried to decode in terms of what the analysts are also most bullish on, and hence what the investors could pick in terms of where these stocks are concerned. So this is considering that anywhere between 35 to 50% of upside is what the analysts are seeing for all of these counters. Right at the top, we have something like a edgy infra, which is in focus, wherein they're seeing about a 52% of an upside here. Even RAC Limited, if we see, that is also about a 50% of an uptick that we're looking at. For Orient, Suntec Realty and Restaurants Brand Asia, they're seeing returns of over 37 to 40% each as well. Coming to the other packs as well, that's Aptus and Moltec. This is in the small cap that we're seeing. 36% is the kind of upside that they're seeing for this particular counters. While if we also focus to some of these other sectors which are not doing well, but the analysts are bullish on, is something like a Dhanuka Agritech, 36% of an upside, along with something like a Z Enterprises, the 35% of an upside. But let's quickly see what the analysts are bullish on and what's the outlook ahead for these companies. Firstly, starting off with Edgy Infra, despite the revenue cut in terms of where the guidance was concerned and muted order book as well, FY26 guidance of 10,000 to 11,000 crore of orders has been maintained. Along with that, even the balance sheet, if we see, that is on the strongest side now, with a lot of these monetization proceeds from these 5 HAM assets coming into picture. REC, if you look at that, the earnings have mainly remained in line, and even the asset quality is on the stable side is what we are looking. Along with that, the other growth driver for this is also its loan growth guidance, which is at the range of 11 to 12%. Moving on to something like what we are seeing is also a Brigade Enterprises from the real estate sector, which has not done so far. If you take the year-to-date picture in context, they have a strong pipeline. Along with that, they also have a sizable land bank. So acceleration in pre-sales is what is expected going ahead. Coming to the other pieces, also something like what we are seeing ahead is Orient Electric. Now here they reported a stronger than expected H1. This is despite the headwinds which are there in terms of how the environment is concerned. And along with that, even the wiring business is expected to support margin tailwinds going forward. Now coming back to real estate, Suntec Realty is the stock in focus. Now this has seen one of those most beaten down stocks in the pack, seeing correction of over 35 to 40%, but they've continued to maintain that 35% of guidance. Even execution is on cards, which will lead to margin accretion as well, with those high margin projects in picture. Coming to Restaurants Brands Asia now, what analysts are mostly bullish on is gross margin expansion. This would be driven by operational efficiencies. Along with that, SSSG growth is a key growth driver. They reported about a 2.8%, and this was better than what was expected. Now, Aptus value, what they're seeing is a 25% plus of AUM growth, which seems quite on a positive side. While also what we are looking at, the another factor in consideration is them pivoting towards higher ticket size, which would also lead to better collections as well as growth forward as well. Coming to Moltec now, the focus of the company in the recent years has been to increase the contribution in margin in the pharma space, wherein they have higher margins. Along with that, now with more of these capacities coming up, utilization levels are expected to improve. Quickly walking through the last two which are there, Dhanuka Agritech, now new project launches is expected to drive it forward. While for Z Entertainment, while the ad revenue has been on the muted side, FMCG pickup is something that the company is bullish on. So these are all the 10 stocks that you should be watching out for.
Thank you very much, Anushi, for that, giving us the Black Friday stocks. Also, Kunal, what would be your picks, in this Black Friday sale, or just put it in perspective, the BTST trade?
Yeah, I'll go with the consumption space here. That is looking attractive to me again. So Tata Consumer is on the buy side. I think today we have seen a volume-based buying from the lower levels, and we can expect some more short covering moves going ahead on Monday's trading session. So Tata Consumer is a buy for me as a BTST trade, keeping a stop loss of 1170, looking for targets of 1195 to 1200 on the upside.
Kunal, you have something like an Aztec Life Sciences also, which is almost 87 times in terms of its volume, something like a Gem Aromatics as well. Any of these counters that you think makes sense right now to make an entry from a chart perspective?
I think again, not at the current levels, but Aztec Life Science has seen some good volume-based buying in the last 2 to 3 trading sessions. But already the stock is up from 650 to 850, so probably not at these levels. The support for the stock is placed at 750, 740 zone. If you get a dip towards that level, then probably it's a buy.
Right, and how's Asian Paints looking like on the charts?
Yeah, again, Asian Paints, what we discussed at the start of the show, firstly, the beneficiary of the fall in the crude oil prices as well. And we can expect this momentum to be very strong. The stock has already witnessed a sharp rally post the results. And again, there could be a decline, but that decline should be utilized as a buying opportunity, not at the current levels, because the risk to reward ratio is not favorable. So any dips towards the support of 2800, 2820 would be a good buying opportunity. One can expect the stock to go toward 2900 on the upside.
Kunal, one last quick one. Some counters that have seen good gains from its day's low point include counters like Karnataka Bank, 5 Star, there's Anupam Rasayan, there's Infibeam Avenues, DCM Shriram, as well as something like an Ethos. Any of these counters that you think where charts are attractive enough?
So I think one counter which one can look at is DCM Shriram. I think good volume-based buying, taking a support at a 200-day moving average, and we can expect this momentum to continue on the higher end. So I'm expecting levels of 1350 on the upside in the very short term. So that looks as a good buy. So dips again to be utilized as a buying opportunity for DCM Shriram.
Thank you, Kunal and Neeraj, for taking out your time and giving both your fundamental and technical views coming in. But today's market was very choppy, and Somit pointed out that range was there. That's where the entire index was moving, 26,065. Still, you could say that overall medium-term chart setup still looks good. Nifty Bank also, there's a bigger fall coming in, going below the 58,900 mark. Let's pull up the Nifty constituents, how they have actually played out in the day's trade, and largely we see now the reds are becoming more. Earlier it was the greens. Maruti, Interglobe Aviation, Max Healthcare seeing a good uptick coming in. M&M holding its gain in the day's trade, but on the negative, Reliance turned into the red, and also ICICI Bank, SBI, and even the metal counter that has taken a beating in the day's trade, including Bajaj Twins. Let's see how the sectors have actually performed, and we'll see the sectorally, most of them are ending in the red. Just Nifty FMCG and Nifty Consumption, these are the only two indices where we are seeing green coming in, but a sea of red all across the segment. Let's also pull out the advanced decline ratio, how things are actually panning out, and you see the divergence is more, and now the ratio is almost, you can say, 4:1 in the favors of bears. Nifty mid cap, Nifty small cap 250 index, let's pull them out. And we see largely they are ending at the day's low. Even last trading session, there wasn't much support coming in, especially for the small cap index. And see, that itself is also trading at the day's low. The support is not coming in the broader indices. Also, apart from this, the BSE contributors, let's pull them up. Much news flow coming in is nothing based on any announcement or a sectoral move. And we see that Supreme Petrochem and Infibeam, these are the stocks which are buzzing in trade. But Anupam Rasayan and DCM Shriram, it was earlier called in by our technical expert also, that stock is up almost 7% in trade. On the fall front, we see Gujarat Ambuja Exports, Tube Investments and Borosil Renewables tanking in the trade, but the names in the metal space, that's where the pressure is lying, and that's where we are seeing a substantial downtick coming in. So overall, the markets are still in a choppy mode, but we see the technical levels are on a medium-term basis still showing strength. But the global cues, what happens, that will be something which we'll be watching out for. But what we are looking for the markets for the next week is the forex reserves in India. That is something we'll be looking at. Rupee also hit its record low levels. That's something we'll be having a watch. Mangal Electric comes out with its share lock-in also on Monday. That will be our important cue to track. And VLS Finance, a small cap company, that company will be applying for its buyback, and financial results, Siemens Energy will be coming in. This is a demerged company from the Siemens pack, and Eris Life Science will be considering a fundraise as well. So these are the key triggers which we will be looking at, and the MSCI November inclusion, that is something which we pointed out earlier. Fortis Healthcare, Paytm, Siemens Energy and GE Vernova, these are the stocks where we will see inflows coming in. These are the inclusion stocks. Let's pick up the exclusion, that's where the outflows come in, and there are two stocks here, Tata Elxsi and Contra, which would be in focus where we will see significant outflows coming in. So these are the stocks. Yes, and overall we just see the all-time high levels. That is also very much important. Yesterday it was 50 to 60 points, but now the divergence is there. Now 200 point difference is there. The all-time high level still stands at 26,277. So we will be watching it closely, especially over the weekend, in case any positive news flow comes, especially on the US-India trade deal. Then we might see gap up opening, but global cues are still having uncertainty, and that's how we are going into the weekend. But overall, that's it for the India market close. Stay tuned to NDTV Profit. Up next is Market Buzzers.
I believed that if I made a sourdough, all of Bombay will love it.
पाव छोड़कर मुंबई sourdough खाएगा. Selling sourdough when sourdough was not quite the rage it is right now. Why sourdough? Why the baker's dozen?
Sneh, who's my husband and co-founder, and I got together saying, let's start a business. We were not really sure which industry. Someone said, hey, yaar, India mein achhi bread nahi milti. Now the question came, none of us knew how to bake.
So you decided to become a baker because you wanted to start a baking business.
Yes. So a lot of people think it's the other way around. It's not.
First decided कि हमें business करना है.
Yes.
And then went out to figure what is the business.
Yes.
How many ideas did you look at approximately?
The whiteboard at one point had anything between 180 to 210 ideas.
Very large FMCG players are entering this game with their forks and knives ready. Are you going to be able to compete, or are you going to get acquired?
Startup like ours has its own DNA. For us to be able to command a price point from a consumer because they trust us, this is something a lot of legacy players, even if you throw money at the problem, you can't solve it. One has to be profitable always.
Proper Gujarati entrepreneur. Profit किधर है?
NDTV Profit is in beautiful Israel. Currently we're in Tel Aviv. The Commerce Minister Piyush Goyal is also in town. India-Israel Free Trade Agreement. He's also meeting Israel's Finance Minister.
Our first quarter growth was 7.8%. Our second quarter numbers are expected soon, well above the world estimates.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities. Aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am, stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they
Hello and welcome. Good afternoon. This is Malika Mishra and you're watching Market Express. Let's get straight into the show. The first news is about how the benchmarks performed. Benchmarks ended a choppy week in the red. The Nifty pared gains from being just a whisker away from a record high to a tepid day that saw the Nifty fall back below the 26,100 odd level. Sensex also shed more than 400 points. Sectoral indices closed the week on a mixed note. Nifty IT emerged as a top sectoral gainer with persistent emphasis lending support to the index. On the flip side, metals were under pressure for the week with Hindustan Copper slumping over 6%. Nifty Realty was a top sectoral loser and fell for the fourth straight week, dragged by Oberoi Realty and DLF. The rupee slipped to a record low as global risk-off sentiment and heavy speculative positioning pressured the currency past the psychological 89 mark. The RBI is likely watching the 89.5 zone closely for intervention. A potential India-US trade deal could provide the next major trigger for stabilizing the currency. And a potential policy shift in Beijing is providing a key sentiment boost for global and Indian metal producers. Authorities are reportedly considering a new aggressive round of property easing measures aimed at stabilizing the country's slumping real estate sector. While these steps signal rising worries over the extent of the property slump, the market views them as a significant positive. The measures are expected to pair demand-side stimulus with efforts to address supply, including reducing non-performing debt and stabilizing balance sheets. For the commodities market, this translates to a positive outlook for the steel industry, specifically given its reliance on construction. The digital investment platform Groww just delivered a blockbuster Q2, proving it has mastered the shift from pure user acquisition to serious profitability. The bottom line accelerated dramatically faster than the top. Net profit surged 24.6% to 471 crore rupees, while revenue climbed 12.7% to cross 1,019 crore rupees. This efficiency pushed their critical EBITDA margin up nearly 6 points to a commanding 59.3%. On the operational front, the user base grew to 1.9 crore transacting clients. Crucially, those clients are trading big. Usage of the margin trading facility spiked to 1,668 crore rupees, confirming Groww is capturing higher value trading activity. Now, this is a clear signal of Groww of strong engagement and platform stickiness. TCS is making a massive strategic bet on AI-ready infrastructure, announcing plans to pump up to 18,000 crore rupees into new data hubs. The IT services giant has signed a pact with TPG Terabyte Bitco to invest this capital into a new entity called Hypervault. The goal is to establish a network of AI-ready data centers with a cumulative capacity of over 1 gigawatt. Under the terms of the deal, Hypervault will secure 8,820 crore rupees from TPG, forming a crucial financial backbone for the venture. The investment will see a split proportion of 51:49 between TCS and TPG. Brokerages stay positive on TCS as the company secures a major investment from TPG for its Hypervault AI data centers. Morgan Stanley, for instance, maintains overweight with a target price of 3,430 rupees. The brokerage firm says the $1 billion commitment reinforces long-term business prospects and expects more growth-linked announcements. MK also maintains AD with a target of 3,250 rupees for the stock. A major shift has been observed at Reliance Industries. The company has officially stopped importing Russian oil into its special economic zone refinery. The company announced that the transition to obtaining all exports from non-Russian oil sources has been completed ahead of the schedule. This move ensures the SEZ refinery achieves full compliance with incoming product import restrictions. This strategic change comes ahead of the deadline as the product import curbs are scheduled to officially come into force on January 21st, 2026. Novelis has been struck by a serious second fire incident at its crucial Oswego facility. The company confirmed that employees were safely evacuated, but the repeat incident is setting off alarm bells across the automotive sector. The Oswego plant is a key supplier of aluminum sheets to major clients like Ford Motor Company, whose shares fell by as much as 4% yesterday on supply chain concerns related to the initial incident. The financial damage is now becoming clearer. Novelis projects a significant impact, announcing that the sequential plant disruptions are expected to hit its full-year FY26 EBITDA by $100 to $150 million, underscoring the severity of these operational setbacks. Morgan Stanley is maintaining its equal weight rating on Mahindra and Mahindra Financial. The brokerage says the company could be on the cusp of a turnaround but remains cautious on execution. The brokerage highlights that a material improvement in return on assets, or ROA, is essential for a rating upgrade. They specifically identify credit costs as the key vector that will determine the ultimate profitability trajectory for the company. M&M Finance recently provided its medium-term loan growth and ROA targets. However, Morgan Stanley views these goals more as aspirations than concrete projections. The note reveals a significant disconnect, stating that their internal estimates for fiscal years 2026 through 2028 are significantly below the targets provided by the company's management. Morgan Stanley stays upbeat on Maruti though, reiterating an overweight call. The brokerage says demand after the festive season is holding steady, giving the company a strong start to the quarter. It adds that operating leverage and better net pricing will support margins, especially with discounts already peaking in Q2. Export growth also remains healthy, keeping Maruti on a firm footing for the coming months. Morgan Stanley stays overweight on Hyundai and expects growth to be supported by the strong early response to the new venue. The brokerage, however, notes that the ramp-up of Hyundai's new plant could push up staff costs, overheads, and depreciation in the near term. Even so, it believes the company's product cycle and demand momentum keep the outlook constructive. Jammu and Kashmir Bank is in focus this morning. The bank's board meets on the 26th of November to consider a fresh round of capital raising. This comes at a time when lenders across the sector are looking to strengthen their balance sheets ahead of year-end. And Alkem Labs is rolling out a new probiotic called DSS in India aimed at improving gut health. The company is stepping up its presence in the fast-growing digestive care space. India's prescription probiotic market is now worth a little over 2,000 crore rupees, and Alkem is looking to tap into that demand with this launch. Alcohol industry bodies in Telangana are stepping up pressure on the state government, urging it to clear close to 3,000 crore rupees in unpaid dues. These are payments pending for several months, and companies say the delay is now straining their cash flows. They warn that if the government does not release funds soon, the supply of liquor across the state could face serious disruption, and this comes just as the festive and wedding season is gathering pace. The industry is also asking the state to shorten the payment cycle and ease advanced excise norms to keep operations running smoothly. Capillary Technologies makes a muted stock market debut, listing about 3% below its IPO price. The SaaS company opens at 560 rupees on the BSE and 572 rupees on the NSE, even though its IPO is heavily subscribed. So far, investor sentiment remains cautious despite the business turning profitable recently. IndusInd Bank said news reports iterating a fundraising exercise by the lender are speculative and factually inaccurate. In a clarification to the exchanges, the lender said that it will categorically deny having any such discussions as reported in aforesaid media reports. Sources have also confirmed that the bank is well capitalized for any needs and has not engaged in any merchant banker to explore fundraising. Neither are there any ongoing conversations for any capital raise. Next up, As pre-budget consultations continue, Finance Minister Nirmala Sitharaman chaired the 10th pre-budget consultation with industry leaders and experts representing the energy and infrastructure sectors. The meeting was attended by many industry experts, including Pankaj Agarwal, the Secretary of Ministry of Power, Vijay Kumar, the Secretary of Ministry of Ports and Shipping and Waterways. V. Anantha Nageswaran was present as well. He's the Chief Economic Advisor, and many more leaders also attended that meeting. On to some tech news. Foxconn, the world's largest contract electronics maker, said they will invest $2 billion to $3 billion a year in AI. Chairman Yang Liu also said he expects a shakeout in China's crowded electric vehicle market soon, that the company is talking with the Japanese government about potential investments in artificial intelligence and EVs. Indigo is investing $820 million into its own subsidiary to buy more aircraft. The funds come as a mix of equity and special redeemable shares, helping the airline own more of its planes rather than lease them. With a fleet of over 400 aircraft already, this move could give Indigo greater control and reduce long-term costs. And India will need massive infrastructure investment over the next 2 decades, said SEBI Chairman Tuhin Kanta Pandey, warning that without sustained capital infusion, the country's growth cannot be maintained. Speaking at the National Conclave on REITs and InvITs, Pandey noted that public finance, PPP models and bank credit have laid the foundation so far, but the next phase of infrastructure expansion must be driven by market-linked avenues such as REITs and InvITs. Pandey said SEBI's focus is to strengthen the bridge between infrastructure and capital markets. India currently has 24 InvITs and 5 REITs listed, and these instruments offer real cash returns to unit holders. The air pollution in Delhi is only increasing by the day, and there is no respite in sight. After a failed cloud seeding experiment to bring artificial rain in the city, which cost the government crores of rupees, the situation has become dire. The air quality index in Delhi at 7 a.m. today was an alarming 455, according to air quality tracker AQI.in. Now, this is equivalent to smoking nearly 11 cigarettes a day, viewers. And PM Modi leaves for Johannesburg this morning to attend the G20 summit in South Africa. PM to speak at all 3 sessions of the summit. India's perspective on global agenda is to be shared. Reports suggest the Enforcement Directorate conducted searches in a coordinated money laundering case action against the coal mafia in Jharkhand and West Bengal. More than 40 premises in the 2 states are being covered as part of the action under the provisions of the Prevention of Money Laundering Act. In Jharkhand, the agency is covering about 18 locations as part of the investigation related to coal theft and smuggling. And an important update on the Delhi blast case, investigative agencies are scrutinizing more than 200 doctors and staff members at Al Falah University after the car bomb blast near Delhi's Red Fort on November 10th. Agencies are conducting frequent checks, questioning over 1,000 people and investigating those who left the campus.